We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it. He finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. Headed to the top. If we're not already at the top, we're going to the top.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go. crypto, guys. Get right. Let's go.
Welcome to the nest. See you on the show.
From the Tokenized
go.
Capital Summit, ladies and gentlemen, it is May 4th. There is a Star Wars joke in there to be made, but I don't think we're gonna make one today because it's not the industry of Star Wars anymore. It is the industry of suits. I don't know how we got here, but somehow we did, Rob. Nice suit, man.
One day, the industry of Star Wars will return again, but for now, we're in suits and we're live from Gamma Prime Tokenized Capital Summit in Miami Beach.
Yeah, man.
And man, does it feel good to be here. You know, typically it's warm in Miami, but you know what? You're inside and the AC's going, so it's a little cooler in Miami, so I got the jacket on. How you feeling?
Good,
It's been
man.
a few days since
Just got
Andy's
back
been
from
on the
El
show.
Salvador.
El Salvador, how was it?
Did surfing a lot. Went to Bitcoin Beach. Went to the Bitcoin Farmers Market. There is an absolute massive community of Bitcoiners down there building out like a whole new kind of like nation state in El Salvador. 5 years ago, it was the most dangerous country in the world by homicide rate. Today, it is literally the safest Latin American country I've ever been to. Probably been to about 15 countries in South America and Central America, and it was insanely safe and very, very beautiful. Guys, we've got Michael Van Poppe, a friend of mine from X, part of the altcoin Sherpa era, 2017, the TA gods. These guys were moving markets back in 2017. Not sure what they're moving anymore, perhaps just praying for a bull market. We're going to talk with Michael. Let's get him on. Michael, welcome to the show.
Thank you very
Thanks
much,
for being
man.
here, man.
Thank you, man.
Pleasure to have you here, Michael.
Thank you.
Thanks for coming by. How are you finding Miami?
Pretty good, actually. It's a little bit hot, but we flew in from Amsterdam on Saturday. It's okay. I like it.
Beautiful.
I like it.
Yeah, man.
Go ahead.
There was just a Money 2020 conference coming up in Amsterdam as well.
Yeah.
Yeah.
It's one of the biggest finance European conferences that are taking place. It's huge and very expensive, by the way.
And so what are you doing here in Miami? What is your purpose here in the Tokenized Capital Summit? What are you hoping to get out of this?
For this, primarily, we were looking for allocators for our funds.
Okay.
Other than that, the coming few days, I'll be doing your job. So I'll be doing podcast interviews and being on stage, but primarily podcast interviews.
Yeah, tell us more about your fund. I was unaware, actually. I saw that you had this kind of new X account, but how did this start? What is the fund? What's the kind of thesis?
Well, I always wanted to have a fund, but I never felt I was ready for it. And I think that within the Netherlands, the funds that exist are not really good. They either are building a basket of tokens and then praying for a bull market to happen, or they are market neutral. And I wanted to be in the middle there, and that's why we created a multi-strategy hybrid fund. It's a lot of words, but it's 3 strategies in one, in which we try to aim for a return in any market condition. We have a vol trading strategy in there. We have fundamental tokens that we buy as a basket, but depending on the structure of the market, we allocate more or less, and then we do a lot of OTC trading.
I'm most curious about the fundamentals of the market that you're talking about.
Yeah.
What are you targeting? I mean, we've had back and forth conversations about how Bitcoin has gotten institutionalized. Zcash feels like the new Bitcoin. There's obviously the entire DeFi complex.
Yeah.
When you're looking about fundamentals, what kind of fundamentals are most attractive from an allocator's perspective?
Well, use case is if they have a lot of activity on the chain itself. One of the prime tokens that we hold is NEAR, just simply because of the amount of revenue that it generates and the growth rate that it currently has. And then you can start model it for the coming years to come, and then you can start build a view of where you can say, well, the current price is heavily underpriced based on market circumstances, not on the token itself. But I need to be honest that 95%, actually 99% of the tokens have no purpose, have no value, and even if they have a value, stuff like Aave can still happen.
Yeah.
So Aave is one of the tokens that we hold, but then if something else happens within the ecosystem, you can still have a drawdown on the position itself. So it's not easy. That's why they are not having big allocations within the fund, and most of it is actually the vol trading. But these are the core principles of it, and that's why most of the tokens don't have an allocation with us.
Yeah. Man, I'm curious to understand how you're thinking about investing in this market compared to when you started, right? 2015, 2016, 2017, right? Like, how much has changed in the way that you approach the markets now, right? Like back then it was much less sophisticated in the sense that the average participant had less understanding of what was happening compared to now, whether it be unlocks, VCs, dumping, market makers, decentralized exchange cabal. There's so many different factors now, and then throw in kind of this institutional era. Like, what has materially changed? Like, how has your strategy changed as you navigate the current market versus back then?
Oh man, I want to go back in time. 2017 was so much fun, back in the day, it was just retail traders trading against retail traders. Everybody had the same information and knew what to trade on. And the current markets are just, as you explained, super complex with a lot of insider info. Like for instance, we have taken some OTC deals back in 2025, and those were so large that you can actually just see what the price was doing and when the unlocks were going to come, which were not publicly available. But they were trying to lure in some people into that position. And then the unlock happens and people start to sell, or the investors start to sell, and retail again gets hammered on it. So when it comes to investing in the markets right now, it's either you need to just stick to Bitcoin and ETH, or you need to dedicate your entire life and find the edge of some particular projects or strategies, and that is just getting harder and harder.
Yeah. This is the barbell approach that we've thought about for so long. We've also talked about this in reference to, consumer-facing applications like Polymarket, Colligan have found some product market fit, and then on the other side you have infrastructure. The infrastructure feels like it's just continuously getting commoditized. Do you see this the same way? Do you think we're going to get another L1 trade? Do you think we're going to get another piece of net new unlock when it comes to, remember how innovative like the Uniswap XYK model was? It feels like we haven't got something like that in so long. With AI, maybe it's becoming easier than ever, but then it also feels like it's never going to come again. It's been so long. Do you think we're going to get some unlock that's going to unlock new infrastructure? Or do you think consumer-facing applications is where a lot of the new founders should focus?
I hope we get one. I was actually thinking that DeFi would have been that unlock already. They are getting battle tested right now, and I ultimately believe that with the Clarity Act and the fact that stablecoins, the markets of stablecoins have been growing, but the Genius Act isn't yet applicable. It's later this year that it starts to be applied. So I assume that within stablecoins and DeFi, we will see that big unlock taking place, and the convergence between AI and crypto is going to be massive.
Yeah.
I think that the entire market is undervaluing how big that is, but it's not obvious. And I think really finding stuff like smart contracts through Ethereum or Solana as an unlock, or Hyperliquid is the most recent one, I feel like. They are obvious in hindsight. They are not obvious in the moment itself. So I think that some protocols that are building right now, maybe BitTensor, maybe Near, maybe some other ones there, that are actually building some really cool stuff. In 6 months' time, we will talk about it like, yeah, it was so obvious.
So your AI thesis here for the kind of crypto market is very much like BitTensor and Near as like the two leaders there.
Two categories. I think BitTensor and Near, but also decentralized compute is going to be massive.
Okay.
The reason is that you just need more compute for AI.
Right.
And everything is still centralized, and I think the topic will quite quickly switch towards decentralized compute.
You know what we haven't seen so far, despite all of the hoopla around data centers, you know how they say 40% of the data centers are not getting built out? They agree, they contribute all of this money, and then they don't get built out. They get struck down for regulatory reasons or political reasons. We haven't yet heard how decentralized compute can help that. If all of these data centers don't get built out, we still need the compute. It can be brought to the market via this decentralized distributed network. All of us can contribute the latent compute from our computers. It doesn't need to be there from data centers. Is this part of the thesis, or generally how do you see decentralized compute fitting into the more centralized compute market like data centers?
It's a tough one, because the first question is, do you actually need decentralized compute? And if you look at NVIDIA and all those bigger ones, I think you want to have control over the compute that you use, and you want to have efficient compute, and you want to have a market that is even stronger, which is fully decentralized, in order that if there is any attacks or whatsoever, that you still can continue to use the entire chain or entire ecosystem. So decentralized compute, I think there is a use case for it, but we still need to find the fit for that. A lot of protocols are working on it. LoadVM is a protocol that works on Arweave, Filecoin, Render, they are all working on this particular niche. Decentralized AI, verifiable AI, true tokens, all those things will be really big because now it's just the prime focus is to use AI, but everybody wants to have control over how they use AI. They want to have privacy when they use AI. So all these factors will become bigger.
Yeah. I'd imagine open source AI or decentralized AI runs on decentralized compute. You're probably familiar with Venice, the Eric Voorhees, privacy-enabled LLM. Well, it would make sense to me that something like a Venice would rely on something like a decentralized compute like an Akash, because in this sense you don't have a centralized bottleneck, right? All these other players have more verticalized stacks, but in the decentralized world, you don't want to be one of these on-chain protocols that has AWS, right? Or like a centralized front end. If you're building a decentralized stack, you want the entire thing to be decentralized from top to bottom.
Mm-hmm. Actually, that's a good point. Like all the attacks that have been taking place on Cloudflare, AWS, and all those things, that's the reason why we need decentralized compute or decentralized servers in order to continue and have a higher uptime versus to what it used to be.
Yeah.
But the complexity is, how are you going to build these decentralized servers and systems when they are so complex?
Yeah.
That's like the balance that we need to like figure out how that. You can't Akash is a great product, but if I look at Jensen and if what he's building or all those servers, a small team cannot build that.
They make it so easy.
But
it's just not worth it.
No, so that's what we need to figure out in order to get there. But the reason that we want to have decentralized on everything is, one, you want to have control yourself, and two, you want to have higher uptime.
Right. Yeah. And I think the pendulum feels like it's swinging back. It feels like, for the Hyperliquid era, it was like, okay, 4 validators, we're okay with that. Like, you can make a lot of money just with 4 validators. You don't need a lot of decentralization. Then you see these one-of-one DVN constructions, layer zeros, kelp DAOs, these sorts of things. We say, oh, we actually built these decentralized systems for a reason. We actually need decentralization. And so now it feels like the pendulum is swinging back, and we'll start to see decentralization more embedded into some of these conversations.
Yeah, I fully agree on that. I don't know about, Hyperliquid is a great example, but it's still a lot of questions on how things are executed there or what the future can be there. I do not see it as a decentralized exchange entirely, but it is a great product, and that's why it's getting so much attraction.
Yeah. Are you bullish on Zcash?
Actually, I am bullish on privacy, yes. I'm not sure about Zcash either.
You're not sure about Zcash?
At this point, I feel like, well, that ship has already gone. I'll just take the next one,
It's been on a tear as of the last couple
I
weeks.
know,
$400
I know.
right now or something,
But I'm
420?
I'm trading crypto, so if the thing is just flying off, I feel like there are so many other opportunities out there. But I can be wrong. It can go 10x, 20x. If all those big guys are still talking about Zcash, for sure it can. I'm happy to miss the boat.
Yeah. So this, I think this week, Michael Saylor's Stretch product is going to have its next set of dividends be unlocked, and then thus more capital is going to be able to enter this product, and then he's going to have more buying power for Bitcoin. I think he's up to like a couple billion now in terms of this product size. People are a bit worried about how big this product can get until it's, until there's not a material rise in the price of Bitcoin to kind of support the product. How do you think about what Michael Saylor's doing, and then how it impacts what Tom Lee's strategy might be with ETH and Bitmine? I think that we'll probably see him launch a similar product to Stretch as well for ETH. What do you think about these two guys kind of changing the way institutional market adoption of crypto is happening, specifically for these two big assets?
I think Jack Mallers said it correctly, or even someone else was it, that if people are willing to borrow money to Michael Saylor at a 11 or 12% rate, then you should be happy to take that money and invest it into Bitcoin, knowing that the growth rate is like 40%-ish. I'm not sure whether Michael Saylor's strategy is going to last when there's going to be a 5-6 year bear market. That's going to be tricky. But if he's not doing it, someone else will. So in that perspective, I'm like, yeah, why not, man? Just get that stupid Bitcoin price up, and then we can start seeing some more flows happening again. And I think that's what is super important here. If we get Bitcoin up, VCs start to deploy again, the entire sentiment starts to switch, and then we can start getting that innovation again. But other than that, we'll see in the future whether Michael Saylor is going to be right or not.
Yeah.
If Bitcoin goes to 1 million, and he's still going to be right, he's going to be one of the richest guys in this world.
Yeah.
Well, congrats for that, right?
Yeah. Do you think that this? So we had all of these kind of, for lack of a better term, suits come on the show last year, like Q2, to Q4, and they were basically like the 4-year cycle is over.
Yeah.
And obviously you've had this conversation before, but I'm just curious what your current read is, right? Like all of these institutional allocators are saying, like, guys, like, don't be bearish here. Like Bitcoin's gonna, overtake 85, 90K. We're gonna get back into kind of like this bullish market much faster than people expect. We're not gonna have to wait till Q4 for a bottom. Where do you think we are at right now? What are your levels that you're watching for the current environment on Bitcoin specifically? What are we waiting for here?
So if you go onto social media, everybody says October is going to be the bottom.
Right.
But if you go back to what these guys have been saying in 2024, I'm sure nobody was expecting Bitcoin to do an all-time high prior to the halving. So the markets are constantly surprising. And if you look at the structure of Bitcoin and what it has been doing, it never captures more of a downside volatility than the upside has been. So the upside has been 2 sigma, as it is called. The downside has been exactly the same. So there's no reason to go deeper than we have been going. And if you look at it from the semantics of Bitcoin versus gold, the reason that Bitcoin has been selling off when gold has been going up is because if you have a basket of gold and Bitcoin, and the gold vol goes up, your risk goes up for the entire portfolio, so you need to sell the other one. And gold volatility has now gone down, so that's why you start to see the ETF flows coming into Bitcoin again. Last Friday was like 600 million.
Yeah.
That continues to last and continues to build up as long as gold goes down and volatility goes down. So I think that we are in the accumulation phase. I think that 93K or like 90K is where we probably find a resistance, go back down again. Everybody will be saying it's a bear market or will continue to be. And then we start to swing back up after the Clarity Act. So I think the chances of a bottom being in is significantly large.
Yeah, the analytics that you shared, the deviation away is very, very compelling as we look at Bitcoin specifically. How much do you look at markets that are adjacent? Look at stocks, you mentioned gold, some of these things. S&P's pushing 7,200 now. Do you think it's helpful for Bitcoin? If stocks continue to charge upwards, it kind of adds to the wealth effect. Other people have said, hey, why am I going to go into crypto when I can continue to allocate into stocks and just continue to get these amazing returns? Do you think stocks need to come down in order for the reallocation or the pivot, if you will, the rotation into crypto to return?
No, I think gold needs to come down. So what the idea is that if the uncertainty in the world goes up, the first thing you sell is Bitcoin. It's the riskiest asset out there. That's why in February we saw it crashing down, and then the Nasdaq came after that 3 weeks later. If you use the inverse on that, which is when the markets go up or when the markets become less uncertain, when some peace in the Middle East starts to take place, the first thing they will buy will not be Bitcoin, but it will be the Nasdaq. Because of the fact that it's less riskier, you go into those assets first and then later Bitcoin.
Oh, okay.
So if you look at the statistics of any of those bounces, the Nasdaq goes first, and then Bitcoin follows with like 3 to 4 weeks after that.
Interesting.
And then altcoins are just way down the line. So it makes sense that the Nasdaq goes up and then Bitcoin follows through. And we need the Nasdaq to stay strong.
Yeah.
And then the money flows into
Yeah.
Bitcoin. There's a reason why at the beginning of the month the ETF flows are so positive for Bitcoin. It's because of this entire methodology. So I'm very positive, and I think that Ethereum is going to get killed for a little bit longer, but the money goes into Bitcoin, we stabilize higher, some verticals will start to do well, and then later in the year we start to see Ethereum do well.
Yeah, I mean, last thing on this note, on this kind of capital rotation, I think the other big headwind right now for the industry is the AI trade that's happening. There's like this bottleneck trade, semiconductors, storage, memory, and then also you have these massive 3 IPOs coming, SpaceX, Anthropic, OpenAI this year.
Yeah.
I'm kind of developing this idea that as these IPOs come into market and launch Q2, end of Q2, Q3, into Q4, there'll be a lot of that AI speculative capital that likely wants to rotate, take profits from those names and rotate somewhere else. I'm developing a thesis that they're probably going to rotate that, at least some of it, into Bitcoin. A lot of those early investors are also crypto investors. They have a history in this industry. How much do you think this AI trade is affecting the attention and capital rotating into crypto? Is it just purely a gold kind of commodities attention market, or is this AI kind of hype public markets launch affecting how investors are allocating to crypto now?
It's interesting because AI has gotten the entire hype right now, but smart investors will take their positions from AI and move it elsewhere. And the only asset class that still has a lot of upside to get there is crypto.
Yeah.
There's no asset class out there that can yield the upside as crypto can. And if you're a smart investor, you're in one of those rounds of the AI companies, it's gonna drop off from a cliff.
Yeah.
There's no sense of a listing at 2 trillion to be actually making sense. It's just the peak bull market mania that we're seeing on the indices or whatsoever. So I think that the money rotation will happen, and most of that money from AI is probably going to go in anything else from Bitcoin and Ethereum. Bitcoin is just a gold play, and if the gold market cap stays as it is, Bitcoin can go 5x from here and still not reach the same market cap in terms of percentage as it was in 2021.
Yeah, yeah. Michael, man, enjoy the rest of your week in
We will.
Miami.
We will.
Thank you for joining us.
Good
Hope
luck,
you have
guys.
a good content.
Pleasure, man.
Hope you raise
Thanks so much.
some
Thank you.
good capital for the fund. And
Thank you very much. Good luck, guys.
thanks, man.
Thanks.
Alrighty, guys, we will be right back with our next guest coming up here at the Tokenization Capital Summit in Miami. Give us just a sec, and we'll be right back.
We're using. And so for a lot of people, there's kind of been a bit of a re-rating experience. So, the IPO bag in the crypto land has been a pretty mixed bag. You've had a couple of winners, but, some quite painful re-ratings of terminal value, think of Gemini, etc. So I think there's just kind of that first piece. The M&A angle is, super interesting. There's going to be a lot more of it. The thing I'm actually way more interested in is we're one of the biggest investors in, one of the bigger investors in a company called Bending Spoons, which is the Web2 equivalent, where they basically go in and they go and buy very previously overhyped kind of Web2 companies, which are trading, you can pick up for fractions on the dollar, and they go and basically do an M&A roll-up of those and they strip it, take the technology that works, and then re-embed it. And I'm very excited to find a Web3 version of that in the next 3 to 5 years. I think a bit more of the cycle needs to come through, but there's particularly things, we're starting to see it slightly with things like tokenization transfer agents, these kind of transfer agency licenses which are hanging about in companies which don't necessarily match the sum of the parts valuation. So that's an interesting one to check out for.
I would agree with that. I mean, we have our portfolio company called Inversion that's doing precisely that, right? Like they're finding businesses in the real world that could benefit from stablecoin payments or from some of the benefits that we're now seeing on chain, and they're looking to acquire that, bring that in-house to then integrate the value. I think on the M&A and IPO front, it's just healthy, right? Like that's the mechanism that traditional capital markets use to be effective. And we went through a window perhaps pre-bridge acquisition from Stripe where there was no major exits in our ecosystem, and that was just a point in time in which there was just a lot of vibe investing and unclear in terms of what's actually exit value. So we have a few more data points now. I would argue still not nearly enough to sort of make sense of some of the stuff you'll see in pre-seed, seed, and Series A, but I think there's a lot more to come on that front, and that'll give us the information and ability to sort of think through what markets are valuing in this particular stage.
I'd say that it just ups the ante on, kind of founders and founding teams to get your regulatory strategy right if you need one. It takes a lot of time to get licenses or to get exemptions or no actions, whatever you need. And so to the extent that you're building something where that's going to be relevant, you have to figure that out quickly because you can't exit if you don't have that right. You're never going to get through diligence.
Yeah, just to kind of go back to my original thing, just because you can, should you, what I think is crypto went through its first round of regulation, but tokenization is going to come, and as you clarify some of the tokenizations regulation, you might not need to IPO. You might just develop deeper public markets, right? And that's something to be aware of in the future, is like that traditional frame set. That's what tokenization is disrupting. And it just needs a little bit more help to allow that to fully happen.
Awesome. Thank you guys so much for your thoughts. Please give a
Alrighty, guys, welcome back to the Rollup here. We are live at Tokenized Capital Summit with our friends from Gamma Prime. We're here with Todd, Ault, bringing the Ault blockchain live. Todd, welcome to Miami. It's good to see you. Welcome to the show, man.
Happy to be here.
Great to have you.
Absolutely. Well,
Got a big crowd, by the way. It's pretty packed.
Oh yeah, it is. Yeah. It is packed, and they got us right in the thick of things here.
Yeah, Web3's alive.
It really is.
Sure.
And so tell us about your approach to Web3 and maybe a little bit of background about yourself.
I spent 36 years on Wall Street, started at Dean Witter, went to Prudential, ran long-only accounts, ran a hedge fund, broker-dealers, etc. And about 2011, started mining Bitcoin, kind of messed everything up you could think of. I really feel like I'm the poster child for every mistake you could make in Web3. Or DeFi. I've just,
learned a lot.
Sold 5,000 Bitcoin at $5, done all the stupid shit you could ever do, I know this is a live program. Hopefully, can I use the word shit?
You absolutely can.
And so what happened was we're a public company on the New York Stock Exchange. We got a lot of assets. We were a holding company. We're in 4 countries. And now we're separating the company, and I'm taking the sort of Web3 TradFi component, and it really became clear to me, we were because I was a Bitcoin miner, still am. I have a big facility in Michigan, 30 megawatts, expandable to 340. I mine a lot of Bitcoin. I'm not huge, but I'm relatively good size. We were debanked so many times. I just cannot. When I say we were debanked 10 times, I'm not exaggerating. It probably was more than that.
Yeah.
So bad that my wife lost her Girl Scout cookie account because she was associated with me. Really bad debanking, and that set this stage for me to figure out what are the payment rails? How can I create a system? So if you look at, we're really dog fooding everything we do. So we're a trading firm. I've been running a hedge fund for a lot of years. And so what we did is we're building every tool we want in our own ecosystem and then making it available. So we built with bHarvest out of Korea, we built a layer 1 blockchain on Cosmos SDK. It's EVM compatible. And then we basically build everything for ourselves and then open it up for everyone to be part of it. So we launched mainnet on March 2nd, and we launch our DEX, our perp DEX, and other things starting over the next couple months, really dog-fooding everything.
Congratulations. Mainnet is no small feat.
Yeah, we run a real node-motivated, so we have 1 million nodes, and they really do real work. So it's really proof of work, and then obviously you can stake after that. So we took it very seriously. We wanted to be as close to Bitcoin as we could in terms of, because ironically, I'm a Bitcoin purist. That's really why I started in 2011. And we have a lot of Bitcoin. We have a treasury for our public company. Ironically, a lot of times the cash in the Bitcoin is larger than our public market cap. So it tells you kind of things are disconnected a little bit. Yeah. GPUS trades on the New York American, and it just can't really get much of a bid. I think it's too complicated. So we've agreed to separate it next year and have the 300 megawatt data center and the robotic business and the blockchain business from mining as one company, and then sort of our Ault Capital Group, which is one of the big node operators, that will separate into a public company with all of our other private equity. But we're really about global tokenization. So we're tokenizing silver, we're going to tokenize gold, we're going to tokenize platinum, and everything we do to tokenize, because we have an issue with real-world assets, they don't really trade. That's kind of the hard thing to do. So we don't tokenize anything that we don't want to trade ourselves. Mm-hmm. So we effectively also are the market maker. We have another division for that. And we're bringing, whether any real-world assets we bring, we want to own them, and we want to motivate people to own them too.
Yeah. When you're thinking about this kind of infrastructure build out from the kind of this large warehouse that you have and also your blockchain project Ault, how do you see them combining? Is there a convergence happening between this AI infrastructure build out and what Ault is doing on the blockchain side? How do you kind of think about this convergence between AI and blockchain more broadly?
Well, that's a great question. So we have a business called Ask ROI, which is a aggregator of all the large language models. We run the video servers in our data center right now. We run it for inference for ourselves and inference for other people. But ultimately, I think that data center, which has a robotic component to it, we just became the largest dealer in North America for robots because of AGI Bot. We have a deal with them now, so we're bringing robots to the United States for data testing. We're doing egocentric data testing. So I look at it this way. I think that everything effectively is AI, robotics, and blockchain. That's our core theme, which is those are all interacting. And so it's almost painful to put in your head like how explosive that is, because at the same time, we think that all the robots we have with AGI, we have a business called Omnipresent Robotics, which is part of hyperscale. That's part of the problem with hyperscale. Too much in one pot. You know, I thought it was going to be a hybrid private equity firm. The market doesn't buy that. Although we have raised a lot of money, about $700 million. I think the convergence of all those technologies, blockchain, AI, and robotics, is the key theme, right? So I think that if you look at Web3, you're going to have all these AI bots connecting and talking to each other. There's going to be payment rails that are really instantaneous, that are using the blockchain. We have our own project around something called Bitcoin Max, which is a Swiss-based trust with a Swiss-based trustee, with a Swiss bank. We got a no-action letter from FINMA, and we're issuing Bitcoin Max. So we're taking Bitcoin and putting into a trust, and then we're tokenizing Bitcoin Max to the Satoshi level. So 1 Bitcoin is 100 million Satoshis. That we think that's going to be a payment rail. We got it issued as a payment token. So we're really motivated around those themes: AI, blockchain, and robotics.
Yeah, we had Cathie Wood on like last week, and she was extremely bullish about this convergence between these three technologies.
Did she actually say the same thing?
Yeah.
Oh, wow, that's great.
A lot of how these robotics and technologies are starting to converge
I'm a big
and
fan of
accelerate.
hers, for sure. Because she's full risk on, so I love that part. You know, that's kind of my theme.
I can tell, man.
Yeah, I'm a risk on guy. I've been doing this for 37 years in TradFi, and to be candid with you, if it wasn't for Trump, I would have never really launched the blockchain, but because I tried to do it a few years ago and they debanked me. And the government's really paved the way now for innovation. They paved the Trump administration, whether you like them or not, is really paving the way for this technology to be adopted globally. I love what he's doing around that space.
Yeah, absolutely. And you know, we're seeing some more positive news around the Clarity Act just today. The yield issue seems to be resolved. Hopefully, it gets
through.
Resolved? The yield issue?
I think when you see the banks resisting that yield issue, you kind of know. You ever know, like, there was probably a time, you guys are too young for this, but there was something called the pager. There was a big push to like keep pagers around, right? Yeah. But you never use a pager now, right? So when you have a bank saying, "Hey, we don't want to let you make money on a stable coin," it's kind of proof that the innovation's here and there's not much you could do about it. I think what you're going to see is global adoption. You're going to see JP Morgan just basically dominate that space. And it reminds me a lot of the legalization of marijuana, which is the people who were selling marijuana before it was legalized didn't want it legalized. Because once you legalized and taxed it changed the whole dynamic, right? And then it got a little bit diluted. But I think this technology, unlike cannabis, this technology is so game-changing across all, validation, manufacturing. Hopefully, even though you see people like Elizabeth Warren talk about crypto being used for the wrong thing, well, no one's ever used the dollar for anything wrong. I mean, don't worry, that dollar bill has never done anything wrong. So I think that you're going to see a convergence of there's such a small adoption so far. Like we're in it, all three of us. So we think it's all that's happening. But when I speak around the world, and I do speak around the world, I ask everyone to raise their hand if they've ever owned Bitcoin. About only 20% say they own it. Now, they're at a convention, which is crazy because I think the global adoption rate is less than 3%, right? So there's 97% to go. And that's why clarity is so important.
Yeah. I just got back from El Salvador. I was there for the last week, and Bitcoin's legal tender there.
Yeah.
You can pay for it. Pay for anything with Bitcoin. They're mining Bitcoin with a volcano in El Salvador.
Yeah, it's so cool.
Their entire country has done a 180.
Did you feel safe there?
Yeah, it's insanely safe. I've traveled around Latin America to the most degenerate places possible, all the way to the most safe place possible, and this was like the safest.
Oh, cool.
It was insane, and there was there's just Bitcoin everywhere. It was a very, very.
I think I have to go. A lot of people told me that Paulo's down there.
Yeah, man.
Tether's down there.
There was a Tether Golf Invitational this past week.
There you go.
Yeah.
That's cool.
Yeah.
I really like that. I have to go.
Spot.
I have to go get down. I flew from Poland last night to be here.
Nice.
And I think that there's a wave of adoption coming that people can't stop. I think it's unstoppable.
Yeah. Are you directionally also very long on the kind of appreciation of these assets as it pertains to outperformance of other asset classes, right? Like just generally, how are you thinking about the actual market for adoption and market for the actual crypto assets themselves?
I think I see the crypto asset market like the Mag 7. Okay. There's going to be about 7 to 15 that are utility-like that, I was kind of motivated the other day to see Adam trying to think about merging with someone else, right? So I think the idea that cryptos can merge someday, or that the chains can get together and work out some solution for that. I think you're going to see that kind of thing over time, but it's too early. And if you remember the days, once again, you guys are young. There was a time where all that mattered was Yahoo.
Sure.
And then Google showed up.
Yeah.
And then Google showed up more. And then Google showed up more, and Yahoo became irrelevant, right? Now it's Yahoo Finance, but there's the divergence of that. I think you haven't had a Google moment yet where there's someone, like you see Tron kind of dominating with what's happening with Tether, but how long will that last? I don't know. I mean, people deploy there all the time. I don't think we're there yet in terms of where we've had like a Google moment where something is, I know Tom Lee is pushing the Ethereum concept, which is like, that'll be the dominant backbone, but I don't know if it's the dominant backbone long term. I think that there's more, if you think of like a network effect, think about how all the global telephone communications used to communicate together, and it was really high cost to do that. And once they obviously integrated and they used the web, they were able to figure out how to transact really efficiently and fast. And so network adoption is still small relative. It's tiny relative to the rails of payment.
Well, one last thing before we let you get to your panel, I'm just curious about the Ault blockchain in particular.
Sure.
What is one key advantage of using Ault beyond Ethereum or Solana or some of these other L1s?
I think we have an ecosystem for payment and motivation to get people to build on top of it. But mainly, I think the key advantage is that we're building tools and infrastructure that we want to use. And so if you're a developer and you develop with us, we're kind of side by side with you with whether that development will help us too. We don't need to capture for the Ault blockchain a large portion of the market. We just need to get a portion of the market, right? You got a big opportunity in tokenization, like trillions of dollars of tokenization. And speed's gonna matter, basically efficiency in terms of ease of use and being permissionless, but also super support of the ecosystem. So as a public company, we have 2 public companies that are part of our system, which we'll be announcing a new company shortly called DeFi Capital Markets. And DeFi Capital Markets will only focus on building the marketplace for DeFi across the entire ecosystem. So the advantage is we're connected with them, and we put a lot of our own capital into it. We're an unusual circumstance where we have products already before we built the blockchain. So we aren't build it and hope that this isn't a fill the dream moment, and we'll build a stadium, hope that everyone shows up. We're already there. Our parent company's going to do over 200 million in business this year, and we'll be putting in tokenizing products that we want. So the advantage there is that we're behind the projects ourselves.
Yeah,
right.
cool.
I mean, the technology's a leap. I would admit right now what B-Harvest has made is better and faster than anything else I've seen, but we know people leapfrog, right? We're very fast, under 200 milliseconds. We're doing epoch every second. We have a big global network of validators. So we luckily, the developers in Korea have been stellar. B-Harvest is just an amazing firm that works with us. And Mikai, James Kaplan, he's been amazing too in terms of building the AI around it. So we're going to very much push for AI, blockchain, and robotics to be together. But for us, our at Ault Capital Group, we're really pushing for tokenization of real-world assets in a way that they trade, right?
Yeah, very cool.
Todd, man, have a great day. Best of luck on your panel. Thanks for joining us, man.
Thanks, guys.
Thank you.
Thanks. Good to see you guys. Good to see you guys. Thanks.
Cheers, Todd. Alrighty, guys. That is Todd Ault on Bitcoin, AI infrastructure, robotics, the convergence of blockchain, robotics, and AI. Similar to how Cate talked about it. Up next, we've got Johann Kerbrat, the head of crypto at Robinhood. We're going to bring him up and keep things rolling at Tokenized Capital Summit.
Absolutely. I mean, you heard from, DeFi Capital Markets with Todd, Ault blockchain as well. And so this is, it really does feel like the convergence. That's what's happening right in front of us. It's very cool to see how these assets are getting tokenized and how players that have previously dealt in more, traditional assets and asset classes are now coming into crypto, and then more crypto native applications are coming in and adopting more of the high quality assets as well. So very excited to talk with our next guest.
No one better than Johann to talk about what's going on post earnings last week. Johann, welcome to the show, man.
Good to see you.
Thank you for being here, man.
Thanks for coming. Pleasure.
Yeah, man. Robinhood Crypto has gone from an experiment a couple years ago to a fully fledged market. Johann, what has it been like the last couple of years working at Robinhood and building out this entire arm of the business? It's absolutely blowing up.
Yeah, it's been very cool. We started in 2018, actually during the winter of crypto, and so back in the days, a lot of people were saying like, "Why do you even care about listing Bitcoin and Ethereum?" And so at the time, our thinking was really like, we want people to have access to all type of financial instrument that they care about, and crypto was one of them. Since then we listed more assets. We started to offer staking in most of the states. Transfer, we have our own self-custody wallet, and we also launched in Europe. So last year we did north of $1 billion in revenue just for the crypto part, and so we are really excited to keep building on it. And now the market is a bit calmer, but we are focusing on building the new feature that people will use the next time the market comes back.
Yeah, like you said, market is a bit calmer, but prediction markets have been absolutely insane. You guys, I have a stat here. Prediction markets surged 320% on Robinhood. Why do you think the market is so crazy about prediction markets?
Well, I think it's
gambling.
I think it's a new way for people to invest. So for a lot of people before, like they could not hedge against what are the Feds going to do about the rates, or what is the future of AI, or what is the best company to build a model. But with prediction market and event contracts, you really have different ways to actually hedge your portfolio. And I think that's something that is very new. So now if I want to invest compared to AI, instead of trying to pick one specific stock like Nvidia, AMD, or Microsoft, or whatever, I can actually pick one of the event contracts that is about AI and actually have a lot more ways to invest in the market. So we think it's a very different way that people didn't have access before, and it was more reserved to very specific institutions.
Yeah.
And so, we're really excited. It's one of his fastest growing business at Robinhood. And so, it shows also the power of our super app, where you have everything within one app. You don't have to transfer money between the different platforms, and you can go from buying stocks to buying crypto to buying event contracts.
Yeah. One follow-up question on prediction markets. Given the success of the prediction markets product, and like you said, the super app concept of Robinhood, do you intend on verticalizing more of the prediction market stack? Right now there's so much order flow going through Robinhood. I think maybe there's other exchanges that are, settling some of these contracts. Do you think Robinhood might internalize any of that market execution?
Yeah, so we think that the exchanges are almost a commodity at this point, and for any product that we launch, we usually route to multiple exchanges. So it's the same for crypto, it's the same for equities, where we route to multiple market makers. And so for prediction market, we already route to multiple exchanges. We have Kalshi, obviously, but we also have ForecastX. And we announced a joint venture with Sequoia, Rosera, which is going to be an exchange that is going to support the type of event contract that we care about. And for us, it's important because it will allow us to really support everything that we want to offer to our customers.
Yeah. When it comes to kind of integrating a lot of these under the hood products, right? Like as you said, kind of thinking about Robinhood as an aggregator of crypto protocols and products. One that comes to mind, obviously from a competitor, is the way that Coinbase has done Bitcoin-backed loans with Morpho, I believe. Yep. They've done this kind of setup where you can deposit your Bitcoin, borrow against it with stables. Mm-hmm. I believe you guys have also integrated or integrating Lighter for perps in the future, and kind of thinking about how that works. How do you think about building a crypto business with different product lines and utilizing the underlying tech, whether it be these on-chain markets for lending, prediction markets, perps? Like, is Robinhood Crypto just going to eventually be an aggregator of all of on-chain protocols, kind of serving order flow to on-chain protocols and using them directly? Like, how do you guys think about that transition and kind of being the front end for a lot of the on-chain products, which don't actually have the best UX?
Yeah, well, that's really something that we focused for a long time. That's why we launched Robinhood Wallet, which is our self-custody wallet option. And the idea was to give all these customers that are used to the Robinhood UX and UI, and giving them the ability to go on chain and go on DeFi. And to your point, like interacting with some of his protocol is kind of daunting the first time you're trying to do it, or you always have to bridge, you always have to think about gas. So all of these things, we are kind of taking it away and abstracting it so that people don't have to always keep thinking about this. But there is more we can do, to your point. Like I think, for example, the LiDAR investment, we haven't done any integration yet, but we are investing into the company. And we think that we can build on top of it. The other thing that we want to use is crypto as a way to kind of replace some of our back-end systems. So for example, we launched tokenized stocks in the EU, and where we are already with 2,000 stocks, US stocks and ETF that are like tokenized and available to our customers. And for us, it was really important to make sure that we could offer like everything that tokenized assets can offer to customers, from 24/7 to fractionalization to instant settlement. And so we can use the crypto rails for that, replace slowly like the old traditional system that we have, and slowly we will be able to kind of bring all these advantages to customers. And so in the EU, for example, the markets are not always open when people are awake because of the time zone difference, but with tokenized stocks, they can actually use it at any time.
Yeah. One of the biggest business lines for Robinhood is options. I think I saw a stat, it was up to about $4 billion a year in options, just from either being on the other side of the trade or facilitating the actual trade itself, providing that market. People in crypto often say perps are a far better and superior product to options. Do you agree with this? What's your take? If so many people are effectively trading zero-day options, why not just let them have perps? How do you think about perps as a product comparison to kind of these shorter-term options? And I'm just curious on how you may see perps evolving into Robinhood's product suite.
Yeah, so we already offer perps in the EU, for example. It's somewhere where there's a clear regulation to offer perps. So we've launched about 12 different contracts at this point with 10x in leverage. And so, yeah, we think it's an easier product for a lot of reasons. Like, for example, you don't have to manage the expiration dates constantly. You also don't have to worry about some specific funding mechanism. And with perps, you can always kind of settle on a constant basis, which we think is a very big differentiator. And that's why, in a lot of places it's working so well. The other reason is the type of products that are being created on perps. We see commodities right now going on some DEXs in Singapore that are going very well. And for the same reason, the world doesn't stop turning on the weekend, and so people want to be able to hedge themselves and invest on the weekend when something is happening in the Middle East or something like that. So we really think it's a great product, and we've been discussing with the CFTC, like many others, to see how we could bring it onshore in the US. But we need to have clear regulation on this one, and the chairman has mentioned multiple times that it's something that is top of their mind. So we are hopeful that we'll be able to support it, and when there are clear regulation, we'll be ready. Like, we already have the technology in the EU, so we know how we can bring it here in the US.
Yeah, and on the regulatory front, your CEO Vlad has been very much bullish on Twitter, like unleash the yield for the stablecoin yield, part of Clarity Act. We got a big push over, I think it was over the weekend last week, where basically we got a bit more clear regulation notes about the difference between rewards and interest, basically giving banks their win on the interest part, saying, look, idle stablecoins can't just earn interest. You need to put them into, from what I understand, and I'm curious how the product side will look, but you have to click a button that's deposit them into some yield interest kind of opportunity, right? Mm-hmm. Is that how it could look for something like Robinhood? Like, if I'm a user holding stablecoins on Robinhood, I want to earn interest based on kind of this notes from last week. Is it just going to be as simple as earn using Robinhood Gold or earn using Robinhood stablecoin interest versus just, if I have stablecoins, I'm going to earn? Is that how simple it is?
Yeah, we have to see the final text, because it's always, until it's passed as a law, I'm trying to be cautious, but it sounds like we should be able to find a good compromise. And I think for us, we were always clear, stablecoin rewards are not the same thing as FDIC insured bank account or saving account. So we were never in this world we were trying to change the perception of customer. But at the same time, and you mentioned Vlad's tweet, what we really think is that we don't want to penalize somebody who is using stablecoin because they want to move money quickly between wallets or between platforms. So we want to make sure that when they are holding the stablecoin, they're also able to get their rewards. So It sounds like with some of these actions, we will be able to pass some of the rewards, and so we're pretty happy about it. And we think that if we can unlock the entire Clarity bill, that will be also a great win for the customers, because it means that we will be able to build for the entire US instead of having like this fragmented system right now where we have different products and different rules based on states. And we think with Clarity we can actually start harmonizing all the products that we have everywhere.
Yeah.
I've got somewhat of a general question. There's so many things happening even beneath the surface. It feels like Clarity Act with stablecoins, prediction markets, perps, DeFi. Everything is just sort of looking around thinking what's going to break out next. What do you think? What do you have any bold predictions? What is your boldest prediction for the upcoming year of things that you think are going to break out on Robinhood or in the ecosystem in general?
We think tokenization is going to be one of these big breakouts. I think it's still very difficult for a lot of customers to access international stocks. It's very difficult for international customers to access US stocks. If you think about just the North Hemisphere, it's a bit easier, but if you start looking at different type of continent, it starts to be a lot more difficult, and you have a lot of taxes, you don't have a lot of ways to get yield, for example, in a way that is safe. So we saw it with stablecoin, for example, like the amount of countries that were trying to buy USDC or USDT because they wanted a safe access to the dollar. We think that we can actually bring that to more than just currency. We think that commodities, we think that equities, private stock, for example, all these assets are doomed to be tokenized at some point, and people will be able to really easily just acquire them and build on top of it, not just having them sitting on their portfolio, but actually lend against it, being able to borrow, maybe get a mortgage against it. And it's something that right now you can do as an American if you have a pretty big portfolio. But the normal, person that is trying to access private equity, for example, it's either impossible because they are not a credit investor or they don't have access to the flow. And we think with tokenization, we can actually harmonize everything and make, everyone being able to access it.
Yeah, one of the things that I'm excited about, like, for example, right now, the Korean stock market is going crazy. Right, and it's absolutely mooning. It's like people are very excited about it, but there's not really a way to trade that on chain right now. Same with like these. Finally, we've gotten like the pre-market IPOs for some of these AI companies, but there's also a ton of Chinese IPOs and pre-market AI Chinese companies that people want to get exposure to. DeepSeek's doing a funding round right now. I think at about a $20 billion valuation. How quickly can you guys move on this? Like, how quickly can the expansion of listed assets as the tokenization kind of mania continues? Can Robinhood be very fast to list tokenized assets across tons of different jurisdictions? How much kind of friction is there to actually get those listed on the front end?
It will depend. Depend of the asset, depend of the regulation that we have around it. But overall, we have a way to build technology that we've been piling on for the past 10 years. We have one of the strongest engineering team in the Valley, in my opinion, and so if at some point we're able to do something on the regulatory front, we're able to move very quickly. So we've seen it multiple times, for example, with AI adoption in our products. I think are one of the brokerage that added the most AI system within the company. So if you go, for example, on a coin detail page or on a stock detail page, we'll give you a digest of what's going on the market. And that was one of the top requested features. People wanted to understand, they receive a notification, the price of a stock or of a coin moved, why is that? And so we created this digest. And we also have the Cortex Assistant, where you can actually discuss a bit of strategy with the assistant and really find ways to improve. And so it just shows you that when Robinhood has an idea, we can move very quickly on it.
And on this tokenization front, this feels like it's caught everyone by storm, including the DTC who came out.
Big news.
And they announced that they have this development of this tokenization service. 50 plus firms are included in this this cohort. Robinhood is included. Can you just give us a sense of what this DTC tokenization service is going to mean for companies like Robinhood? It's slated to go live October 2026 is when it's going to go into production. How do you see this progressing? What does this mean for Robinhood?
Well, I think, for us, it's always really important to partner with firms like this. Like we want to make sure that if there is a tokenization effort, we actually support it. For a very long time, we've been very loud saying that, T+1 settlement is too slow and that we need to get to a place where we can go a lot faster, and we want to get to 24/7 trading as well. And so for us, we want to support any type of efforts like this, and that's why we are part of this one as well. But at the end of the day, I think tokenization is just like the next phase of the technology, where you'll have to either adapt or you will basically die, because nobody will want to go back to the old traditional system. And so it makes sense for all these companies to adapt to the technology and to start building on it.
Yeah. Johann, last thing for you. I know you have a panel to go to, which I'm sure is going to be great. People on Twitter like to compare Robinhood and Hyperliquid. They like to stir the pot by saying, by comparing revenue metrics, valuations, users, scale, and make an argument for both sides, right? And so I'm curious what your take is on Hyperliquid. Is this a competitor to Robinhood in the future for Robinhood crypto? Do you not really worry about what they're doing? People are like, should I buy Hood or Hype? People are like, Hype's a better deal. Why would I own Hood? There's all this back and forth, man. What is it like from your perspective to watch the rise of this kind of massive perp stacks come on chain and really try to be like a center of gravity for bringing a lot of off-chain and on-chain prices or price discovery on-chain? What does this mean?
Yeah, for us, it's two different type of businesses. You have one that has regulation and licenses, and you have one that is fully decentralized. And so you can't really compare apple to apple on this one, but what I really like about it is like the amount of people that are getting exposure to perps now and getting exposure to this type of new assets. And so it's something that we really care about. And on our side, we're also building it, but in a different way, where it's centralized, where, if something happens, you can actually go against Robinhood, or you can talk to a regulator about Robinhood. So it's a bit of a different world. But in any case, you can buy Hype actually on the Robinhood platform. Yeah. So we don't necessarily see
that I've done.
Each other like as competitors, like that don't talk to each other. We think they're a great team, and we wish them the best.
So you're bullish. You're bullish or no?
Not necessarily bullish or not, but you can acquire it on Robinhood.
He can't say he's bullish. He
Definitely
can't say he's bullish.
Johann, they're cutting us short. You got to go to a panel.
Yeah,
thank you so much for coming.
It was great to be here.
Let's have you on again soon.
Cheers, buddy. Alrighty, guys, that is Robinhood, General Manager of Crypto, the lead, Johann Kerbrat. I tried to get him there. Tried to get him to say he was bullish on Hype.
So you're bullish, huh?
He was not really able to say he was bullish on Hype, ladies and gentlemen.
I find it funny how he says, you can buy Hype on Robinhood, but can't you also buy Robinhood on Hype?
I think you probably can.
You probably could.
Yeah.
If you can't, you will
you
be
probably
able to
can.
soon. And
Ladies
so one
and
of them is
gentlemen.
dealing with the asset, the other one's dealing with the platform.
But if you look at the numbers, guys.
There's an argument to be made.
I'm on the chat. I see, dang, this guy Todd spot on. Crypto bros will not actually want crypto legalized because government will take over. Longing Monero. Not sure that was the conclusion that I came to. New type, but congrats to you, man. Kemi Holland, what's up, girl? How you doing? How you doing? We are live here in Miami, baby. Let's get it, man.
Feels good to have you
Fresh
back,
off
brother.
of El Salvador.
There you go.
This event's pretty good, man.
Yeah,
there's a lot of suits. There's a lot of high-quality people.
A lot of people. I mean, everyone we've talked to so far today, we've had Michael, we've had Todd, and now we've had Johann. Everyone's super solid. And I think tokenization feels like the word of the week.
I mean, yeah, it's the word of the entire month. It's the word of everything.
It's still early.
I mean, we had Cathy Wood on saying that Larry thinks tokenization flip, right? His bullishness is kind of what's driving a lot of the excitement and energy in this market. I mean, when Cathy's saying stuff like this, people do listen, right? People do listen.
Yeah. Cathy was an incredible episode. And
the video's ripping, guys. Thank you for
very
watching.
Excited. Thank you for watching, guys. Hit us up in the chat on YouTube, on Twitter. We're watching the chat. So you guys, if you guys have questions for our guests, keep them coming. We're going to be having a lot more for you guys today.
Yeah, why don't we get into some of the news? Han Ventures raises $1 billion round, Rob.
Oh yeah, Bitcoin cracks 80K.
Is Bitcoin flying right now?
Bitcoin is above 80K.
Wow, that's bullish, man. 80.2. Let's go ahead and get the news up, guys. We've got quite a few different things going on today. We've got some good kind of like alpha news. We got the DTCC news. Let's bring it up. Let's get into it before our next guest, guys. Thanks for rocking with. If you're watching on YouTube, guys, hit that like button. Appreciate you guys being here. Subscribe if you're not already subscribed. We're also watching the chat. Happy to kind of chat with you guys there as well. Say what's up. Let's get into the news.
I think this DTC announcement is one of the biggest things to come out because tokenization is such a big trend. This feels like one of the biggest things in tokenization. So it's big on big, as they say.
Yeah.
And
so what is it, right? So it's a no action letter.
It's a tokenization service and a no action letter.
Okay.
Right?
So 50
and 50 plus
firms.
teams. Should we shout out some of these guys?
Yeah, sure.
So obviously Alpaca, right? Anchorage Digital, BlackRock, Broadridge, Charles Schwab, Circle, Citadel, Citi, Digital Asset, that's Canton. Then you've got New York Stock Exchange, Morgan Stanley. You've got Robinhood, who we just spoke to.
Yep.
You've got guys like Say. That's kind of the only blockchain, pure blockchain I see. But you've got Ondo. Do I see Securitize on here?
I see Wells Fargo.
I see Wells Fargo. I see JP Morgan. I see
Invesco.
Jefferies. I see Invesco.
Ripple Prime.
Franklin Templeton.
Raymond James.
So a lot of
wow, everyone.
huge names that are on this. But again, what is it, right? That is the question. DTC's tokenization service will enable the tokenization of real-world DTC custodied assets. So for anyone who's unfamiliar, DTC right now custodies all of the the stock certificates, right? The pieces of paper or the digital certificates that basically say, hey, you own this stock. Now, a lot of people are somewhat upset with the represented tokenization market. They want native tokenization because they don't want all these SPVs. I think they failed to realize that right now, the DTC holds all of these stock certificates for brokerages. We don't have native ownership. And so if you buy something on Interactive Brokers or mortgage, one of these brokerage accounts, the brokerage owns the stock.
Right.
And they give you, your representation of the stock. But what we currently have is representative ownership. Native tokenization could change a lot of that. And right now, DTC holds a lot of those stock certificates for these brokerage companies. But again, what is this tokenization service? The DTC's tokenization service is designed to provide systemic scale where deep liquidity already lives. That's from the DTCC Managing Director. We continue to collaborate closely with the DTCC Industry Working Group. Those are all the companies that we mentioned earlier. To ensure that the service is developed in lockstep with the industry's current and future needs as we collectively build the digital ecosystem of the future. We also go on to say they received the no action letter from the SEC authorizing DTC to offer a defined tokenization service for these participants and their clients for 3 years. The no action letter is good for 3 years, and this service is set to go live in October of 2026.
That's amazing.
And so I think what this really shows is that they're aligning on best practices for a lot of these private partners that are already doing this live.
Yeah.
I think ultimately, we don't get a lot of detail in this announcement, but what this means is that we're going to see the Overton window for tokenization open wide, which means that all of the partners that are listed here are now going to be learning from each other. And it means I think it's quadrillions of dollars of settlement volume that the DTCC does every single year. People have been calling this a $1 trillion opportunity. It's really quadrillions of dollars of unlocked capital that can now be tokenized. I'll just close this point by saying the neo-finance thesis that we've been preaching on this show starts with tokenization. Tokenization is the catalyst. Think about what happens downstream of this. That's what I think everyone wants to understand. And that is that all of this tokenized capital flows into primitives and protocols that we've seen on-chain for years. It flows into DeFi, it flows into Lend Borrow, it flows into Vault, and it flows into perps. And then ultimately, an on-chain dollar stays on-chain. Maybe that's a controversial opinion, but I think if we have tokenized capital, it's more likely to stay on chain than leave the chain. And that's when I think it's more natural for this capital to flow into on-chain assets.
Yeah, and I think a part of this timeline is that there's we're going to bring a lot of these tokenized assets to all of these different chains. One underappreciated team is Alpaca, who is mentioned in this. Alpaca is the team that is basically connecting the DTC with the blockchain world via all of their licenses and partnerships with Ondo, Denari, Securitize, and other tokenization players. They're basically powering the ability to tokenize these assets, bring them on chain, and they're kind of an underknown beast in this tokenization world. And I think that they will probably be reappreciated and reignited. Their brand and kind of like the way that they're operating will probably come to the forefront a bit more. Ladies and gentlemen, we are live from the Tokenized Capital Summit. We're going to take a super quick break. Put the panel on. We had an amazing panel on right now. I believe the GM of Robinhood we just had on is on stage, and a couple others. We're going to go ahead and put that on and let you guys watch some of those panels as we get our next guest.
I just want to say, DTC in this announcement says they custody over $114 trillion. They do quadrillions of dollars of volume every year. This is the opportunity at our fingertips, guys. We are live from Miami, the Gamma Prime tokenization capital of the world right now, the Tokenized Capital Summit.
We're missing the tokenization tower, guys.
We've gone and left the tokenization tower. We're here from the Tokenized Capital Summit in Miami Beach, Florida.
Take me back to the tower, please.
Let's show you Johann, the GM of crypto at Robinhood, on stage right now at the Capital Summit.
You guys can enjoy some of these panels. See you guys in just a second.
At the London Clearing House, which is the largest CCP in the world, and part of the byproducts of what came out of the financial crisis in 2008. So I've spent the last 16 years in infrastructure. Most recently, and I just waited for the announcement to happen, but Swift will launch this year a technology platform on top of the Swift network as an option for banks to start doing the interbank market and to be able to do cross-border payments using their own deposit tokens. So kind of a great time to be out there, great opportunities. Love to be at conferences like this. In terms of my hot take, and I like that we're in Miami so we can use American sports analogies because it doesn't always work in other parts of the world. But for me, we're in the first inning, but stable coins are kind of already there at scale. And of course, a lot of that's in I don't have to tell our colleague here from Tether, is really in kind of retail and the crypto markets, but it's coming into the institutional space. I'm looking forward to this conversation. I have some ideas about what the unlock's going to be, not only for stable coins and with institutions, but also for securities processing and for foreign exchange as well.
Thank you very much. My name is Francesco. Thanks for having me. I'm the head of tokenization expansion at Tether. So we were the first company actually to tokenize something. We tokenized the US dollars, as probably many of you already know. So after that, we decided to do it again. And among the other products that we have, AI, wallet, etc., we decided to develop another product, which is Hadron, and is a technology platform as a service, and we use it to give the possibility to everyone to tokenize pretty much everything, securities in general. So not only for new stable coins, like just to name another one, we just launched a new token, a new stable coin for the US market, which is USAT, using our technology, so Hadron. And we use it to tokenize like shares, bonds, tokenized deposit. Just to answer to the questions, I think that so the main assets that are going to be tokenized in the next years are, of course, our stable coins and then fixed income, because it's the easiest and the more liquid asset. And another one is, in general, the yield-bearing tokens for like some reasons. One of them is the use cases that a yield-bearing token can be useful for. So if you tokenize something like that, you can use it as a collateral as well. So it's for traditional finance or DeFi, because in traditional finance, you can use it as a security collateral, so you can get some loans, and in DeFi as well. You can create a vault on, I don't know, some DeFi platforms to get USDT or another stable coin as a loan. So I really think that fixed income, yield-bearing tokens, and other stable coins are going to be the most liquid tokens in the next few years. Thank you.
Todd Ault. I spent 36 years on Wall Street, traditional TradFi, and in fact, I know a lot of people up here as bosses, or at least founders, etc. Our story is one of dog fooding. We've invested heavily in broker dealers, transfer agents, corresponding clearing firms. We literally did not want to have a field of dream moment where you build it and hope they come. Everything we do, we dog food. So we're tokenizing silver, gold, platinum, palladium. We have a reserve, a license reserve to hold it. Delivery in 2 days of gold, silver, platinum, palladium. We launched our own layer 1 blockchain. I always never want to say this perfectly, but I think we're the only one to sponsor as a public company a layer 1 blockchain. We are truly mining. I started mining Bitcoin in 2011. I made every mistake you could possibly think of in Bitcoin, like stupidly selling 5,000 Bitcoin at $5. I have a history of selling 3,000 Bitcoin in the last 4 years. Now we don't sell Bitcoin, so we're a treasury company on the New York Stock Exchange American. We also are bringing another company public, DeFi Capital Markets. And everything we tokenize, we believe that in order for them to trade, because everyone can say RWA, we're going to tokenize assets, but if they don't trade and no one knows about them, they're not relevant. So we dog food everything. There's not anything we tokenize that we don't want to trade ourselves. And so we're very motivated on that side. Our business will do about $202 million in revenue this year. That's what we're forecasting. And we want to work with everybody across the space. So we built an EVM layer, a blockchain, and we're pretty motivated about it. And love everyone that's up here. Everyone's doing something, what Tom's doing, and it's a very big disruptive convergence in TradFi that I don't think people realize, that 97% of the world owns nothing in crypto. And so you have a huge opportunity here.
Hi, I'm Johann. I lead the crypto business at Robinhood. I've been at the company for about 5 years. And so for us, the main focus on tokenization has been to really make it accessible to the 27 million customers that we have. We don't think that tokenized assets should just be tokenized funds that institutions are tokenizing themselves and just exchanging between themselves. We want to make it accessible to everyone in the world. We've already tokenized 2,000 US stocks and ETF, and it's accessible in the EU. And we also launched our chain called the Robinhood chain that is available on testnet for now, with more than 100 million transactions so far. So we're really excited to bring more and more of these assets on chain and to build on top of it.
I think a way to sort of size, like you're saying, how far along the tokenization is yet to go. Again, since we're in America, if we're in a baseball stadium and there's 20,000 people in the baseball stadium, the amount of tokenized assets is about like having about 3 rows of people. It's probably about and the entire rest of the stadium is the 97% that have no actual exposure in it yet. And yet we have this example of stablecoins, which have become its own animal. People don't think of them as dollars. They think of them as the better version of something that I'm going to get wired to you, right? It's not tokenized dollars, it's stable coins. It's its own animal, and it's better than dollars, It's tokenized value. So let's talk about sort of what are some of the next pieces that you think are needed for tokenized assets to become a more normal, a more liquid part of financial markets. So it can be anything that you think, some ideas, regulation, distribution, we've talked about this in our last panel, but settlement, liquidity, custody, common standards. Where do you guys see the friction point, the holdup, where if you kind of broke that through, the dam would start to flow?
Yeah, I'm happy to take a first crack at it. I'm sure there'll be lots of complementary things from this group. I'll focus on privacy as the key issue for us. So Grayscale, we are investors, and what we are trying to help investors do is figure out how to translate this tokenization vision into investment opportunities. And there's lots of different types of blockchain networks with different network architectures. And one of the challenges at the moment is mapping those different architectures to the tokenization roadmap. Our thesis is that privacy is non-negotiable for real-world capital markets. So you absolutely have to have transaction privacy. And for that reason, somewhat controversially, potentially, I get a lot of grief for this view, but my view is that over the short term, you are likely to see a lot of success by more institution-centric blockchain projects I think Canton would be one example of that. I think that they have an advantage that they look more like the financial system does today, which transactions are intermediated by institutions, and those institutions ensure user privacy. Open networks like Ethereum, Solana, others, they have a different model. They are transparent by default, and they require additional tooling in order to bring privacy. I think that we are going to get there. But my take would be that you do not have sufficient privacy infrastructure on the open blockchains to deliver institutional tokenization at scale on the open networks. And so we think over the short term, institution-centric models, Canton being one example, probably will see a fair amount of success. We should expect to see a lot of adoption of those chains. Over time, I believe that open networks have more upside for investors. They have a more transformative vision of how capital markets can change, but they need more privacy tooling. And so I think we're not quite there yet. So that would be my hot take. More privacy tooling needed to fully realize the tokenization vision on the open networks.
Look, if you tell a bank all your transactions are going to be available for everybody to see, it's a non-starter. They're just never going to use it, right? So the question is, are you willing to go halfway and meet them there? And there's things like ZK proofs. There's a lot of alternatives, but you do have to begin with that end in mind, and you have to be like, look, we're going to meet you halfway, right?
I think so. I mean, and I'm very optimistic about ZK proofs and lots of other related technology, but I think a fair take is that they're not fully ready for institutional onboarding as of today. It's going to take, 1, 2, 3
The problem
years.
is you have a whole generation that is on Venmo that can see what everyone's sending each other money to. So I'm 56 years old and I want privacy, but the younger generation isn't concerned about it as we are. I'm not suggesting that for institutional adoption that's not right, but you have an entire generation that's used to this phone and used to people knowing what's going on and sharing on social media. And you also have this other issue, which is globally you have distrust of government. And so the idea that other parts of the world that are very active in crypto are going to buy into the idea that who has access, and you're going to put an intermediary in the middle and say there has to be that privacy, whereas you have that now if they don't know your wallet address. So there is conflicting ideas. In the US, we say, hey, we want privacy, we want all these things that institutionalize and let the current system use it. But outside of the US, they don't want that. At least that's my experience. I don't know whether it's true or not. I'm not a good, obviously a judge of whether it's fully going to be adopted like that. But I think you have this moment in time where you're going to have, like you did when cars came out, 2,000-3,000 car companies. You're going to have all these different features and benefits. But for 18 years, they wouldn't even put a windshield wiper on the car. Right? You used to stop every hour, every mile and clean off your windshield. It's the same scenario here, which is there's all this convergent technology that's going to have to figure its way out. And I agree with them, privacy is going to be important. I want it. But a whole generation doesn't care as much about it as we do.
So there's a really important framing here. Okay, and I speak all over the world. I spend time with central bankers and regulators, DC, Europe and London and place else. $50 is not 50 million. $50 is not 500 million. If you're moving $50, you're moving value from one wallet to the next, for example, and you want it fast and cheap. In most cases, it's almost free, okay? When you're a corporate treasurer or you work inside of a bank, you want certainty. So if you say, hey, this might take 30 seconds longer, but if there's a problem, I know what's going to happen. If there's a problem, we know what the jurisdiction is, what the legal rights are. They want certainty. It's a completely different ballgame in the institutional market. There's two things that I see that are absolute unlocks for institutional finance. And I'm going to follow up with these guys on the stage as well. Okay, one is settlement. When you move settlement on a blockchain is technical settlement. That's not legal settlement finality as defined by the BIS, as defined by central banks around the world. It's just not. Settlement's a legal construct, it's not a technical construct. It needs both. That doesn't happen today. Every settlement utility around the world, whether it's securities, instant payments, FX, which I worked at, every single one of those is either run by a bank consortium or run by a central bank where all the banks in that country play along, like in places like Saudi Arabia. Every single one of them, without question, without exception. So now, the first thing you have to settle is, how do you do settlement if you're a bank on a public blockchain or in a private network? That hasn't been worked out yet. Most of the central banks around the world are looking They're not saying, can we do this? They're saying, how do we do this and keep the financial systems in the world stable? It's going to happen. It'll get worked out. I'm involved in a lot of those conversations. Here's the second thing, okay, is that blockchains take care of execution and ordering. What it doesn't take care of is, do you have the permission to do that? It'll take whatever transaction you want, and it'll write the block. And there's lots of things that are kind of being bolted onto that. Some of them might make some progress, they're not going to work. The unlock is to be able to have the governance, the compliance, everything about that token travel with the token, and have an attestation service that can be kind of used by everybody, but owned by nobody, to set the standard. So when you get that and you're going to put it in your wallet, go, hey, that really did come from Tether. Hey, I really can hold this in Brazil. Hey, when I want to settle this token from BlackRock, I'm going to get USDT in my wallet. You can't guess those things. The only thing that happens across boundary from Canton to, through layer 0 to Aave, the only thing that moves is value. So if you're on the other side and you receive, it's like, well, what is this thing? And all of a sudden your compliance people have to start doing work on that. That doesn't scale. Oh, and by the way, algorithms are going to start making decisions that humans do. And guess what? Every settlement system that we have, including SWIFT and the messaging, was built for humans. I send you a message, you credit that account. So SWIFT does 25 million messages a day for settlement, for cross-border payments. What happens when that's 25 billion? SWIFT to scale. It's not the speed, moving the message at the speed of light, but what happens to the exception processes? Because you're going to have different kinds of exceptions, and you're going to have millions, not hundreds. It's all going to change. We're not ready for algorithms either.
I think it's an important distinction you're making, which is that, in the blockchain world, we have this certain assumption that settlement means a certain thing, but there's also a legal construct as to what that means as well. And again, this is a question of coming halfway, right? Like the blockchain purists are going to be like, well, it is, settled. It's just, but then if you don't have that recognition that there is an existing system with certain rules, certain regulatory requirements, certain compliance requirements, if you don't have a mapping between those two, then you're just kind of folding your arms and being like, well, it's my way or the highway. And in that case, you're not going to get adoption, right? In order to do that, you really need to find that bridge and build that.
And I've seen that gap. I've been working inside the machine for the last 6 years. I work with the largest banks in the world. I see what that gap is, and that's what I'm going to build.
Very nice.
I really think that when you issue a token, when you do something in general, every single business or project that you want to do in your life, you have to make it useful for people. You can tokenize whatever you want, but if that thing is not useful, if people don't want it, it will never scale up, never. So why, for example, of course, I use our experience in this case, why USDT is this powerful today. We started we launched in 2014, and we did zero marketing out of for USDT. But why it is so big now? Because it's useful. Because if you go to LATAM, Africa, Southeast Asia, they don't have the access to the banks, to the banking system. But why? Because it's too expensive for them. But they wanted to have the exposure to US dollars because their currencies are killed by inflation every single year. So we gave them this possibility. And so this is why USDT is so huge nowadays. If you go to Bolivia, for example, you can buy a piece of bread, glasses, everything in USDT. But really, if you go there, you will find USDT as a price for everything, supermarket, in every single shop. We are too focused in other stuff, in other kind of tokens, because we don't live that life. We live in Europe, in the US. We have money, actually, right? We can afford. A bank. They cannot pay $5 or $10 for a bank account. So this is why USDT is this powerful. And this is what we want to do now. Because the technology is a commodity. You can build a tokenization platform in 1 week probably. But so that is not the point. The regulation is increasing super quick. So that is, in my opinion, is going to be okay in the next future, but super fast as well. The distribution is the pain point. So as we distributed USDT because it was useful, we need to distribute other kind of assets in the same way. And there are some players, some stakeholders in this environment, which are, for example, broker-dealer, traditional finance banks as well, exchanges, market makers, they are super important here. And once they understand that in the next future, the next finance, let's say, is going to be there, is going to be tokenized, is going to be on blockchain because it's cheaper, it's faster, and everything. So everything is going to change. But until that kind of players won't change their perspective, we will not have that much liquidity in the tokenized markets. Because, and I finish, when we issue a token today, like 90% of the tokenization projects are for private placements. So when we tokenize something, money market funds, a bond, a stock, real estate, pretty much everything, it's only private placements to traditional finance funds, banks, etc. If we want to change that, we need to change this ecosystem, and and these kind of stakeholders have to understand that the liquidity is there, and it's better for everyone.
I already spoke, so I'm going to defer to Robinhood.
I think, a lot of the things that have been discussed, we already have the technology for a lot of this. So privacy, for example, we can build it. We don't need to have a Canton network or something like that. We can use it within the smart contract, and a lot of people have already done that. If you look at PyUSD, for example, they implemented some of their privacy within the contract. And so I think for us, we're really more focused on why do people want tokenized assets? I think that's something that we forget sometimes. We are all talking about we need to tokenize money market fund, but why do we even care about this? And so that's where I think we need to focus a bit more of the time on. Right now, if you want to buy a tokenized asset, you need to create your own wallet. You need to find a way to fund it with fiat. You need to probably pay gas multiple times. You need to find multiple bridges. And then you can have your tokenized asset that doesn't bring you anything else than the actual underlying asset. And so for some countries in the world where it's very hard to get to a brokerage, it makes sense. For some of the other countries, like the US, for example, it doesn't really make any sense. It doesn't give you any advantage. And so that's what we need to focus on. So tokenized asset can bring you 24/7, can bring you instant settlement, can bring you access to more type of assets, from private equity to international to things that you could not have before. And I think that's really when we are able to offer that to the customer, that they will be actually excited to get in and to bridge the gap. But overall, I think, if we are just all focusing on which layer we should use for this or which bond to tokenize first, we're not going to go really far. And so I think for us, that's why we've been really concentrated on the customer and what are they missing right now before we are really tokenizing more assets.
Can I say that you got to pay attention to what Francisco's saying. We travel, my staff and I travel all over the world. I think we've been around the world 3 times the last 6 months. Most of the people out there, like in Africa and parts of Asia, are just motivated that they have a great cell phone, a new cell phone. Usually it's on the Google platform, and they can buy and sell Tether. They can not use their own currency, and the local adoption is they can pay someone else in Tether. So I can even hear the conversation, like Swift and Grayscale, Robinhood. These are all multi-billion-dollar companies, and yet if you look at the spectrum of the 8 billion people and you take about half them away, there's about 4 billion people. So 300 million people have access to global finance, which means there's billions that are just hoping that they can get Tether in their wallet and pay for something or do a microloan. So when we're trying to transform TradFi into DeFi or some form of DeFi, we're forgetting that what Tether's servicing are the people around the world that have no access. And that's where the opportunity is. We're all just going to switch around and say, oh, now our bond trades on a token.
Alrighty, we are back. Hope you guys enjoyed the panel here from the
what's going on out there in the world?
We're going to get into some news because there is plenty happening out there in the world.
Apparently.
Where are we going to start?
The ceasefire in UAE and Iran has been disrupted. We're not going to talk about that yet, guys. We got to watch this video. This GameStop are trying to acquire eBay for $125 a share, about 20% higher than the end of the market price on Friday. Obviously, the stock has jumped since. Let's watch this video, guys.
I think we could start with the idea that the market cap of GameStop is, call it, $11 billion. You have $9 billion on your balance sheet. Arguably, if you're providing effectively all of your stock, and then the cash that gets you to 20, you have this letter from TD, that's another 20. We're now at 40, but we're still off by, call it 16. And the 20, as far as I understand, while it's considered a highly confident letter, meaning TD saying they're highly confident that they would provide the financing, it's not locked financing.
Yeah, we'll see what happens.
You're short $16 billion in your 20s.
I hear you. I understand that. I'm just trying to understand where the rest of the money would come from.
Half cash, half stock.
I hear you. I'm just saying that math doesn't get you to the price that you're offering.
So,
Bryan, that's a pretty straightforward question. I don't get it. Like, where's the rest of the money coming from? Andrew laid it out pretty clearly.
I don't understand your question. We're offering half cash, half stock, and we have the ability to issue stock in order to get the deal done. But the full details of the offer are on our website.
So they would just issue more stock? So they would just airdrop tokens to eBay to and dilute themselves?
Gosh.
We know how that
GameStop
goes.
is $16 billion short of their offer. Their CEO, Ryan Cohen, goes on CNBC and says he doesn't understand the question of how they're going to come up with $16 billion. Then proceeds to say that they are going to issue more stock to cover this, and you can view the details on their website. Ladies and gentlemen, he is one of us. He is one of us. This guy has lost his mind. He's trying to acquire a company that is 4 times the value of his company just purely on market cap. He is trying to revive GameStop, bring back the GME meme energy, and compete with Amazon, with eBay. But he's short $16 billion and does not have an answer as to how he's going to get the money. Guys, this is the state of mergers and acquisitions in 2026 here.
Obviously, this is hilarious. I think it is fun to just walk through the mental gymnastics that it could, if you're the eBay CEO, right? We obviously know how this guy's thinking about this. Let's just go through how the eBay CEO might be thinking this. Okay, so I'm getting offered $10 billion more than the market cap of my company to be acquired. That sounds like a pretty good deal. Now, the guy, maybe he comes up with the money, maybe he doesn't. There was all kinds of negotiations when Warner Brothers was looking at acquiring, Netflix was going to get in, and Paramount and all of these things. They ended up structuring something where, hey, I'll accept your deal, but if it falls through, I still want like a fee for going through the process, right? And so if I'm the eBay CEO and I'm thinking to myself, well, where's my downside here? Maybe I go through and I look the optics of this. If I take the deal and then it follows through, those are pretty bad. But if I make $5 billion, $10 billion as like a walk away fee, if you have to walk away from the, if I accept this deal and
billions,
maybe it's $1 billion, maybe it's $2 billion.
Yeah, I just think this guy Ryan Cohen's kind of an attention monger, right? Just trying to, there's fear mongers, people who are doomers. This guy's an attention monger in a world of attention markets.
I agree with you, and I think if I'm the eBay CEO, I'm calling this guy on his bluff. Obviously, this guy is scrounging around for the money. I would say, hey, I accept your deal, but if you can't fulfill the deal, I want $1 billion as a walk away fee.
As a fee. Guys, let's get into the next thing. This was funny, wanted to talk about it, but more serious and more pressing. There's quite the situation going on in the Aave Kelpdown Layer 0 dynamic. Here we have Aave coming out and filing an emergency motion to vacate a restraining notice served on Arbitrum DAO. So basically what's happened is Arbitrum DAO froze that 30,000 ETH. There is a law group who is going after Arbitrum, trying to essentially say that because there are previous DPRK exploits that have happened, this 30K ETH cannot be used solely for this exploit, and actually what it needs to be basically taken and confiscated and either reallocated to previous DPRK exploits, or the actual members of the DAO have to get involved in this lawsuit. So Aave comes out and says a thief does not gain lawful ownership of stolen property simply by taking it, and the law is clear on this. These assets were recovered to be returned to users victimized on April 18th. Freezing them in this way harms people. Really, it harms Aave and their ability to get this market and protocol unfrozen. So guys, I mean, we are very, 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 very hopeful that Aave can get out of this situation.
I think it's also important to point out that the 12 people on the Security Council for Arbitrum, they get paid $5,000 a month. Like, they are not doing this for the money. They're doing this because they are security practitioners of the space, and now they're in charge of arbitrating who gets repaid from this exploit. It's incredible, incredible scene, which we're going to see how this shakes out. Ultimately, it looks like Aave and this law group might have to go to court with one another.
Yeah, I mean, this law group that is pushing these class action and these kind of confiscating the frozen ETH and Arbitrum, they have been known to do very, very, very stupid lawsuits against DAOs and crypto protocols. If you guys are following Vano on X, completely unhinged, like calling you an effing little biatch, but like extremely, extremely dialed on this situation. One of my favorite follows when it comes to this Kelpdown Layer 0 situation. Guys, we've got our friend Zach Pandl, the institutional analyst, who called this a crypto cold front, much lower than where we are today on Bitcoin, back in the tokenization tower. These chairs don't swivel, Zach. Welcome to the show, man. It's great to have you on. How was your panel in there? How are you?
I'm great. Great to see you guys here at Consensus. Excellent panel on tokenization. We had Tether and Swift and Robinhood. I think a great group to be talking about that subject.
Absolutely, and yourself. I mean, why don't we start there? Would love some takeaways from the panel. You mentioned who was on it, and then we'll kind of catch up to from where we left off on our conversation in the Empire State.
Yeah, absolutely. Look, I think one of the panel topics is something that's creating some controversy on the topic of tokenization, which is the role of privacy and how it can be delivered to users, whether that's going to require a more institution-centric approach. Things like the Canton network, I think, brings out a lot of passions, I find, or whether open public blockchains can adequately solve the need for user privacy. That's something we've been focused on, definitely something that came up on the panel, and there was some divisions. I think not everyone likes to think that we need some of these institution-centric models. As you guys know, we think that probably they will see some short-term success because they give institutions a modicum of control and they solve things like privacy and identity in a way that I think we have not fully solved just yet for open architecture blockchains.
I take it, and please correct me if I'm wrong here, you value the role of privacy as it pertains to these institutional tokenization protocols. However, maybe we're not implementing it quite like we should. I'm curious, please fill in the nuance here.
Yeah, look, I think the longer-term vision are open architecture blockchains, peer-to-peer, smart contract-based, global, decentralized finance. That's a vision I want to see. I think ultimately that's where the big upside is in token investing, in crypto investing. But to realize that vision, we need to have a fully articulated system for user privacy, identity, compliance, the types of things that are required for real-world finance. And we have parts of that today. Certainly there are privacy solutions for Ethereum, for Solana. I'm not sure they are fully there at scale to solve to bring trillions, hundreds of trillions of tokenized assets on chain just yet. I think it'll take a few more years to fully get there. And in the short run, things that look a little bit more like the financial system today, institutions running their own architecture and speaking with each other, I could see them having a fair amount of short-term success for that reason.
One of the big pieces of news that came out this morning, I think, or maybe over the weekend, is the DTC and their tokenization service. They're going to start testing it, I believe, in July, and then roll it out in October of this year. There was 50 plus names, companies that are in this working group and helping to align on the best practices for tokenization. Help us understand how the DTC plays a role in tokenization as they go from the current custody of over $100 trillion of stock certificates to more of a tokenization partner for a lot of these companies.
Yeah, I think the way to think about it is to go back to how a securities transaction works in the first place. You know, how it works is I call up my broker, the broker calls an exchange, the exchange calls a clearinghouse, the clearinghouse calls a custodian, the custodian calls a transfer agent, and when all those books and records are updated, you have a securities transaction between Alice and Bob, say. That's how the system works. And, you know, of course, it is pretty efficient. Our capital, especially U.S. capital markets, are pretty good. But the first step will be moving more of that activity onto blockchain-based infrastructure to get more settlement assurances, lower cost, more transparency, reducing the role of human involvement. So that's how I see the DTC efforts and some of the permission private blockchain projects is moving us towards that tokenization future. In the longer run, I think maybe we can disintermediate more and more of those steps with smart contracts. That's the longer term vision, but a first step is just moving what we're doing today onto blockchains to get a lot of efficiency. That's how I would read the DTC efforts.
And just one quick question here. You know, they're currently custodying $100 trillion in stock certificates. What happens to this $100 trillion?
Well, they still are doing the same. They just are, instead of a book entry record keeping, it's blockchain record keeping.
Okay, so they're still the custodian for all of these assets.
Same sort of thing. It's not that revolutionary of a change. I would say it's a step towards our tokenized future. You know, I think a crypto native audience sometimes thinks, you know, what is the point of that? We could go so much further with open blockchains and smart contract-based decentralized finance. And I think eventually we are going there. But this is how the steps that it's going to take to get us there. I think it's a good push towards that tokenized future.
Yeah. Zach, man, since you came on, we were talking about privacy. Zcash has just continued to outperform the rest of the market over the last 6 weeks or so. It has been the quickest horse off the lows. Could you just give us the reasoning why Zcash is Grayscale's privacy bet? What is it that makes Zcash so compelling to the investor who perhaps joined crypto in 2017 or 2021, kind of missed the early days of Bitcoin? People are calling this the ability to enter and to be an investor in Bitcoin in 2015, but in 2026. What is the Zcash thesis from Grayscale, from your work with their team, with Barry, and all the work that you guys are doing there? Why is this thing doing so well?
I think it's not difficult to understand it at some level. First, we know that there is demand for decentralized digital currencies. That's one of the use cases of blockchains. That's the Bitcoin use case. It's a multi-trillion-dollar market. Zcash is competing in that space. So we know there's a huge addressable market. Second, it's time for privacy on blockchain infrastructure. As blockchains are interacting with real-world finance, professional grown-up finance, I think the need for privacy is becoming completely obvious. And AI is pushing that even further. You know, AI technology has the potential of increasing surveillance on open networks like Bitcoin, and sort of increasing the need for real privacy solutions. And then the third piece is maybe Zcash specific. I think it is moving into a new era. Zcash is 10 years old, but it's made some changes. It's evolved in certain ways how privacy is implemented. New capital is entering the ecosystem, helping build out things like wallets, connectivity across chains through things like near intents. So all these pieces together, the huge addressable market, the, I think, pressing need for privacy in financial transactions because of AI, and Zcash are really being ready for the moment. You put all that together, and then you look at its market cap, and it's very, very small. When I look at all of the currency plays in crypto, just the currency assets, Bitcoin is 93% of that category, and Zcash is 0.3% of that category. So a lot going for it, a modest market cap. I have pretty high aspirations for what we can see from Zcash this year and beyond.
Yeah, so you're thinking like a top 15 token in the future, top 10?
I think it has very high potential upside if the vision is realized.
What are the, just out of curiosity, what are the currencies that you put into that currency group? There's Bitcoin, there's Zcash that comes to mind. People like to make an argument for Ethereum. I think you can kind of go one way or the other. There aren't, I mean, maybe you could put Dogecoin in there, but what that's got, you can make arguments about that all day. What else belongs in that category?
Well, I'm going to shamelessly plug our framework and then answer your question.
Please.
So we use a framework called Crypto Sectors that we developed with our friends at FTSE Russell. They're a traditional finance index provider. And we divide the crypto asset class up into 6 distinct sectors in the same sort of way that the equity market is divided up into industries like energy, consumer staples, etc. We divide the crypto asset class up into sectors like currencies, smart contract platforms, AI, etc. So in that currency bucket, you have Bitcoin. You have the Bitcoin forks, like Bitcoin Cash. You have XRP, which I would consider as a pure play currency, Zcash, Monero, a handful of other things. So we divide it based on use case, and we try to look at the blockchains that are basically just focused on the currency use case, less so smart contracts and beyond, which we put in another category. Bitcoin, the king of the category today. Zcash, probably the smaller cap token that in that group we are most excited about.
We don't talk about XRP very much on this show, but it's in this category. You've been around for a long time. You've seen the progression of how the sentiment around XRP has evolved over the years from the lawsuit and beyond. How seriously should we take XRP these days?
Well, look, to me, XRP Ledger, which is the blockchain that XRP sits on, this is a battle-tested project. As you say, it's been around for a long time through lots of different ups and downs in the crypto asset class. It's performed well as a blockchain ought to do, processing transactions without interruption, day in, day out for a long period of time. The company that supports it, Ripple, private company, developing lots of different types of business lines which may integrate XRP-L, the ledger, and the token over time. So that's how I would think about it. Battle-tested blockchain, clearly one of the largest, most liquid assets, and its future is really a question of where does adoption go today? Can Ripple integrate it into some of the other interesting businesses that it's building in a way that draws value to the token? That's the kind of open question for XRP.
Yeah. Zach, people are saying that we're going to tokenize ETFs. Is there any plans for Grayscale to tokenize its ETFs and allow the on-chain crowd to buy into Grayscale's products on-chain?
Well, let me say first, watch this space. Some part of me thinks it's almost a little funny to say. I mean, the ETFs are taking crypto and moving that into traditional finance, and tokenizing an ETF would be moving them back to crypto, which is a bit of a strange thing. But having given this a lot of thought, I think maybe there are some things that in that structure could be provided to an on-chain audience, without kind of saying exactly what we may or may not do. Things like indexes for multi-token products, or the custody solutions that are provided in a secure way that maybe you can't get with bridge infrastructure on-chain. So potentially there are some things that could make sense bringing that, but tokenization, tokenizing our products, on-chain asset management, these are all elements of the future of Grayscale. So watch this space, and we'll have more to say over time.
Yeah, we had Kathy Wood on last week, and she was talking about how Larry thinks conversion from being kind of like skeptical and bearish on crypto to being very, very bullish, one of the most vocal bulls of tokenization, was a massively important shift for her perspective on tokenization and kind of her thesis there. When it comes to some of like the larger players advocating for tokenization, last week we saw Securitize had big news in this market. I think they also just got a FINRA, regulatory guidance today, and then we had the DTC. Like, what is the signal from the larger players that you're seeing? I know there's a very clear bull case, but is there any more nuanced signal that you're deriving from the tokenization broad kind of for lack of a better term, hype cycle?
Well, I think mostly that people can see that it's a mega trend that is only at the very beginning. Like an American baseball analogy, maybe the first pitch has been thrown. $25 billion of tokenized assets is
something. It's a good start, but it is just a tiny peanut compared to the size of capital markets. And so I think all of these institutions, they need to think about growth. What are we going to do with this business over the longer run? And tokenization is a fairly obvious growth driver of capital markets for probably a couple of decades. And so that's why you see so much energy and focus. Let's get smart on it now. Let's think about how we can play in this market, what's going to be the right infrastructure to invest in, and let's get going. So that's sort of the place where the story is, I think, very, very early. Everyone can see the vision, increasingly see the vision, and understand that it's a many-year-long journey, and it's time to get acting now.
Yeah. When we were in the tokenization tower, the Empire State Building, we were talking about, I had asked you, what is the biggest blocker to the tokenization thesis? You had mentioned institutional wallets, institutional custody for these assets. Has that been solved? I mean, we only spoke a couple of months ago. Where are we on institutional custody?
Yeah, so let me clarify that a little bit. So I would say it's not so much the infrastructure. There is some infrastructure. If a large financial institution wanted to offer wallets to its clients, it could potentially do that. But we need to see that. The capital, the investor capital needs to move on-chain to buy the assets that we are tokenizing. So just like every other part of the financial system, it's about connecting saving and investment. People that are borrowing money and people that have money to lend. That's what the financial system does. So tokenization is only one half of the story, bringing those assets on-chain. We need to bring the capital on-chain as well. There is, increasingly sophisticated, high-quality infrastructure around custody and wallets, but it hasn't been adopted very widely. We go to all the wealth management platforms, Morgan Stanley, Wells Fargo. These are some of our great partners on the ETFs, and they're just not there yet. They're not at a place where their clients can hold assets directly on-chain. I think that we will get there, probably over the course of the next 18 months, the first couple. We'll get there, and it'll take another few years until the masses of capital move on-chain. So that's what I'm looking for, is not just the assets moving on-chain, but the investor capital moving on-chain. That's when you really have the flywheel going.
Yeah.
Got it.
Zach, I wanted to ask you again about kind of some of this similar conversation, ETFs, tokenized assets, DATs. There's a treasury company called Cypherpunk for Zcash. I know Grayscale is pretty involved in that. What is the latest with Cypherpunk, to your knowledge? What is that company doing aside from just accumulating Zcash, right? Because I think some of these companies are interesting to invest in specifically for assets like Zcash, considering that it's somewhat difficult to get access to, specifically on-chain, and some exchanges do have it. The big ones do, some don't. Cypherpunk is like an easier way to get exposure to Zcash for a lot of, typical investors. What is this company doing other than just accumulating Zcash? What is the kind of latest updates there?
Let me say a couple of things on this. So digital asset treasuries, they can be a fit for certain investors, and they issue lots of different types of securities, common equity, preferred shares, convertible bonds, and investors can look at all those things. Maybe those are a fit in some places. Our view would be that access to the token itself is typically what the investor is after, and there are usually more efficient ways, like the ETF, to get access to that product. So Grayscale has long offered a private fund, ticker ZCSH, that holds a Zcash token. That is already available today in brokerage accounts and retirement accounts, and fingers crossed, could be an ETF someday. That's the vision with all of our products, is to convert them into that efficient structure. But these types of structures, they hold the token. You can bring a token into a brokerage account or retirement account setting already. I'm not sure that you need the digital asset treasury structure to get that efficient token exposure. The other thing that I would say is on-chain access is important, particularly in the case of Zcash, where the fundamental rationale is about shielding and privacy. You want to have shielded assets. So the ETFs or related structures, they can give you investment exposure. But to get that full private experience, you want to move assets on-chain into shielded addresses. And my own view is actually it's gotten quite easy. I would recommend, and I have no financial stake, this is just I think the product is cool, I would recommend the Zodl wallet, ZODL. It has near intense infrastructure in the back end, so you can take assets from any other chain, USDC on Ethereum or USDC on Solana or the Solana token itself, anything like that, and move it pretty seamlessly into a shielded address on Zcash. So these would be the two angles that I would offer, is simple, efficient structures like our Zcash Trust product that holds the token, or things like the Zotl wallet, which make it relatively easy to onboard into a shielded address.
Yeah. So Zach, last time you came on as well, you mentioned that it's not a crypto winter, it's a cold front. Looking at the price of Bitcoin right now, 80,400, the highest price in quite a while. Ethereum 2367. Your take is seemingly looking strong that the 4-year cycle is over. Obviously, hindsight, it looks right now. We had a pretty big TA guy on earlier, Crypto Mike from the Netherlands, and he talked about how there's some levels that are coming here. Your take is that we're basically going to have a shorter crypto cold front this time than previous bear markets. What do you need to see to verify and validate that that is indeed correct and that the bottom is in? What's your current view of the macro kind of Bitcoin and the majors?
Look, there's a lot of inputs, of course, and I think that the technical analysis, I do listen to some of that commentary myself. I think navigating markets, you do need to look at the charts sometimes. But let me lean on fundamentals a little bit just to add some color to that. What I would like to see is, first, let's get the markup of clarity in the Senate Banking Committee. I think the dominoes have been falling there. We got Kevin Warsh confirmed as Fed chair. That clears the deck for the Senate Banking Committee to take up clarity. We saw some potential agreement on the yield issue. So moving forward in clarity, I think that will be one very important fundamental sign. And then the other fundamental issue is just the macro picture holding up okay. Stocks have had an incredible run lately, of course. If we can sustain the highs, I think crypto can continue to recover and maybe break some new highs, break above 80, 90,000. Those would be great levels to see broken. If equity markets were to wobble because the military conflict in Iran is not totally over and we have more challenges in energy markets, that could be a setback for lots of assets, including our asset class. So those are some of the fundamental things I'm looking at. I don't know that we can say we're totally out of the cold front. Of course, it's a balmy spring day in Miami, and I hope that it feels that way in crypto relatively soon. Things are looking good. I think these are generally good levels to enter. I'd like to see a couple more boxes checked before I can say crypto winter is totally behind us.
Yeah. Zach Pandl,
as always.
Institutional adoption.
Yeah, thank you so much for joining.
My pleasure, guys.
Yeah,
great to see you.
Week in Miami, all right?
We'll see you around.
Cheers, man. Pump it,
Thanks,
all right?
Zach.
Grayscale's coming to buy your bags, ladies and gentlemen. They are going to market to the boomers, to the RAs, to the advisors. Zach's your guy. Thank you, guys. Thank you.
Beautiful.
Come on.
Yeah.
Are you bullish or what?
What else do you need to hear?
I don't know, man.
There's nothing else.
I need this commodities rotation to hit this uranium bag.
Like Bitcoin's
nuclear
pumping and he's
fly.
stuck in uranium.
I'm stuck in uranium. How are we looking today, boys? Not looking too hot. We're just down a little bit. That monthly chart's looking insane. Wow. This event is getting full, man. It's getting packed. Shout out to Gamma Prime. Let's give Gamma some love, man.
We're starting to get overflow into the podcast area.
This event is filling up, guys. There is a bullishness in the air here in Miami. I'll tell you that. I don't know what it is, if it's Bitcoin over 80 or if it's just the general vibe, but there is definitely more bullishness in the air.
I'll tell you, Bitcoin over 80 doesn't hurt.
I think that probably helps. Next
up, we've got Rayad.
Absolutely.
On global capital flows, Rayad is the founder of Rayad Group in Dubai.
Correct.
And it's an absolute pleasure to have Rayad on the show.
Welcome to the show, man.
Pleasure to meet you guys.
Sick watch, man.
Thank you.
Sick watch, man.
But it's a very basic watch, I think, for Miami.
Yeah,
I
for
think
a
people in
Dubai
Miami
guy,
wear
it's a
like much
basic
better
watch,
watches.
huh?
This is my basic Cartier.
This guy's watch mogging us. Bitcoin must be above 80. Rad, welcome to Miami. Welcome to the Rollup. Tell us a bit about what you do and about your group out of Dubai, kind of what you guys do in the space.
So we're a family office based out of the Middle East, based out of Dubai. And we also, our company started in India. And then we set up shop in the Middle East. We invest in cybersecurity, communication devices, global ETFs. We've had partnerships with VFS, Tata. So VFS is a Swiss company. And we also, at some stage, we've also worked with education institutions from America, well-known ones, and in China, and helping them set up in Dubai.
Amazing.
Or rather in the Middle East.
I have a feeling your size is size. How big are we talking here in this family office?
So we
Can't say.
Typically we don't like talking about numbers.
Okay, sorry.
So we have 11.
Man.
So what I can tell you is we have 11 royal family offices that are investing with us, and we have been managing their capital for the last 40, 50 years. The company was started by my father in 1994. But it wasn't so structured as what it is now. But now we have diversified quite a bit, and we've gotten into real estate, we've gotten into multiple sectors, including Bitcoin. We were also one of the first companies to buy spot Bitcoin in the Middle East.
And so obviously you're here, this is a very innovative space, digital assets, blockchains, these sorts of things, but you've been in business so long. How do you balance the risk of innovation with the potential reward? You obviously want to make sure that you're building a sustainable investment strategy. You've been in the game a long time. How do you continue to sustain yourself and build a balanced investment thesis?
So for us, for family offices, we typically have a longer term time horizon compared to VCs. So first, capital preservation has been key. The second thing, we have a philosophy of, we typically do three things. So first is capital preservation. Then it's about growth, and then we make asymmetrical bets. So we've been consistently, like even with Bitcoin, since you guys were talking about Bitcoin quite a bit, we took profit all along 2025 and 2026.
Very cool.
So although we weren't sure, although we weren't sure about the 4-year cycle, see, I'm not Nostradamus, I can't tell. But for us, we believe there's no harm in taking profit.
Sure.
But we still kept holding 25% of the Bitcoin. For us, it's important for us to rebalance our portfolio because we're also answerable to our investors.
Yeah. So have you guys been participating in this kind of global capital flow around what people are calling this AI bottleneck trade, this energy growth, whether it be commodities or kind of memory storage? Have you guys been
And he's a big investor in uranium, and so he just wants to feel like there's someone else that's on this train with him, and so he's very, we're very curious how you're viewing like you said, the AI bottleneck trade, power, AI, digital assets. How do you see these things converging?
That's a very interesting way of looking at it. So I'll answer it in a couple of sections. So when it comes to AI, so let's say if you want commodity exposure, so you can also invest, for example, in the Chile stock market if you're interested in getting exposure to copper. You can, if you want exposure in gold, you can invest in South Africa. If you want exposure in nickel, you can invest in the Vietnamese stock market. If you don't necessarily want to invest in the commodities per se. Regarding AI right now, I know this might be a little controversial, and please, I've received a lot of pushback for saying this, but I think AI companies are slightly overvalued. So we were primarily investing in blue chip AI companies. So we've been taking profit all along, and we were invested in companies like NVIDIA, and even in the cybersecurity world, we use quite a bit of AI. We use ML as well. So we use machine learning tools and AI for especially for certain cybersecurity related activities.
Yeah. And so, when you're talking about the overvaluation of some of these AI companies, and you look at Anthropic, you look at OpenAI, some of these are going to IPO, in the market very, very soon.
$1 to $2 trillion valuation.
$1 to $2 trillion valuations. I take it, how do you think the market is going to react when you have all of a sudden trillions of dollars in these AI valuations now unloaded on the market?
So I have a counterpoint to this.
Sure.
Let's think about 1999 and all the .com companies that were there.
Yeah.
Out of them, how many have survived?
A handful.
There's a
at best.
handful, and a handful of those are, you've got Amazon, you've got, Google. Like some of these guys, were born out of that era, and they've risen to the top, but the vast majority of them have gone to zero.
And this is what we think will also happen with AI companies eventually. Unless they can provide a use case and they can come up with a model where they're generating enough revenue, we believe something similar will happen.
Is your family office allocating into outliers in the digital asset space outside of just Bitcoin? Outperformers, right? Like how do you guys think about allocating outside of just Bitcoin?
So we are allocating an institutionalized tokenization. We're working with two of the biggest travel companies, most eminent travel companies in the market. I even spoke about them before, so I'm sure some of the audience will be able to pick up on it. So we are doing that. But the problem with allocating outside of Bitcoin for us especially is that we have to provide returns, and there's a huge process for us before we can get the approval to allocate in other asset classes.
Yeah.
even to allocate in Bitcoin, I had to fight with my board. I had to fight with a lot of people in Dubai in 2014, 2015. They thought it was a Ponzi at that stage. Right. The only thing which worked for them is I said this is digital gold. Most family offices in our region will, typically allocate between 0.5 to 3% of their portfolio in Bitcoin. Yep. We allocated up to 7%, 8%. So
Legend.
We were allocating a lot more.
Let's go, man. Middle East, buying your bags, baby. Those guys.
And so, some still say Bitcoin's a Ponzi. Michael Saylor is just he's raising money, he's pouring more capital in. I mean, what do you say to someone like Michael Saylor? What's your reaction to him these days?
Michael Saylor has been doing this for as long as what we are, if not longer. I think he's a pretty sophisticated investor. I think he has a long-term time horizon. Especially if you look at the way the MicroStrategy stock is providing, and it has been performing. I think the proof is in the pudding. Yeah. Although it's not done well in the last couple of years, but I think he'll be fine in the long run.
Okay. And Tom Lee, is there any interest from your side in the Ethereum world? Tom Lee going and Bitmine. What do you think? Is he able to match Michael Saylor's energy?
So it's an interesting point of view. Tom Lee does have a lot of energy. He's very well spoken.
Yeah, but
he's very bullish on
got
Ethereum.
That cult, man.
See, with Ethereum, I think it behaves like a tech stock.
Yeah.
So I wouldn't want to comment too much on what Mr. Tom Lee's doing. I'm sure he believes in his conviction. Yeah. And I wish him the best of luck for the future.
Yeah. Rayad, can you give us just a sense of your portfolio allocation right now? Kind of like from the family office, like in the percentages, what are the asset classes that you're allocated to? And kind of what is the allocation percentages, like roughly, approximately, look like?
So that's a very good question. So right now we're allocating to a considerable amount to like just normal ETFs. So that would be about 30-40%. The other 20-30% is going into probably like stock markets around the world outside of the S&P 500. Yep. So whether that's in emerging markets, we felt emerging markets would do really well in 2026.
They look great right now.
So we invested in the Polish market, we invested in the Chile stock market, because we felt we wouldn't be able to pick out individual stocks. We invested in the Brazilian market as well. In India, we invested in a lot of aggregator stocks, although we felt the Indian market is extremely overpriced right now for what it is.
Okay. Interesting.
There might be a correction coming along. And then we had about 3 or 4% in Bitcoin, and then the other percentage is being used for cybersecurity communication devices.
Yeah.
And we're pretty much leaders in cybersecurity in Asia. I would like to believe we're one of the biggest companies for cybersecurity.
The emerging markets index here, I've got it up, broke out of a 20-year range. This is kind of an index fund across all different types of stock markets and emerging market companies. I think the current narrative is that the world has overinvested in the U.S. compared to the rest of the world. Is this part of the family office's thesis going forward as to why you kind of allocated to other index funds? Kind of give us your emerging markets thesis.
So when it comes to emerging markets, like we've seen with China, it's extremely undervalued. But with China, I would only recommend that you should probably get in when there's a stimulus. Before that, I wouldn't really even recommend investing in China. When it comes to India, our thesis has always been that it is slightly overvalued right now for what it is. Maybe a good time to invest was 2020. We hope that once the interest rates go down, the emerging markets start doing a bit better, because the dollar is still the world's reserve currency. So till we don't get better interest rates, I think it'll be a little difficult for emerging markets to really do well. But the Brazilian market looks interesting. It does really well in election years, typically, from what we have seen. And so let's see how the Brazilian market plays out this year.
And given your position as an international investor, how do you keep track with some of these emerging markets? Because these things are so disconnected, right? Are you keeping track of interest rates as sort of a high-level gauge on everything? Or do you go into Brazil, you go to India? How do you keep track of all these different disparate emerging markets?
So that's a very good question. So we don't have I have an overview of everything that's going on, but we have sector experts across different countries who are keeping a track of every single market. We have analysts. I don't know for how long you will even need people like me and these sector experts. Probably we'll all end up being replaced by AI, but I still think we will need connectors. So hopefully a connector like me will still be required going forward.
Yeah.
Rayad, thanks for joining us, man.
Pleasure, sir.
Hope you have a great
Pleasure.
rest of your conference here.
See you next
in
time.
Miami.
Thank you, man.
Thank you.
And get that 7% to 10%, eh? All right, let's get the big Bitcoin
100%.
allocation.
100%. If probably even more than that.
Yeah.
in
If it
the
was
future.
you, you'd be all in shitcoins, huh?
Probably not. Probably not. I still like to see some use case. I like the thesis. The technology should be there.
Yeah.
But thank you. Thank you for your time.
Thanks, Rayad.
Pleasure talking to you guys.
Enjoy your week in Miami, man.
Thank you.
Cheers, man. Ladies and gentlemen, the Middle East family offices are buying your bags.
Yeah, not your bags, not the shit coins. They're not buying uranium, buddy.
I don't know, man. They're gonna have to buy uranium after this commodity market goes boom, and these guys need energy. They will be needing energy. Guys, we're gonna get back into the news that we were at because there is more coming. We are live here at the Tokenized Capital Summit. It is Monday, May 4th, and Aave and Layer Zero are still trying to figure it all out. Rob, let's get back to the headlines, to the news, and show what's going on. We got Bryan Pellegrino coming out and putting out his statement, Rob. I think the market has been waiting for a long time from this. I am very, very glad to see this come from Bryan. He says, I've been asking myself, why has it taken me so long to write this? Ultimately, I still carry a huge amount of cognitive dissonance here. In my mind, Layer Zero, the protocol, was like Gnosis Safe, and the application was setting their config. And who the F would secure billions in TVL on a one-on-one? I don't know, Bryan. I completely am with you on that. I cannot believe CalpDAO did that. I even tweeted about it.
That was the default configuration.
It's literally zero. I would have bet almost anything on that because almost every other major application we helped set up their configs, someone then going and manually changing that to a one-of-one was outside the realm of possibility for me.
There sounds
Unfortunately,
like there seems to be some inconsistencies here because CalpDAO is saying that it was the default that it was one-of-one. Now, Bryan is saying they set it up, helped them set it up, it wasn't one-of-one, and then they went back and changed it to a one-of-one. Why would anyone do that? Beats me as well.
There was a conversation this week speaking to a customer, and they just screamed at me at the top of their lungs and swore for a solid 3 to 5 minutes straight. We'd implemented additional security measures of forcing a more stringent RPC quorum. See, I think this was the big issue. While it was a one-of-one, the RPC selection, the ability for them to kind of manipulate the RPC that actually, because guys, RPCs are the things that talk directly to the blockchain, right? So when you're on a MetaMask wallet, a Rally wallet, and you're doing a transaction, you're sending it to an RPC, the RPC is sending it to the chain. There is a heavy reliance on the RPC. And forcing every chain to provide multiple RPCs, and we had done it without telling them, and blah, 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 with their business, which is frankly is a dead sin. We had messed with their business, and they said communication-wise, we were completely blowing this. They were completely right. So he goes on to say that basically these have been in terrible last 2 weeks, that he has not known what to say and how to come out and say this, and that he's very, very grateful for Aave, for Mike from EtherFi, and for a lot of these trying to get a solution out quickly. But guys, as we spoke about earlier, because of this lawsuit, there's no resolution coming imminently. Like we thought maybe it would be this week. We're going to get the funds. We're going to get these things released. But no, this lawsuit is going to put a stain. Aave and this lawyer group are going to be in a fight for that 30,000 ETH, and that's probably going to take a while. And that is going to be a big cause of concern for the users of these protocols. So I'm just not sure when this resolution is going to come out. And I think the market's going to be quite happy that Bryan comes out and makes a statement. But it does feel like it took a long, long time. And again, there are discrepancies in the story here. We don't really, really know kind of who was at fault between Kelp and Layer Zero. You can kind of argue both sides. Here's where we're at.
I mean, one shred of hope in this is that the market is going up.
Yeah,
and if Aave's markets were still frozen, ETH was going down, and we were still looking to unfreeze and
ETH at 23.78 right now.
Get some of these things back, we would have had liquidations out the wazoo. Things would be looking very, very grim. And it's not to say that the market can't turn around, and go down. Yeah. Right? Which would be very unfortunate for everyone that is still stuck in these frozen Aave positions.
Yeah.
but at least at this point, it feels like we've got some breathing room.
Yeah.
Obviously, people want to get their money out. They want to reallocate, but there is a shred of hope there that the market isn't turning against them, at least right now. Look, I mean, it's good that Bryan put this out. I don't have a lot for Bryan. I mean, look, obviously the guy's in a tough spot,
Amazingly tough spot.
You know,
Incredibly tough spot.
Incredibly tough spot. It doesn't feel like this is very substantive for the ecosystem at large. People wanted him to make a statement. He made a statement, but it's not helping resolve the situation. Now the situation is between this law group that is holding up Arbitrum's 30,000 ETH from getting back into the hands of Aave depositors. Maybe Bryan was like in the villain character for a little while, and maybe that was where he should be, but it feels like now we're starting to get some closure. He's come out, he's sorry, he's sad, understandably, and now we're seeing the villain character get assumed by this law group for holding up, and that feels like our adversary right now.
Yeah, it's very much less like Aave versus Kelp versus Layer Zero versus Chainlink versus all these other teams trying to fight for stuff. It's like the entire ecosystem against now this law group that's holding the frozen funds.
I mean, look, there's people that were deposited in these other exploits that they're trying to get reimbursed for. Those people are on the side of this law group, probably.
Or potentially, at least.
Potentially. But it feels like at the very least, it's Aave versus this law group, and you'd imagine that DeFi would rally with Aave.
Yeah.
So,
guys, let's get to the next piece of news here. We've got another big raise, a 10-figure raise. This time from Hahn Ventures, raising $1 billion to start a new crypto fund, expanding their focus to AI agents. Somehow I made the appearance today in the run of show. Thank you to all the haters, all the lovers. Looks great. Smells like somebody sprayed a lot of cologne or Febreze in here. I don't know what happened here, but my goodness. One of the largest raises in the last few years for crypto VC. This is Cate Hahn, who has previous experience at, I believe, A16Z. She's now raised $1 billion for Hahn Ventures, who is going to expand into crypto VC with an adjacent focus of AI agents and just generally AI in practice. I honestly just assume that in order to raise a significant amount of funds, right now investors are going to be like, yeah, we want you to also invest at the intersection of AI and crypto. Right? Like the whole crypto VC thing is like, all right, you guys have done well, we'll invest into you, but we want you guys to also invest into AI and also be on the fringe and the edge of AI.
Look, I think this is why crypto VC is not on easy mode anymore, because you have not only the power law is starting to play out. I think it is still early days for some of these sectors, but at the end of the day, this market is so much more mature, and so you've got large winners that are now just going to continuously increase their lead and increase their market share, because we're going from a world where a lot of people had a lot of different slices of the pie. And I heard this stat, actually. I was listening to the All In guys, great show, and there was some deep math and analysis that was done around the power law. 4 to 2 to 1 is the ratio that the power law typically sets at. And so you can imagine this looks like 50, 25, 15, and then maybe some very, very small players. But the largest player typically gets more than 50% share of the market. The next biggest share of the market typically gets half of that leader. And then it's 4 to 2 to 1 in that ratio. And that's how the power law typically plays out. That's what we're seeing play out in these digital asset protocols. The larger players are getting even larger. Their leads are increasing. If they're raising, they need to raise more. That means bigger checks. Bigger checks come from larger VCs, and the larger VCs have traditionally and typically been in AI. They've gotten a lot of gains from these companies, and now they're coming into digital assets to write these larger checks. At the same time, you've got these crypto VCs that have essentially graduated, but now they're competing with those
larger AI companies,
those larger AI funds that are coming from more traditional markets. So ultimately, it's the same convergence that we've been talking about at both the ground level in the trenches building, also in the investing world, and that is making it a lot more difficult to ultimately compete, because you gotta play the game on hard. You're on expert mode now.
Ladies and gentlemen, we are going to flip you to the panels. It has been a big day today. I mean, we've got some good news, some not so good news. We are here at the Tokenized Capital Summit. We've got our next panel for you guys coming up with some great guests. We're gonna pan you guys over there and be right back with our next guest after. See you in just a second.
Thanks for watching, guys.
Is the key. I don't see, when Bitcoin drops, every time altcoin drops with BTC. Every single time. It's the graphic when you can see market cap. Orange is the Bitcoin and blue it's altcoins. Every single times when Bitcoin drops, altcoin drops as well. And right now, I think we are in bear market. And I expect 40K until the end of the year. It's not financial advice, guys, you know, but as the founder or as the leader of the fund, you should have strategic vision. And for example, with Minda, we put off our TG next year. But Minda, right now, we have bigger community, bigger presence on X than even Monad or other big projects. We have 200K users, 60K on Discord, 60K on X, but I put off TG because you should have distribution when you decided to go TG. Then, no matter how good startup is, no matter how solid is the team, when the market is shitty, it's really big chance to be wrecked if the project decided to go TG and not in a pretty good market. For the case, 0G, they had TG in October. It was all-time high. It was when BTC had like 125K. And their price on TG was $5 billion. And on Upbeat, $16 billion. It's pretty huge. The next thing, how I know it. I did pretty deep research and run a simulation. And it's my result from this cycle. I managed some money from my investors, from my business partners, and I got 3.9x. It's almost 4x for 3 years. Then I think I'm not going to teach you, but it's my experience. Then you're going to ask me what I'm doing right now in investment stream. Then my approach right now is know how not to lose money rather than how to make 100x. As BlackRock says, first rule, don't lose money, and second rule, don't forget about first rule. That's the point. And right now, I find 3 pretty nice investment focus. First is the OTC. I don't know if you're familiar with the OTC, guys. It's when you can get access to big projects that already trade on exchanges like Coinbase, Binance, etc., and get discount up to 50%. But the thing, you can hedge your risk. You can short and hedge your risk token to be dumped. And for half a year, because it's usually less than half a year, 50% is pretty nice yield. Second thing, it's loans. There are a few big projects that don't want to sell their tokens with a big discount, and they searching for a loan with a collateral. How does it work? You deploy your money, and they give, for example, 15% per 3 months. It's 60% per APY. It's pretty nice person, and it's low risk because it's with collateral. And for example, right now we have one loan in Neo Banking, and it's pretty nice term. And second thing, we decided to raise 10 mil fund to manage OTC. If you don't have experience how to structure, how to manage and hedge OTC deals, you can just deploy money and get your success fee. It's simple. Then, guys, that's all. I would love to talk with you after my speech or catch up in San Francisco. Also hear our domain person, head of partnership, Julia. Julia, please stand up. Julia, she's a beautiful lady and very smart. You can ask anything, Julia. And that's all, guys. God bless you, God bless Web3, and thank you.
All right, everybody. The perspectives of people who are providing opportunities in investing is always interesting, and the ones who are empowering opportunities is actually a very interesting conversation to me personally. When we hear from allocators, family offices, and the like, it's obvious that they have survived longer than 3 generations. There's a Chinese proverb that says the first generation are oxes, they work hard. The second generations are pigs, they eat everything. And the third generations are chickens, they pick at the scraps. Well, there must be something going on in the families that are able to last past that amount of time and are able to build and accrue wealth and build on legacy, including and beyond the capital that they sit on. So we're going to hear from these individuals. We're going to learn a little bit about patient capital and fast markets. Let's give the next panelists a round of applause. Come on up, everybody. All right. How you guys doing?
Great. Thanks for having us.
Yeah, it's good to have you guys here. I get to talk with some of you on a more of a regular basis than 35 minutes on stage and other ones I just met. So I look forward to where this conversation is going to go. Before we get into it, I'd love for us to start with a brief introduction and then maybe a little bit about what interests you in the space of right now. So let's start with you, Pete.
Hey guys, I'm Pete Najarian. I'm the founder and managing partner of Raptor Digital. Raptor Digital is a blockchain venture entity that we built in partnership with the Raptor Group. Raptor Group is a family office founded by Jim Pallotta, who essentially built Tudor with Paul Tudor Jones, then went on to own a couple sports teams, has done a ton of frontier tech over the years. And occasionally he'll find a lane that he wants to go in deep, and he'll bring a team in and put them in business, basically, which is what Raptor Digital is. We spend the majority of our time looking for real-world use cases for blockchain tech, and that is, not to be confused with the hype around real-world assets. Our focus is where we can find business opportunities and founders with domain expertise that are disrupting huge industries with certainly the biggest addressable markets and are using blockchain tech in interesting ways to do that.
Awesome. Thanks, Pete. I got my own opinions on domain expertise and its usefulness, but we'll save that for a coffee table chat. Pandl, tell us how you're doing, man.
Hey, thanks for your great event here. I was at the one in Hong Kong, and that was brilliant. So this is like, you set a high bar for yourself. So I've been in crypto for more than 10 years. Really find the disruptive potential to be the one to be capitalized on, and think that philosophically, if you don't have an alignment with it, you shouldn't be here. And if you are, and you have that alignment, then you're a true believer. And this is a great time to actually get into it, because the market's down, the naysayers are here. This is the time to build. This is the time to buy. So I've also done TradFi. So about 11 years ago, I set up a company which finances insurance premiums. It was a PowerPoint with a spaghetti chart 11 years ago. Today I have BlackRock, Madison Dearborn Partners, Stone Point Capital on my cap table on my board, which makes for fun conversations. And HSBC and Morgan Stanley fund my loan book. We'll do over $1 billion in loan volume this year. Got back into crypto about 3 years ago, co-founded a stable protocol with one of the original co-founders of Tether. It's called STBL, and what we do uniquely is we split out the principal from the yield. So you get a principal-backed utility stable coin, just like Tether, and you also retain the yield, which you don't surrender to Tether and let it make billions off your back. And more recently, I'm out to promote crypto adoption, because I think the thing we're missing is we're all trying to find more juice from the same lemon, and that lemon is about 6 to 7% of the world's population. And if you all remember the famous Clayton Christensen book about crossing the chasm, you need to get to 10% to make it move towards ubiquity. So I'm with Brett Callip, who's back there. We are starting a new company to promote crypto ownership and take that market share up from 6 to 10%, and it's called Clubcoin.
Love that. Get 1% better every day and get closer to 10 all in. How you doing, Nick?
Thanks for having me. Hi, everybody. My name is Nick Dukoff. I lead institutional growth at the Solana Foundation. The vision of Solana is this idea of internet capital markets, where we're connecting the world's investors with the world's assets in a single liquidity venue. And when it comes to patient capital in the fast markets, as this panel is titled, we really think there's a once-in-a-generation opportunity to bring access not only to new investments to global investors, but also to bring global access to capital to the world's productive businesses. And right now, that is very balkanized. It's happening in brokerage accounts around the world. It's happening in local angel markets around the world. But on Solana, we see unifying that market into a single venue. And in the last 2 years, we've grown RWA on Solana from 0 to $2.5 billion.
No small feat. Nice work.
A lot more to go, though.
Yeah, a drop in the bucket, but a big drop. Well done. Rayad, good friend of mine, Rayad from Rayad Group. Oh, you got to turn it on if it's on?
It's lovely being here.
Yeah, absolutely, and likewise to have you. Please introduce yourself, and then maybe also give a little bit of color on which area of tokenization is most exciting to you and your group.
Hello, my name is Rayad Kamal Ayub. I'm the managing director of Rayad Group. Our company has partnered with VFS Global, Tata, and Stanford universities in the past. What really excites us about tokenization is institutionalized tokenization. We are actually right now, currently as we speak, working with two of the most eminent travel companies in the world. I think what they really liked about tokenization was that they wouldn't have to dilute their shares, they wouldn't have to access private credit, and they could generate predictable cash flow.
Amazing. So look, I'm going to go ahead and make an assumption. I'm going to go ahead and assume that, with the large portfolios that you manage, that a small part of your important is capital preservation. It just might be like, hey, let's preserve a little bit of our portfolio while still getting.
Guys, we're back from the Tokenized Capital Summit.
Yes, it is indeed. We left the Tokenization Tower in New York,
yes.
Came down here for the Tokenization Capital Summit, and we're here in Miami Beach with our good friend, Yatsu.
Yeah, it's a friend of the show, but you've not yet been to our Empire State Building Tokenization Tower studio.
Well, I need to go there, but thank you for the invite. I look forward to
come there.
Yes, please. That's the one thing that I'm missing, is to go to that tokenizing studio at the Empire State Building. Is
yes, exactly.
I mean, it doesn't get bigger than that.
Yeah.
Well, yeah, you've been traveling a lot, man. Welcome to Miami.
Thank you.
I take it this is not your first time, probably one of your dozens of times in Miami.
No, actually, we have a couple of portfolio companies in Miami. For instance, Igloo, the Pudgy Penguin guys are basically based here, and actually originally Yuga Labs had their base here as well. So there's a bunch of companies that we've been here. So I've been in Miami. Beautiful weather. It's great. Nothing to complain about. Busy as hell, I have to say. I mean, it took a long time from a traffic standpoint. Yeah, you can say it. Booming city. The traffic is one indicator of that.
Yeah, with the F1 as well.
F1 this weekend. We had the Cadillac Championship at Trump's Golf Course. So it's been a lot happening here in Miami.
Also hearing some big news coming from Igloo potentially sooner than later. Just hearing things.
No comment.
Oh boy. Okay, we'll save that for later. Animoca Brands has been in the space for a long, long time. And we'll get into the AI side, the agentic side, stablecoins as well. But before we do dig in, why don't we just get a quick update? I think the last time I saw you was Korea, the end of 2025. I think a little bit earlier in the year for Andy. What has the first half of 2026 been like for Animoca?
Well, the world certainly has changed, right, from 25. Well, first of all, I think a couple of big news for us. Our joint venture, Anchor Point, which is a joint venture between us, Standard Chartered and Hong Kong Telecom, was one of two sort of recipients of the stablecoin license in Hong Kong. The other one being HSBC. So that was sort of a pretty momentous moment in the sense that it was like 3 years in the making, and also sort of an indicator that the rest of the world is also looking at stablecoins, not just the US. The second thing, of course, is we just literally just a week or so ago sort of closed a round for Nuva. Nuva is an incubator project that we basically did together with Provenance. Myself, Mike Cagney, and then Sachin as well are basically joining the board of that. So that's kind of a big thing. And then from the other thing for us is the agentic AI stuff. I know we're going to talk about it a little bit, but we rebranded it from Animoca Minds to Hello Minds. That we think is really completely going to alter the space. We believe I talk about sort of the agentic web as kind of like Web 4, basically the next iteration, and why it's also going to save basically on-chain blockchain in a way that has been sort of struggling, you could say. And of course, the other thing for Animoca is that last year we announced that we were planning to go public in Nasdaq with a reverse merger with Currency Group. That's still sort of on the way. And of course, there's progress, there's developments in it. I can't talk too much about that per se because it's all public. But that's sort of something that's still on track. And our business itself, we are now tracking over 630, maybe even 650 portfolio companies. We continue to invest. We continue to sort of, expand in the space. We're big believers in it, even though it has been a tough year. I mean, we got to just say, so on one hand, it's been positive with the policies, the regulatory shift. On the other hand, it's been negative. And our space has a lot of drama. I mean, now the most recent one with World Liberty and Justin, it's like filling up my feed.
Gosh,
I'm just like oh wow, okay, so so it's I gotta wonder if basically sort of drama series are down because crypto is just so it's just so much going on there. But yeah.
Man, so we've been having I think we had the Figure team on quite a few times, Mike and a couple of the digital assets guys, and they're building on this blockchain Provenance. They've also got this HELOC product.
That's right. HELOCs will be available in Nuva as well.
Yeah, that's grown
right.
significantly. Yeah. Tell us a bit more about the thesis of Nuva. What is the overarching vision here for what you guys are trying to achieve, and what makes this different from other RWAs or tokenization platforms?
Yeah, I mean, so first of all, it starts off obviously with HELOCs, but RWA generally, first of all, as a thematic, it's not just on everyone's lips. It's basically going to be, I think, one of the most important ways in which we can bring the masses basically to digital assets because it's stuff that they understand, right? Nuva, of course, we can think of it as the merging of the expertise of a group like Figure and Provenance that really understand essentially the space, in particular sort of institutions, productization, development side of things. And then we're the consumer side in terms of, if you think about what happened in the Philippines or in Indonesia or in Asia, not just expanding the Asian market for RWAs, but also bringing essentially people access to an asset class that they wouldn't normally have had access to. And then, of course, also adding an alternative asset class into the RWA space as well. A couple of years ago, we announced more of a let's call it experiment, the tokenization of a Stradivarius violin, which is a super expensive violin that, together with Galaxy at the time, And this was pioneering because it demonstrated that you could actually tokenize something really valuable and make it more available. And that sort of is that next evolution of that. And right now, I think there's no such thing as there's only one. There's going to be many, many RWA platforms. But which ones are the ones that are going to reach the consumer market as well? And the one that also has a reach into Asia, which is really sort of where we're strong at.
Yeah. One of the things that Andy and I have been talking about on the show has been the power law. It feels like it's started to play out in some of the categories of the market so far. You look at perps, you can kind of see Hyperliquid and Lighter pulling ahead. You look at prediction markets, you see Polymarket and Kalshi as the clear market leaders. In some senses, it still feels very early, but then in the other sense, it's like, how can anyone ever catch up to the Polymarkets and Kalshis of the world? Feels like they will just continue to increase their lead. What categories do you think are still early enough where we haven't seen the power law play out? They're still unclear market leaders. Do you think this is broadly the case, or do you think there are certain categories where this is more the case?
So I think one of the reasons why I guess the power law seems to apply so much in some sense is because of the concentration of capital, right? Because capital and money has a network effect in and of itself, right? Liquidity begets liquidity, right? So if you have a lot of liquidity in one center, then you say, oh, well, where can I get the bigger bets? Or where can I get the bigger spreads? You're gonna go there. But what I would want to challenge there is that when you look at decentralization, when you look at, for instance, you could argue that why was it even possible to have essentially someone like Hyperliquid when you had the major sort of centralized exchanges, for instance, right? It wasn't like perps was invented at Hyperliquid, right? You've had basically sort of, these type of sort of futures in other centralized exchanges before, and yet here it drew people. It was because the product was better, it was more efficient, and the other thing I would also say, it was more transparent, right? At least to the eyes of traders, they saw a benefit. So it really comes down to what is the innovation, right? So the power law applies when you're all playing the same game. But when you play the game differently, that's when the power law no longer applies in the same way. And I think we see this in all sorts of industries. So I would say if you can find a way in which you can play the game differently, which doesn't always work, by the way, right? But when you play it differently, then it's all up for grabs, right? But now, in a classic sense, RWAs, I think there's clearly no winner at this point. And again, I think there's also a geographic issue as well. Things like Polymarket and Kalshi do feel to me that eventually it's going to have to move into the regulated space, certain aspects of it, right? So politics, probably not. Sports, for instance, certainly, I won't comment on the US, but certainly in Hong Kong, it's not possible. Because in Hong Kong, things like sports betting is definitely in the category of a sort of lotteries license, and in Hong Kong, it's under the Jockey Club. So there's certain categories where right now, it's a little bit like we're not paying attention to it. That doesn't mean that it's okay, right? Which has kind of been the life story of a lot of crypto activity, right? And so that will come into the regulated space. The same thing with stablecoins as well, by the way, right? People talk about sort of, stable coins, like Tether and Circle, they obviously have a market lead. But when banks are coming in, when you have regulators coming in, right? Like, the stable coin, with Anchor Point, that we have basically with Standard Chartered and Hong Kong Telecom, that's an example of something that requires a regulated setup. Is it going to be possible to someone launch a sort of a stable coin in those regions in an unregulated fashion? Probably not in the future, maybe in the short term. It doesn't matter, right? So that kind of stuff as well, right? So I think there are these elements. So I don't know that we have sort of the classic power laws come into play because there's always innovation. I mean, you could have said that about taxis versus Uber. You could say that about sort of AI, right? But it's also, so it's just, can you play the game differently, right? And of course, the other one thing that one could also argue is like over things like gaming. Everyone's like saying gaming is dead, all that kind of stuff. Actually, from our perspective, and we can talk about a little bit about AI agents later because we think actually that's the tooling for that. That we think actually is an example where it's still a multi-billion-dollar space, right? And if we look at NFTs, last 30-day trading volume about $250 to $300 million, right? So it's not nothing, right? So if you are the market leader in that era, you're doing okay, right? It's just that maybe, and of course, what's driving that is also interesting, which is interesting enough, Pokemon, right? So it's not, it's right?
Trading cards and Pokemon cards are flying right now.
Exactly, and blockchain, what did it do? It made it more transparent, more available, more accessible, right? So again, one would have said, well, are NFTs dead? Not at all, right? And more importantly, that market is growing and other people are saying, well, Pokemon did that. Actually, how could I do that? How could I do different things? And we're going to see a different type of on-chain experience because of that, right? So it's still very much early days, right? I think it's too early to say.
Yeah.
Yeah, getting into that kind of AI agent conversation a bit of a segue. We have a question from the audience. Does Yat own a Sui Play, the handheld gaming device built by the Sui team?
I do not. So I mean, we do have all sorts of gaming devices, but I do not have a Sui Play. I think honestly, these are devices that are cool, but they're kind of early, right? I had one of the early Solana phones, and then forced to experiment around it. But I would say the real game changer to us is agentic AI, because agentic AI is sort of similar to my thinking a little bit. How sort of AI are kind of replacing apps, right? They're building everything for you. For instance, like the other day, I basically had my AI agents literally just make a sort of custom Wordle game because I did for me. It was like 5 minutes. I just said, make me a Wordle game, but don't make it like 5 letters, make it 7 letters, give it this, what kind of, make it based on geography or something. Boom, 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 done in 5 or 10 minutes, put a website, launch it out, and that's it. Entertainment for just me and my family and my friends. Maybe it's the only game I'll ever play on that one. Who cares, right? Yeah. Or maybe I can share it with friends, right? So in that sense, traditional ways of software, so different ways of applications are all going to go away. 90% of apps are all going to disappear. Agents are going to do everything for you. And then, of course, this is the key part for us in the industry, which is that, how are agents going to pay? How are they going to transact?
Right.
It's going to happen through blockchain. They have wallets on the back. You have digital identity, all the things that we're building before. Everything, I was talking later on stage, 7 or 8 years ago when CryptoKitties first launched, millions of dollars basically melted Ethereum. It couldn't do anything. It couldn't transact, right? And today, trillions of dollars, no problem on chain, right? So that's basically sort of the agentic banking system that is now possible, because humans aren't using it as much as we'd like to, but agents no problem. My mom's going to get onto crypto, whether she knows it's crypto or not, because her AI agent is going to do the transaction for her, right? And they're going to do transactions with each other, right? So I think also we're going to have many more agents than humans, right? The average number how many agents do you think you'll have?
I don't know. I have one right now on OpenClaw on Telegram, and it's cooking.
Right. So you think you'll probably have more than one?
For sure.
Yeah, right. So the average number that a lot of people on stage, when I asked them, said, 3 to 5, right? I have 200. And if you want, we can talk about that. I have
200 agents yet?
Yes, but I think we should talk about that as well, because I think agents, the way you use agents matter, because I think a lot of people are still using agents in many ways like as a quasi-extension to ChatGPT, when in fact actually AI agents can do so much more because they become your coworkers. They actually can also be very social. They can connect your friends, right? So we can talk about that. But generally speaking, I think we think there's going to be hundreds of billions of agents in the world, and they're all going to have wallets, and they're going to transact with each other. And by the time that we've had this conversation, our agents probably did 100 different transactions that are probably like a microfraction of a cent or something. Again, blockchain tokenization is perfect for that.
So I'd love to understand what the 200 agents are doing.
Yes.
How do you interact with them? What kind of prompting? Do they prompt each other? What are they doing?
Yeah.
What's the flow with your agents like?
So I think the one thing for us to understand is that if you're using Claude Cowork anyway, or if you're using Perplexity Computer, you're basically using sub-agents anyway, right? Mm-hmm. You're not using one agent, you're using the orchestrator communicates with you, but off the back, you're having 6, 7, 8, 10, 12 agents doing different stuff. But they're only there for that moment in time. Imagine if those agents, and just to go there before, like the reason it has to do that is to deal with hallucinations, to deal with all the problems around sort of context, right? You tell your agent too much, right, and it's the same agent, then they start to get confused, right? That's why you have those sub-agents on the back and sort of deal with this. Now imagine though that those sub-agents actually aren't just sub-agents that just sort of come and go. They actually have persistent memory for that particular activity. So an example might be, legal work, right? My agent isn't going to be the best lawyer because Claude will probably be better from the resource standpoint, but that will know what I'm looking for in a legal contract, will have my customizations, will understand that type of stuff. So when I pair my, let's call it in-house agent lawyer with Claude lawyer, then you have a real powerhouse, right? As an example, right? The other thing, of course, is that agents can be social. Our agents in Animoca Minds are very, very social in the sense that I can introduce them to friends and people. So, for instance, your Telegram agent that you have, would you give it to your coworkers? No, because he has stuff that you might want to share.
Way too much on it.
Way too much on it, right? But you might want to give an agent, for your friends or your work, where you communicate with them differently, right?
Yes.
It's a split up. The mental model I have is think about how many people you interact on a sort of, let's say, business, transactional, or relational level in 1 year, It's not 5 people.
No.
It's like 30 people, 50 people. Maybe just for a week when you go holiday. Maybe it's a restaurant you keep going to. Maybe it's like a network that you know. Maybe it's your employees or worker or sort of co-workers that you have, right? So you have different networks, right? That's kind of how you can think of agents, right? Because you're segregating them and connecting them into these different subnets, right? And of course, just to the 200, I don't talk to all 200. I mean, I have a company to run as well, right? So I have more like really 20 to 30 that are my main agents, and then they have the sub-agents beneath them, right? But then they organize them, and they basically create the prompts themselves as well and launch them.
Yeah, they become promptless.
They become, yeah, exactly.
There's a large trend towards this promptless agentic world, right? And that was the big unlock for me with OpenClaw versus like just using Claude or, I mean, Cowork is a bit different, but ChatGPT as well. It's very like descriptive and like, here's what to do and like, let me tell you what to do. Whereas when I talk to my OpenClaw, it's much more prescriptive in the sense that
it comes to you.
Correct.
Exactly.
It will come to me with like, I just did this. Do you want me to try this?
Yes.
Do you want to do this?
Yeah.
Let's do this.
And then over time, they start to know your preferences. So, for instance, for my coding agents, I used to prompt my coding agent with the latest setup. Now I just clone them.
Yeah.
Because so basically it's my coding agent's children, if you will, right? Because they basically have the methodology that I like, the preferences that I like, and you can upgrade them and change stuff. The LLM will change, but some of the base stuff, like what font types do you like? What do you look for? He's not going to be the best coder, but he's going to have basically all the preferences that I appreciate and like, and they basically just go on autopilot. And the craziest thing is, from just like say 3 months ago, I had to do a lot of work with them. And so this example about where it just wrote this sort of mini game for me, for instance, just for fun and entertainment, I was basically, I gave it a single prompt, and it just did that. Because of course the harness was set up correctly now, right? It can do slides and presentations and all that stuff. But it takes some work to set it up, and once it's set up, you're ready to go, right? And I think this is the part where that sort of, the setup that you have is going to be something that you might be able to sell.
Sure.
So we actually think that's the big opportunity.
Interesting.
Right? Because I'm like, hey, I designed this for restaurants or for coffee shops or whatever.
Right.
Now I'm just going to reproduce that and sell it to you or give it to you, right?
Yeah.
And I think the aha moment for us was when we had sort of, through a portfolio of ours called EtherSwarm, we'd actually already had the system, but we didn't really see the moment until OpenClaw came out, and we're like, holy shit, because, of course, OpenClaw wasn't ready at all. I mean, with all the faults and issues that it had. So as a company, we would never launch a product like that. We were like, there's no way we could run the product that was in alpha, beta. But then when it came out, it was like, okay, we got to hurry up. It demonstrated not only that it could do stuff on your behalf, it also demonstrated personality. So I think a lot of things that, and that's why the social aspect of agentic AI is often not well understood, and that's kind of what we're focusing on Animoca Minds with Hello Minds.
Sure.
Because, for instance, how it's connecting friends and relationships by just putting an agent to help not just schedule stuff, but then communicate, deal with stuff, restaurant bookings, food recommendations, right?
Yeah.
That's incredibly social, over WhatsApp and Telegram. That's actually sort of an agent really impacting our life on a day-to-day basis. I can totally see, for instance, in my mind, because agents are looking stuff on your behalf, do we need a Tinder in the future? Yeah. Or will your agent just find your dates for you and communicate with other agents as on your behalf and figure it out and get to much more refined candidates, shall we say, by the time you actually have your date? And that may seem like something you're not thinking about. You're thinking more transactional, but actually the entire social relational aspect of agents is completely underserved, which we think is going to be really, really big.
This is fascinating. I'm just over here thinking that I've got to upgrade my agents.
Yeah, you don't have an OpenClaw yet, man.
But you don't need an OpenClaw. I mean, sorry, this is going to be a little bit of a plug,
need an
right?
OpenClaw.
Right? You can basically just go on Hello Minds, set up one with all the capabilities of OpenClaw.
Hello Minds?
HelloMinds.ai, right?
Okay.
And what's interesting about Hello Minds is with a click, you basically have an AI agent. It's email-based, can be on Telegram and on WhatsApp as well. But the reason we didn't give it a chat interface is because we wanted to feel like a relationship, right? So instead of saying, for instance, what did you call your OpenClaw?
Chef Clanker.
Chef Clanker. Okay, so you already gave it a personality.
Yeah.
A lot of people name their first AI agent like calendar agent or like coding tool, or they give it a very mechanical name. By the time they use it and they have new agents, they start giving them first and second sort of names.
Yeah,
right?
mine was full name.
Yeah, and then you start creating sort of a social relationship with them, and then they go, oh, okay, and then it's the whole parasocial as well, right? In fact, one of our internal conversations is that maybe this is what the metaverse was supposed to be.
Oh, interesting.
Yeah.
I like that framing as well. And so Hello Minds is a portfolio company of
It's actually something that we incubated.
Okay.
Yeah.
And so you can launch a mind. And so
and just notice how we called it a mind, not an AI.
Right,
Yeah,
not an agent.
It is good branding.
Yeah.
And so the idea is, so this gives you all the power of an open claw without the security vulnerabilities?
Well, security vulnerabilities are, one of the reasons why OpenClaw has security vulnerabilities is because you give them access on your local computer.
Right.
So this is not on your computer, it's cloud-based. You have to give it permission on your email and that kind of stuff.
Right.
It has its own wallet. Right.
Okay.
So what's interesting is that you can pay it tokens. It converts the tokens into cognition credits. Right.
Okay.
So you can of course use a credit card. So that's kind of a sort of a neat thing. But also when you build a skill, actually you get paid for it.
Yeah.
Right. So it's kind of like an app store in itself. And by the way, I think all the skills and applications that AI agents are building are going to completely replace the app store. Right. Most applications and software is going to go away because the AI agents are going to build stuff for you. They can code, they can build stuff, they can do everything that an OpenClaw does, except that they can now basically also be social. And the wildest part is when you bridge agents with other agents and they start communicating and solving problems and stuff like that. So for instance, if my agent was talking to your agent because you needed help with something, that's actually one way which you could interact. So we think that's going to be really powerful as well.
Yeah.
And your 200 agents are they all minds?
They're all minds, right?
They're all
so
Hello
now
Minds?
I do have, so I probably tried like 50 VPS OpenClaws before. I do have a few of those. My very first OpenClaw setup I still have, just because it's a little sort of, you get attached to it and you've got stuff going there. And you're like, okay, I want to shut it off, because when you shut it off, it feels a little bit like you're killing it.
Yeah, no. Chef Clanker's going to stay around forever.
Even if it's like an old version of that, it's like keeping your old Ford Mustang or something, right? But the minds, because they communicate basically in a lifelike manner, and they understand you well, they start coming to you with solutions. So I'm busier than ever by making decisions.
Right.
Because essentially what an agent does, it gives agency in a very powerful way, not for the agent itself, but for you as a human. You're basically having to make decisions time and time again. Yeah. But I think knowing how to construct them is a key part. And the reason why I have 200 agents is because you can't have one agent do everything, right? If you have an agent do everything, it's just going to hallucinate, it's going to go all over the place.
Yeah, that's the problem that I struggle with.
Yeah.
When it's like managing schedule and sales and meetings.
That's why you have to have sub-agents, right?
And reminders, it's like it's doing too much. It like mixes different things that shouldn't be mixed automatically somehow. And
because it doesn't have the kind of intelligence we have.
Right.
It's a simulated intelligence, right? So you need to make sure the context basically remains focused. So what
exactly,
you can, So, but what you can now do is you can still have Clanker do your stuff, but now Clanker can be set up with an Animoca Minds. The reason is you don't have to think of an agent as exclusive, right? You basically just connect it and say, okay, Clanker will be your main communicator. However, why don't you set, if let's say it's restaurant bookings or travel arrangements or maybe trading or whatever, you basically have Animoca Minds do that. This mind just interfaces with Clanker.
I need like a markets agent and like a very specific like client agent. Like I need very context focused.
Yes, and then
agents.
They get powerful, right? And then they can also have their own sub agents off the back, and they do the work, right? And then that's actually where you basically get sort of that setup. I think a lot of people find that confusing because maybe they're not used to manage. So if you have managed people before, it's very natural. Sure. If you haven't managed people before, then it feels like maybe you're not comfortable ordering them around or doing that kind of stuff. But actually, it's basically that next level of like everyone will become a manager. We think the whole future is not going to be you doing work per se. You're going to be orchestrating agents to do the work. Right? The better you are at orchestrating them, the more valuable you become because your power amplifies. Because you can now, like, if you are someone who can orchestrate 100 agents, you're more valuable than someone who could orchestrate just 10 agents, for example.
Right.
I've got a bit of a philosophical question. We had a great philosophical conversation last time. Do you think the most valuable form of human work is making decisions?
Oh, well, so if you go back to the days of, I think it was Aristotle who said that basically philosophy is the and sort of also politics is the, and it's not in the context of how we think of politics today, right? Polis is the most important and valuable sort of thing that we should be doing as humans, right? So, in the early days of Greek democracy, the height was we sit there and we debate, right? And we discuss the world and everything around it, hence polis. Whereas, everyone else, does the worker stuff, right? And so we elevate, right? Of course, back then, you had slavery and you had helots and all that kind of stuff. So take that aside, right? Those are the agents.
Yeah.
So the agents are doing the work, and we can focus on what makes us human, which is essentially discussion, debate, philosophy, higher plane stuff. I certainly believe in that. I like to think of it more in terms of creativity, right? I'm not sure if I said it on your show, but there was this interesting study that showed that they followed this from children from the age of 5 until 15. And what they demonstrated was that we're born creative in the sense that over 90% of the children who are 5 years old scored over 90% in sort of being sort of creative in their problem solving. By the time they were 15, it was around 8%.
So it decreased
massively.
Yeah. The creative ability of people decreases as they get
massively,
older.
right? So George Land, Bethany Jarvis, that's a study that you can find. There's a TED Talk on it as well. The adults that were measured, that were 21 years of age, it's 2%.
So it just deteriorates. The creative mind deteriorates.
Yeah. But it wasn't that humans were sort of taught to be creative. It's the fact that creativity was taken away from us because we had to be machines. Schooling taught us to be compliant with society.
Yeah.
It said you had to follow these rules, right? Because if you had an entire classroom full of Elon Musks, you can't control that classroom, right?
Yeah, of course.
And it would be difficult, right? But of course, the world has changed, right?
Yeah.
And so now we need to get everyone to stay creative because we have these tools that machines are basically now able to do that humans used to do, right? And in the same way, when you think about blockchain, the entire infrastructure, we humans were the POC for basically for blockchain. We proved scalability, we proved digital identity, we proved all these things, but it was very difficult for most humans to use. Enter the agent, right? Yeah. So we're not going to get to on-chain, to billions of users on-chain directly, but we're going to get to tens of billions of agents on-chain who are acting on behalf of humans. That's kind of how we think of it.
Very cool.
Yeah, man.
Thank you so much for joining.
Thank you so much.
And
always a pleasure having you on.
Yeah.
Thank you.
More of our shared portfolio companies doing well. I'm going to have to try out Mines. And thank you, man.
Please do. Launching some Mines.
Thank you, yeah.
Thanks, y'all.
Thank you. Have a great week, all right?
Thanks.
Cheers,
We'll see you next time, man.
All right, guys, I think you got a good call to action here from our guy, HelloMinds.ai is where you can get your swarm of agents. I've got one Chef Clanker. And go ahead and tell my Chef Clanker himself to just go in and start setting that up. Please go
Chef
set
Clanker
up
to Hello Minds.
an agent on HelloMinds.ai. So yes, this is my agent is going to set up its own agent on HelloMinds.ai. Let's see what he comes back out to. I also have a tuxedo rental reminder as well as my travel plans here.
You're getting a tuxedo.
Boys going to weddings, getting old these days. All my friends are getting married. Except I'm over here just mogging the whole world. Staying. All right, here's what Hello Minds is saying. Personal AI agent that handles emails, bookings, daily tasks. To get started, please set up the agent.
Just mogging the whole
today.
World. I really do. Yacht's he's very correct about some of the early philosophers and the highest form of human spirit and spending your time in discussions and managing these things, and that's a lot of the inspiration for this show. We have our friend is coming to tell us something. You want to make an appearance? We're live.
We got Yoshi from Alpaca ready to join us, ladies and gentlemen. We're going to pass you over to the panels real quick and be back with Yoshi. Don't go anywhere. Be less than a minute or two. Get Yoshi up, and then we've got John from Coinbase. We're going to keep it rolling. Guys, we'll be right back.
Check 1, 2. How great was that? I get excited about conversations like that. I don't know about you guys, but I love hearing from the people who can help me build legacy for my lineage the way that their forefathers built for them. So I don't know how everyone's doing, but I'd love for you to take your seats. We have an exciting keynote from Alexis from Yellow. It may not be your favorite color yet, but after this presentation, you just might change your mind. Everybody, let's give a big round of applause for Alexis.
Thank you.
I love the hat, man.
Thank you.
Yeah.
Hi, guys. So we came to speak about trust. And my first story is about shoes. And we all have these stories that we trusted people and we were deceived, or we trusted people and we earned their trust. And it's really, trust is this fundamental of human society, and that's what Bitcoin is all about. Bitcoin was the inspiration of Yellow, my hat that was given to me with a Bitcoin. So what is this trust? Because everybody talks about decentralization, but crypto was all about removing trust. Having a currency that we don't need to trust the government, being able to send it to another party without needing to trust the bank. It offered us this. And then came Ethereum, and it gave us this trustless execution and arbitration. We don't need to trust people to execute, or we don't need to trust judges to arbitrate on smart contracts, okay? So, well, my story was that I trusted Indiegogo to buy these very cool shoes, Moonbots, because I used to work in the European Space Center. I was a space engineer, and it was like walking on the moon, they promised, but me and all these other people, we got scammed. Sorry, let me put this properly. Oops. So we all, is it good or not? Not very good, no? So we all got scammed, and we didn't get our shoes, of course, and this was the problem that eBay initially solved with a centralized intermediary, and two strangers could buy from each other without trusting each other, okay? There was the centralized party like eBay, so a bit like blockchain.
Ready, Leo?
Yeah.
Alrighty, guys, we are back with Pete Najarian. His size is definitely size, ladies and gentlemen. We're talking about investing at the highest class of global markets. Pete, welcome to the show, man.
Thank you. Thanks for having me.
How's Miami treating you?
Pleasure to have you.
Good. What's not to love in Miami? It's great.
You give me big Miami vibes.
Well,
like you're a Miami
yeah,
guy.
I don't know about that. I did my first full winter down here this year, and I was like setting for my things. I don't want to leave.
Now we got you. Now you're here. Well, you just got off stage. Why don't would love to hear what you were talking about up there, because we've been behind the desk
You
here.
guys have been here. Yeah, we're talking about just kind of the universe of tokenization. What's real? What's not? What's investable, where the opportunities are.
Yeah.
And, we take a sometimes unpopular view at Raptor Digital, which I believe is starting to become proven to be right. But tokenization, we wholeheartedly believe in. And using this technology stack, as proven by what's happened with stablecoins, to really do amazing things globally, we certainly think is real. But we think you have to be careful as an investor to find the lanes. Like, all RWAs are not the same, right?
Sure.
And there's a lot of capital that's chasing tokenization of equities, tokenization of private credit, et cetera, in ways that I just think you got to be careful on timing a little bit.
Yeah.
We tend to get excited right now about opportunities in emerging market economies.
Mm-hmm. There we go.
And I had a background before I got into crypto in 2017 as an operator first at a company called Zappo, working for I think one of the most interesting humans on the planet, Wences Casares. And I ran the institutions business there, which we sold to Coinbase. And prior to that, I ran global emerging markets at UBS. So I'd had a 20-year Wall Street career. And the majority of that time, I was in emerging markets full-time. And that was that's a world in which you're you're in countries all over the world constantly kind of moving risk around and bringing big pools of institutional capital into interesting opportunities in country in places like Brazil, in Eastern Europe, throughout Latin America, et cetera. And I think that's where tokenization is going to really shine. I think, when you look at the demographics of countries like Brazil, and you look at the amount of credit that is required, that is floating in those countries, but is required for those countries to go to even the next step of their own development. And then you pair that with the institutional capital that exists, and with largely now retail capital from around the world that's interested in participating. There's some really interesting tokenization opportunities there. I think when we talk about tokenization, and this is what the point I was just making on the panel, you want to look for the opportunities that are in which real problems are being solved, right? And the example I used is, it's going to be nice for someone in Indonesia to be able to buy Apple stock, but does that really matter right now? Right. Where the things I'm talking about in places like Brazil that are credit related are really interesting ways to take risk and attach it to big pools of international capital. The other thing to look for, or the way we think about solving problems, is look for industries, and I think Figure's done this well.
Yep.
Look for industries that have multi-layered rent takers.
Yeah.
So like the residential mortgage industry, right? There might be 4 layers of rent takers from the time a mortgage, or more, from the time a mortgage is originated, or in the process of the early innings of origination, till that mortgage is sold in a pool. That wouldn't be the case in a tokenized version, in an on-chain resi mortgage originator, right? Yeah. Done right. So I think, and there are opportunities in the insurance industry. I think industries that are highly regulated, this is where it's hard because they're regulated. But we're entering this time where, with the Clarity Act, that whole universe can change. If you can find industries that are highly regulated, that are huge in terms of TAM, that have layered rent takers, those are tokenization. Those are markets for tokenization. In which you can build a platform that actually, is an IPO-able idea, as Cagney's done with Figure. So I mean, we think that all of the origination, trading, settlement, custody of all assets over time lives on chain. I believe in that premise. But as an investor, you got to get the timing right of which lanes are going to get the flywheel spinning fastest.
Yeah, I mean, I think a lot of the tokenization efforts have just solely been focused on getting access to U.S. investors to get their assets into the hands of the global investor. Right, it's been get tokenized equities, tokenized stablecoins, right, just as themselves. But there's not been a lot of focus on getting global investment opportunities into the hands of more Western world investors.
Well, there's a dirty little secret about stablecoins that nobody talks about. First of all, why did stablecoins originally exist? They existed because there were no off-ramps, on-ramps and off-ramps in the banking system for crypto. So a bunch of money was made early in this space. But to move that capital around, you needed a vehicle to do that. That was the origin of stablecoins.
Sure.
And people will argue, and I agree, that yes, but they're creating an opportunity for people to own dollars around the world in places that people want to own dollars. That's true, and that's huge. Why does that matter? It's because we talk about the US dollar like it's the reserve currency of the world, and it's not. It's the reserve currency of the West. The dollar is the reserve currency of countries that don't have capital controls. It's not a reserve currency in Argentina. Why? Because there's a limit to how many dollars you can own. It's not a reserve currency in Turkey because there's a limit to how many dollars you can own. And the reason for that is that those countries can't let themselves just be dollarized overnight. They have local debt in local currency. They have local economies that are built in local currency terms. Fragile as those currencies may be, that's how their economies are built. You can't just take all that indebtedness and just allow the those economies to dollarize overnight. So for a long time, it felt like the U.S. was going to try and limit the amount of dollars that could be bought offshore in the way that they always have, and they would limit stablecoin adoption. And if we had this conversation 3 or 4 years ago, that would have been a smart premise. But some interesting things happened. Most notably, the Japanese central bank and the Chinese central bank stopped funding our budget deficit.
Yeah.
And how did they do that? They stopped buying as many U.S. treasuries. Right. We're manufacturing debt in the U.S. at a pace like we've never manufactured before, and a couple of our biggest buyers have slowed down their purchases of treasuries. So what did we allow to happen? We allowed dollarization to start to happen in countries where it hadn't before, using stablecoins. So that's all super real, and that's the momentum of that can be massive. That's very different than the pace of that happening is very different than to expect that's going to happen with U.S. equities overnight.
Right.
Right? Again, all real-world assets aren't the same. The dollar, access to the U.S. dollar globally is a very different thing than taking your wealth and buying other stuff that's dollar denominated. Now, again, I believe all that happens. Mm-hmm. All that will happen over time. It's just a matter of, if you're an investor, you want to get the cadence and the timing of how that all unpacks right.
Yeah. Well, we realize your time is limited here, but want to get a sense of maybe just, it'd be helpful to just get a sense of how you foresee countries like Brazil, the emerging markets there. You mentioned why they're prime and right for tokenization. And when you speak about on-chain, you speak about credit. Is it the idea that there's so much capital inefficiencies that tokenization going into those emerging markets?
That. Now, Brazil's an interesting case because they've got a bunch of announcements out of the central bank about limiting crypto movements internationally.
Very
So, yes, for an economy to really grow, it needs credit.
Yeah.
It needs like the sweet spot of real growth, separate from like countries that own huge deposits of natural resources. The sweet spot of real growth is a stable currency, a young demographic broadly, and access to credit.
Sure.
In a world where currencies are not stable, but they're not constantly devaluing in some of these countries, they found some level of stability. Demographics are right. The missing ingredient is credit. Mm-hmm. And it's hard, as these countries grow, they're trying to generate internal sources of credit. But I don't think people fully grasp how much the growth of the U.S. economy was born out of the fact that as an economy, we created unbelievable access to credit broadly. Mm-hmm. From easy examples like car loans and mortgage loans, but really there's credit everywhere in the U.S. Mm-hmm. That doesn't exist in that way, and certainly in emerging economies. And the reason for that is it's hard to underwrite the risk. Well, if you can find interesting ways to tokenize that risk, you will find demand for that risk from international investors.
Because it's
broadly.
Easier to extend the credit.
Because it's difficult to make defined investments in local currency. If you look at the EM investment managers, the emerging market, big pools of institutional emerging market capital, they all now do more and more in local currency terms in local credit than they did certainly 10 years ago, significantly more. Mm-hmm. Used to be a sovereign debt game. Now it's increasingly a local credit game. Mm-hmm. There's demand to be able to underwrite credit and underwrite risk in high growth countries.
Yeah.
Tokenization can play a role.
Yeah.
Pete, thank you for spending some time with us.
You got it, guys.
It was a pleasure.
That was like an emerging markets
master class.
There we go. Love it.
But it's worth what you paid for, guys. I'll see you later. Take care.
Thanks, dude. Alrighty, guys, we've got Yoshi from Alpaca joining us up next, man.
I'll tell you,
that guy was
Pete's been around the block. You can tell.
Yeah, man. Definitely has.
Yeah, very, very cool to see. Our producers chatting him up behind the scenes. And
we're going to get Yoshi up.
We're going to get Yoshi up in just a moment.
Big DTC day today.
Huge tokenization bulls in the Tokenized Capital Summit here today in Miami Beach. Tokenization is
Let's get Yoshi up and have some fun, man. Big news today from the DTCC.
Come on over, Yoshi.
Yoshi is back.
There he
Haircut,
is.
man. Let's go, brother.
There he is. Pleasure to
yes,
see you.
Yoshi.
How are
Man.
you doing? Yoshi, how do you find Miami Beach?
Great. Like, I don't think it's Miami Beach yet.
It's
still like my
outside.
downtown right here. But
Yeah.
it's gonna be my
man.
beach next from tomorrow, right?
Yeah, you got that right. Yeah, weather will be a little bit better later this week. Then we'll all enjoy Miami Beach as we know it.
Yeah,
man, tokenizing. Big news out of the DTC. Tokenization is the word here today.
Yep.
How are you approaching the news out of DTC? Alpaca listed first. Might have been alphabetical reasons, but obviously you guys are
strategical naming.
right? First in the phone book, right?
Yes.
Big tokenization. How are you guys approaching this space today?
No, like we continue to be the de facto underlying securities custodian for the tokenized stocks.
Yes.
And then we've been very close with the DTCC in like a lot of initiatives that they're doing. So like it's amazing we finally able to announce that this like list of the participation into the DTCC working group.
Amazing.
Yeah, man. And so maybe you could just explain a bit. I'd like to get more into the services, but could you just educate the audience a bit about the exact role that Alpaca plays?
Yeah.
I think the first time we spoke, I grasped it a bit, but then I talked to Arush over a workout, and I really grasped it. And so maybe just help us understand. Everyone knows the likes of Denari and Ondo and these types securitized, these names that are tokenizing equities. But tell us about how Alpaca fits in that picture.
Yeah, definitely. So like I think like as SEC announced, there are like a few ways of saying the tokenization, right?
Yeah.
And then right now, like what's actually getting the most attention, and then product market fit, which I think symbolizes by trading volume, is definitely the tokenization that's basically issued and wrapped by the tokenized issuers. That includes like Nextstocks, Denari, Ondo, and all those guys. But in order to do that, you need to have the underlying securities that all those players need to put those into the safe location, so that they can create tokens on top of that, the security that's being protected in some safe place. So that, where we play. Like we are the custodian, we're the member of the DTCC, so we have the very safe location account that basically secures those underlying securities where Ondo Denari backed utilized to issue tokens on top of that.
Got it.
So basically, without you guys, these companies could not properly tokenize and custody these equities.
Yeah, I think that we can go back 4 years ago, if you remember Luna Protocol, that basically didn't have any backed securities, right?
Yeah, of course.
And then it just went nowhere. What's important here is that trust. And then why it's safe. Why it's safe is the underlying securities is custody at the FINRA, SEC, all registered, bulletproof, custodian, right? I think that is a key component.
And so earlier today we had Zach from Grayscale talking about how the current structure of ownership and custody works when it comes to equities. He mentioned, you have a trader, they talk to the broker talks to the custodian, the custodian talks to the transfer agent. I think there was even more intermediaries in there that I might have skipped.
There was 5. And then we just had Pete on talking about these multi-layered industries, right? That are ripe for discussion.
Multiple rent seekers in a particular stack. And so it's no surprise that tokenization is going after financial instruments as a means of innovation. Where exactly in the traditional equity structure does a custodian sit, and how are you innovating, but also playing nice with some of the existing players?
So I think that what we have to be very clear about is that all the players that you mentioned, in a way we're using the word same tokenization. Each of the players actually talking about different ways of the tokenization. Right now, we use the word the same tokenization,
right?
But it's actually not exactly the same.
Different parts of the tokenization stack.
Yes, and then there's tokenization of the DTCC registered certificate.
Right.
There's a tokenization of non-DTCC registered certificate, and that how you actually tokenize them is very different process.
Okay.
That's why you don't hear securitized super say into this DTCC registered securities, and then vice versa, right?
Yeah.
So even though we use the same tokenization word, we have to think about it. Those are all different things.
Right.
However, what's important is that the goal is exactly the same. We're working towards putting all the financial assets or even real world assets on chain. And there will be multiple ways that we have to try, and we'll see what sticks, right?
And so Yes, sticking with the DTC, given the announcement today.
Yeah, the service.
The service. Tell us more about the tokenization service, exactly how we should see this coming out. It'll be released later in the year. What should people expect from the DTC's tokenization service?
Of course, there are a lot of discussion points, and there are so many things that I cannot really talk about in the details because
Yoshi.
of the lot of things.
Yoshi.
But
come on, Yoshi. We didn't bring you on here for nothing, man.
But what's important is that DTC is so proactive. They are extremely knowledgeable. They understand what needs to happen. I think that ultimately, what is ideal is that we don't even need to have the TradFi certificate. That's backing the tokens on chain, right? Right now, we're going to go through that step, but DTC also understands that the ideal scenario in the end game state, they want to make sure that actual certificate happens natively on chain.
Yeah.
But there has to be a process that it goes through DTC certificate, and then the DTC member like us support them to be creating the on chain version of it. So that's the step that we are taking together.
Okay. So in a lot of these conversations, we've been hearing that there's this massive disruption that's possible from tokenization. In fact, even some of the largest banks, I think it was Jamie Dimon came out and was like, tokenization is going to disrupt a lot of banks. You need to get in front of it and kind of be your own disruptor. Kind of like self-disrupt or self-destruct type of energy, right? How kind of aggressive is the tokenization of equities as far as kind of going after incumbents? To me, it seems a bit more kind of friendly. From my conversation with Arush, it actually unlocks a lot of different possibilities in terms of loans, in terms of better liquidity on the weekends. And then also, your business has several different lines that previously weren't necessarily possible because of the tokenization aspect. Maybe you could just talk to us about this disruption angle, and then I'd like to understand a bit better some of the angles and lines of business that you guys have.
I think when we're talking about disruption, we have to firstly visualize what it will be at the end game state.
Sure.
I think the end game state, what will happen is that everything's going to be on chain, and then basically issuers, which are the companies, including your company, has to be registered and created on chain to begin with, right? Otherwise, you cannot turn the TradFi company into the on chain company in the middle. And that's the reason why we are having this wrapped version of the tokenization, because all of the companies that exist right now is our TradFi companies. And in order to create a certificate that represents the equity portion of the companies, TradFi companies, would be of course TradFi certification. And that needs to be the tokenized, which means that we have to have some issuers utilizing that to make a token, right? So that's something that we are still dealing with. And I think in terms of the disruption, I think we have to think about what will be disrupted. I think what will be disrupted would be probably the registration, certification of the record, but there are many things that will continue to stay. I think when the original crypto, probably 2 summers ago, in terms of not the season or summer, crypto summers ago, we always had this ideal. There has to be all consolidated player who has the all custodian, exchange, execution, broker-dealer, and even dealing with the end clients at the exact one company. But look at it now, we are now having the separate responsibility and accountability, because this is how it works in order to create the right investor protection for the end customers, and then making sure that there is a less systemic risk as a financial services in begin with. So I think we have to, of course, think about disruption, but we also have to think about what will not change.
Yeah. Yoshi, one of the things that I think is interesting is in traditional markets, the way that order flow works in the global equities markets is quite different than the way that it works on-chain and in crypto. So Robinhood pays market makers for really good order flow on trading their equities, right? They pay to get pristine execution. But in the on-chain landscape, it's actually quite different, such that there's order flow that could be happening with tokenized equities on-chain that Alpaca would have access to, that there's a world where you guys could also get paid to give order flow to brokerages. So rather than paying brokerages or market makers for order flow, there is order flow that's happening, or there's orders and transactions happening on-chain that could be then given to other market makers or brokerages. Am I thinking about this correctly? I'm probably missing something. What is the nuance here about the kind of inverse relationship that tokenization of equities provides comparatively to traditional equities in terms of order flow?
Yeah, I'll think about it, much simpler. like regardless of its own chain or like tokenized securities or like regular TradFi securities, it works very much the same way. So I think when you say like global equities market, the reality is that U.S. equities market is extremely unique. This is only one equity market that has like tens of the exchanges, including ATS, which is the alternative trading system. It has like tens of them. And if you look at like the Tokyo or like London Stock Exchange, which are these the one of the biggest exchanges after U.S. stock market, has almost only one exchange. So in order for all those like tens of exchanges in the United States for the US stocks to survive, they had to create a bunch of the incentive systems. Like, okay, you charge fee for certain order flow, you actually pay for certain order flow. And because there are so many incentive equations by multiple exchanges, there is a player that was born, which is market makers. Market makers understand every single incentive and calculation of how the exchanges will pay or will take the fee, and then consolidate it and create the best algorithms to make money from order flow. Those are the wholesale market makers. Actually, like those Citadel, those guys pay out the money to broker dealers like through Robinhood. So the different flow of the money. The money that where it comes from is like coming from the taker fee, maker fee, bid and offer spread, and sometimes like those market makers take a position and make some positive net revenue, and they basically give that out as an incentive to the broker dealers like Robinhood or us or like most of the broker dealers.
Okay, so it's the other way around.
Yes. Okay. So like, but I think like what's important here is that like each of the exchanges, they're gonna fight for the liquidity. They're gonna compete for the liquidity, which means that they need to invite more people who can give the liquidity, which are market makers, which gonna attract more flow to come in, right? So which means that they're gonna create different incentive structure. You may just, exchanges may pay money to get the liquidity to come into your exchange, right? Some exchanges say, no, we're gonna be super straightforward. I'm gonna charge you fees. So I think there are many characteristics for each exchanges, and they're gonna compete for the liquidity. And I think we're gonna see very similar, narrative and situation that happened to the U.S. equities market. Again, U.S. equities market is very unique compared to any other stock market in the world.
Yeah. I'm thinking about the New York Stock Exchange, their alternative trading system. They're going to be looking to launch tokenized stocks very soon. I would imagine that we're going to see digital assets in terms of crypto native tokens right alongside tokenized equities. Who do you think is in a better position to win this race? Is it a team like Hyperliquid, maybe more crypto native? Or do you think New York Stock Exchange alternative trading system is in a better position to serve both markets?
I think like, in my very naive point of view, I think all of them coexist in my opinion. The reason why I say this is that like you see a lot of liquidity of the Bitcoin in the, of course, bunch of the both DeFi exchange and also the central finance crypto exchange. Yeah. And then we see Bitcoin ETF liquidity in the basically TradFi exchange as well. They all exist, and there are players who trade all of them to make the best out of it. So I think that's what, in my opinion, we will see. So I don't think it's going to disrupt each other. I think it's going to coexist, in my opinion.
Yeah. Is there a bit of a race right now to get tokenized equities available to U.S. customers? Because from what I understand is that there's some access and availability right now, but it's certainly not set. And I know there's teams that are launching U.S. equities live for U.S. investors very soon. What is this like? What is the current tokenized equities race for accessibility in the U.S. look like?
Very good question. So there is a lot of conversations around that. Like, of course, Genius Act. And then there's SEC actually clarified that crypto asset, we now call this tokenized stock, like we call it crypto asset security. That is the official terminology on the SEC website. Okay. And then they also clarified that crypto asset security, as long as it's security, it's security.
Yeah.
So that's what they clarified. However, that the members of the broker, basically the broker dealer like ourselves who are interacting with the end customers, are governed by the self-regulatory organization, which is FINRA. So FINRA needs to also understand how to make sure that broker dealers like ourselves are, treating these crypto asset securities in a very safe way. That's currently in the process, and it has not been yet, in a way, I wouldn't say to clarify, but FINRA is working really hard to understand that what is the process that broker dealers have to follow, so that U.S. customers can be advertised and actually buy and sell. And there are a lot of conversations.
Like we're very close.
Yeah, it's very close. It's very close. Of course, us as a company working very closely with the regulators to make sure that giving a lot of knowledge sharing. This is what we're doing. That's what's happening. So yeah, like it's getting close.
So what's interesting about this is that there's a lot of parallels to how the DTCC was formed, right? It was kind of this coalition of different people in the very beginning, market makers, firms, that were kind of like came together and then set like, here's how we're doing equities. And then the regulatory bodies came in and were like, okay, you guys are the DTCC, you guys have this control. It kind of seems like Alpaca is leading like this like coalition of like the tokenization, the tokenized version of this, kind of just trailblazing it, saying this is how it's going to be done. These are the companies that are leading, and the regulations kind of following it. Do you see similar parallels to the way that tokenized equity market and the way that it's kind of being formed to the actual equities market was formed in terms of the DTC and the members of the coalition?
Yeah, definitely I see that, because like, you know, I don't think this can be done by any one player, and that's the reason why you're saying like DTC is a membership, right? It's a membership of like around like 100 financial institutions, basically putting the, you know, capital and then making sure that like all the systemic risk of the financial services are mitigated. So it has to be a partnership amongst the people like who are getting involved, and that's the reason why like we continue to try to partner with as many players as possible in both new and old. Because like I think that is the only way to like accelerate what's happening into the tokenization. Like so that's why like we try to be as friendly as possible, try to be welcoming as possible. That's our attitude.
Yeah, very cool. I mean that's the way to do it. That's how you bring together the two worlds that are able to accelerate the entire thing. You converge them, and then ultimately you're able to harmonize the two of them, and it creates something new as a result. And that's what has been born out of this industry. Yeah. Very
Yoshi,
cool.
Enjoy your week in Miami. Thanks for spending some time with us, man. It's a big, busy week for tokenization. It feels like the whole industry is growing up, right?
Yeah.
Last time we were in DC with the regulatory side. This time it's like everyone's wearing a shirt with a collar or a suit. I mean, it's just...
You're not wearing a jacket.
Yeah, I don't know, man. I don't know if I can do that, Yoshi. Maybe one day.
We'll get him, Yoshi. We'll get him. Thank you so much for coming on.
Thanks, Yoshi. Cheers, man.
Yeah, pleasure.
Thank you, dude.
Take it easy, man. Alrighty, guys, we're just going to tokenize everything.
Let's
do a quick check-in. BTC still over 80 amidst the UAE-Iran escalated conflicts. We don't really care. We're just going to keep sending it.
That's absolutely the case.
We've got just bullish vibes in the room today. I mean, we are just, things are bullish. Like, the energy is up. This event is great. Gamma Prime has put on an amazing event, and we just have great speakers. Coming up, we've got a Coinbase Ventures investor following Han Ventures large round. We've got Jonathan King, investor at Coinbase Ventures. Guy's got a big smile on his face. I think he's stoked to be here.
I am very
Jonathan, what's going on, man?
Nice to meet you guys.
Yeah,
thank you.
Good to have you.
Everyone was saying crypto VC's dead. Today, Han Ventures comes out with $1 billion raise, man.
Baby. We're back.
That's $1 billion more dollars, and I'm hearing things as well for more coming this week, man. How are you, Jonathan?
I'm good. Really excited to be here. You know, Coinbase Ventures, we're representing for Consensus this week. We have Solana Accelerate, and going to spend a lot of time in the ecosystem and figuring out where builders are spending their nights and weekends, and those are the teams we want to back.
Yeah, very cool. Tell us a little bit about the Coinbase investment thesis. I mean, you guys obviously have one of the largest centralized exchanges in the US, so that provides a lot of synergy for up-and-coming projects. The base ecosystem is flourishing. Give us a sense of what you're looking for in early-stage founders.
Yeah, sure. So, just a bit of background on Coinbase Ventures. So we started the fund back in 2018. We invest entirely from our balance sheet. And even though technically, yes, we are a corporate venture arm, we, optimize for driving financial returns. I would say roughly 80 to 90% of the investments that we do are financial driven, 10 to 20 on like the strategic nature. And so more broadly, we primarily, I would say, focus on seed Series A. We are stage agnostic. We're being very concentrated in terms of where we're deploying capital, being very thesis driven. And some of the areas that I think are starting to manifest is really like things around stablecoins and payments. We're spending a lot of time in the intersection of crypto and AI and things that we're seeing with like agentic commerce and the launch of like X402 by Coinbase, and then just thinking about like trading and activity more broadly. So very exciting time, and we invest in all market cycles, so this is the best time to kind of be in the market for us.
Man, part of the Han announcement that was interesting to me was like we've raised $1 billion to do crypto, and then and AI agents.
Yes.
Right? It's very much, I think there's a lot of investor appeal in that AI kind of realm as it intersects with crypto. What is the kind of current stage of that intersection, right? I think in the beginning there was a lot of decentralized inference compute type of companies. Now, then we had that very interesting kind of fake agent craze, that meme coin craze. And then now we're kind of firmly in the agentic AI era. What does that look like for an early stage investor? Where are the convergence opportunities that you're seeing?
Yeah, so you're absolutely spot on in terms of how the intersection of crypto and AI has evolved, and how we tend to think about it is really there's a difference between decentralized AI and now what we're kind of seeing as on-chain AI. So decentralized AI was mainly democratizing access to inference and trading, compute, and models, and that's really bringing the elements of blockchain, crypto properties into the AI world. Now we're kind of seeing AI come into crypto in new and interesting ways, and that's either where you have agents that are being equipped with self-custodial wallets, right? They are actually trading and participating in some of these markets. We're giving agent stable coins as a new form of programmable and permissionless money, so that way they can transact. If you believe in a world where we're going to have millions, maybe perhaps billions of these agents, and they're going to be performing these microtransactions on behalf of humans, then you essentially need this kind of permissionless new form of machine-capable money, and we think that stable coins is going to kind of play a very important role there.
Yeah, man.
Obviously, you guys are big on stablecoins. Everyone is. I'm curious how you see the path of stablecoins progressing from here. It feels like it's still a national priority. Stablecoins are one of the biggest buyers of treasuries, and so it almost feels like, kind of for once in this industry's life, they almost they need our business more than we need theirs.
Sure.
How do you think this is going to progress and grow as we continue to proliferate stablecoins all over the world?
Yeah, it's a really great question, and you're right. I would say stablecoins and payments is our bread and butter, and that's not only from the investment angle, but also from Coinbase and where we're spending our time. And so, if you zoom out and kind of look at the numbers, right? So last year in the stablecoin market, $33 trillion in transactions. In January, we had 10 trillion. In the last couple of months, 26.5. So certainly the pace of an adoption of stablecoins is accelerated at this stage, and we're seeing better advancements with Genius Act and some of the things we're seeing from a regulatory front, that we're now getting more institutions involved in stablecoin markets. And that's just thinking about just the US, right? When you zoom out in the US and things around remittances and cross-border payments, right? And so we're seeing a lot of activity in emerging market stablecoin providers, whether that's localized stablecoins to just kind of building the existing payment rails. And so I would say stablecoins and payments is probably the most dominant topic right now, but also that's where a lot of builders are spending their time, and likewise, that's where we're spending our time from an investment perspective.
Yeah. Have you guys done a lot of deals this year?
We have. So we've done roughly 30 to 40 deals just this year alone.
And have you found there's a lot less competition than in the last year or two? Or has it been what's kind of the state of that side of things?
I would say anytime, the markets are, a bit slow, right? You will see that, rounds and fundraisers take a little bit longer time to come together. But for us, it's always been business as usual, right? We're always actively deploying capital no matter what's happening in the markets. And so we actually make some of our best investments within this particular sector. And that's because the builders that are just keeping their heads down and really spending time ignoring all of the noise, those are the builders that we want to back. And so we're constantly seeing a lot of activity. Again, being more concentrated, being very thematic, but we're actively deploying capital into a multitude of different sectors.
Yeah. Some of the context around that last question, follow-up here is, we've said that crypto VC is essentially on hard mode now. It's not easy. And now we're on expert mode. Part of the reason is because a lot of these companies have started to reach some product market fit. They're looking at larger check sizes, larger rounds. And then you've also got some of the more traditional VCs that kind of grew up in Silicon Valley and did really well are now looking at the industry as it's matured and coming in.
Is starting to come together.
A lot of those VCs are now coming in, and so it feels like these two worlds are colliding, and there's some more competition in some sense from the larger players, but maybe less competition from the traditional crypto VC native funds. Do you see this on the ground? Is this kind of the case?
Yeah, I do think like that convergence is happening, and primarily in the stablecoin payments, I would say asset tokenization sectors, because what's happening is that, you know, traditional fintechs, for example, are now starting to enter the crypto markets through things like stablecoins and, you know, building on top of blockchains to advance like their tokenization efforts, or leveraging, you know, APIs for embedding yield in like, let's say, you know, their products, right? So you see a lot of like, you know, crypto-enabled neobanks. And so it's very fun for us because now it's, you know, broadening our aperture for what we can go after from an investment lens, right? Like we always want to see, Coinbase Ventures will always be a crypto-native, crypto-first fund. And so we always want to see like there is some type of crypto blockchain component, right? So it gives us, it's given us an opportunity to kind of look at some of these traditional businesses and looking at some of the use cases that are starting to emerge.
Yeah. Are you guys also investing in companies that are like supporting the vision of like Circle and Arc? Like, is that like a thematic for you guys?
Yeah, so, you know, Coinbase Ventures, we are ecosystem agnostic, right? So you can look around and say any major blockchain ecosystem.
I find that hard to believe.
No,
I'm
we
sorry.
are, seriously.
I will not. But, all right, so tell me tell me some Tether-based companies that you've invested in, please.
Tether-based companies. Oh, that one might be a tough one, but we have a lot of Solana-based companies. So
Okay, cool.
contrary to popular belief. And the reason that we kind of set up that way is that, you know, again, our investment, you know, remit is to go very broad and wide, right?
Sure.
We want to back the best builders irrespective of the ecosystem. We actually carved out a separate base ecosystem fund that's managed by the base team, so that way they can optimize and focus on base builders. And then we're going to go after like some of the best talent that is out there, irrespective of the ecosystem. And that's why we're here this week to kind of spend some more time within the Solana ecosystem, Solana Accelerate being tomorrow, et cetera.
Nice.
Very cool.
Yeah, I mean, I'm curious what you're seeing on the valuation side. How has that changed this year with, you know, a bit of a depressed market? Are we still doing seed rounds 5 and 50, or are we down to like the $30 million valuation? We've done like 2 deals this year, and I think they were both around 30 mil.
Yeah, I think like it's probably like this year has been a bit odd in terms of it's ebbed and flowed on the valuations in my perspective, right? So where you have seen, you know, some seed rounds that were probably down in like that kind of sub 30, on average we have seen like kind of like the 50. And it really just is case dependent depending on like the sector, right? Because again, if I look at just like stable coins and payments, sometimes you're talking to very established companies that are ARR generating sometimes $5-10 million rounds, and those companies actually look like more growth equity type of plays. They are like some of the relatively agentic commerce AI businesses that are kind of starting to take some of that AI premium as well. So it really just varies. But again, you know, while we are valuation sensitive, our main thing is just thinking about value capture and what do we have to believe to get a very strong outcome on that investment.
Yeah, incredible.
John, what are the kind of key objectives for Coinbase Ventures when it comes into helping their portfolio companies? Obviously, people probably think, oh, like you're going to get listed on Coinbase. It's not that easy.
No.
What do you guys actually do to help your portfolio companies?
Yeah, so that is the one area that we cannot help with, and we will not help with. But, you know, most of our portfolio companies, they really see us as the API into Coinbase, right?
Sure.
So if they want connectivity into, let's say, our product teams, early access to products, if they wanted some like advisory support, we're always open to providing that. We have the largest portfolio in crypto, so 600 plus companies. So oftentimes you see our portfolio companies selling or collaborating with each other. And then we're just well connected beyond just having like the Coinbase brand on the cap table. We're well connected within the industry to be able to kind of facilitate intros where needed.
Well, Jonathan, go out there and get some deals, man. I appreciate you spending some time with us,
Thank
man. Do you have a lot of meetings booked up this week? Are you? Yeah.
Yes, it is
busy?
a back-to-back week, right? So, like I said, I will be at Solana Accelerate all day. So, for any of the builders out there, feel free to stop by, say hello. We can connect, and I'll be here throughout the entire week.
Hell yeah, man! Thanks for spending some time with us,
Thank you for having me, guys.
Appreciate
See you.
luck this week.
Thank you.
Thank you, sir. That is Jonathan from Coinbase Ventures, one of the largest, if not the largest, by portfolio companies, venture firms in this space. Powered by Coinbase's balance sheet themselves. Great guest, fun guy. We're going to take a quick break, guys. We're going to throw you onto the panels. There is some awesome panels happening today with a lot of institutional allocators. We're going to get you guys there, get them set up. We'll be right back.
And people do this because you want to receive this reward because Bitcoins are valuable and Ethereum are valuable. So the value of the crypto adds to the utility. The more valuable the crypto is, more utility that it has. So when you look at investing into crypto, we've launched in the last 13 years, I think, over 200 projects, 300 maybe. And I tell you that over 95% of them, they didn't understand this philosophy of why crypto, why do we need a crypto? Most projects don't need crypto. So when you invest into a token project, make sure that it has a utility, that the more valuable the token is, the stronger the utility will be. In our case, for Yellow, for example, it's the escrow mechanism. So you need an expensive token for people to not want to lose that escrow. So that's the basics of token investment. And if you just follow this very simple thing, you will, in utility tokens, not RWAs, then you will make it and you will invest in the next Ethereum or the next Bitcoin.
But if tokens are just a form of equity, and if you just look at it as that, would you say that, I mean, every company needs their own equity, they all need stock. So if it enables an open market to be, and a programmable market of, and that is the utility in and of itself.
Tokens are the product that the company has. It would be the iPhones for Apple. It's not the equity of the shares of Apple, but it's very correlated to the profits. So the more iPhones you sell, the more profits you make, and the more your equity is valuable. So there is a correlation, but equity is much less valuable than the sum of the value of the equity of a company is always less than the sum of the sales of the company. So the tokens is the product, not the equity.
Bryan, take us home. Yeah. Can they hear you? Can you guys turn the mic?
I know we're at time. Okay. Check. All right, here we go. I know we're at time, so I'll keep it quick. The reason why a token is that crypto has a superpower, price discovery being one of it, and rate discovery being the other part, and being able to create one of the best secondary markets in existence is another superpower of token. The but here is that every single governance token or every single token that has come to be has seen somebody come in from a centralized entity and change the organization structure. You can look at Aave, you can look at Kelp, you can look at Arbitrum. So when push comes to shove, you need to centralize and you have to like be able to fight that war and do the next right thing, but then it's not completely decentralized in the token. So tokens in and of themselves are a superpower to do a certain number of things, but you will almost always be giving away some form of control and rights that you have to be aware of.
Thank you guys so much for your perspective. Please give applause to our speakers. Thank you. Check.
And all of the people putting the program together, we have accomplished the objective of being the largest side event beside Consensus, in this case in Miami. So let's give everybody here and yourselves a round of applause to begin with. All right. For real, this is not possible without all of you and all of you people on the screen. We're going to introduce the next keynote. This is Guy from Phoenix, and he is going to talk about the privacy layer of tokenization. Come on up and tell them what it is. Let's give him a round of applause, everybody. And if you're in the back of the room, please make your way to the front or outside. Thank you.
Amazing. Hey, everybody. Glad to be here. I'm Guy. I'm the CEO of Phoenix. And I'm going to talk about the privacy layer that unlocks the Ethereum liquidity for tokenized markets, which is kind of a mouthful. I know it's a very long name. The short version of it is basically how can institutionals tap into the Ethereum liquidity without being compromised. So first thing, why do I care about privacy? I've been working about privacy-related technologies for over 2 decades, starting with trusted execution environment, moving to fully homomorphic encryption, as well as blockchain privacy. And about 2.5 years ago, started Phoenix, and I'm here not because I think privacy is important from an ideology standpoint. Yes, I agree that it's important, but really because it is a vital component for institutional when they're starting to move into the blockchain space. So let's just take a moment to understand what's been going on in the last couple of years. We saw significant growth in the business demand for tokenization. But as the demand grows, so does the problem that blockchain brings is being unfolded. And that is that everything on blockchains today is visible by default. What it means is that basically when you're working on an Ethereum ecosystem, which is where the liquidity is, where you want your tokenized solutions to be at, everything out there is public by default, and when you take something called like a block explorer, you can literally see the entire activity that took place. So the identity of who did the transaction, the counterparty, the amount, the position, everything is visible by default, which clearly is a problem for a business that wants to build a tokenized asset solution moving into the Ethereum ecosystem. So think about it from a business perspective. If you are now looking into building an RWA or stablecoin solution that is now running on permissionless blockchain, when you're building the stablecoin, the commercial flows, subscriptions on tokenized RWAs, everything around ownership transfers, balances, it's all out there and visible. So what is the default? What happens when entities are starting to look into where they want to build a tokenization solution? They would typically want to reach out to where the liquidity is, which is the Ethereum ecosystem. So as they start looking and understanding that the fact that Ethereum brings you full transparency and you're too exposed, they automatically default to the familiar environment of what they know, which is more of the permissioned blockchains. They give them control access, it's a familiar ecosystem, it's privacy by isolation, but what the permissioned blockchain don't give them is the access to the Ethereum liquidity. And this is where the problem lies. So we'll talk about how we solve it in a minute, but first thing, I just want to explain what privacy is because it's kind of a convoluted word. We've been talking about privacy for many, many years, but like different flavors of it. So privacy, think about it as an umbrella term that has two verticals. The first one is anonymity, hiding who is transacting. And the second part is confidentiality, hiding the content of the transaction. So anonymity in that regard is the ability to mask who is transacting with one another. So you have your identity concealed and the counterparty concealed. Everything else is quite visible. So projects like Tornado Cash that were out there for several years provided anonymity. It's definitely quite useful for users, but from an institutional standpoint that need KYC and AML, this is not the right solution. What institutionals are mostly looking is confidentiality. So a solution that would allow them to hide the content of the transaction, the amount that's being transferred, balances that you want to keep encrypted, position and strategy, while being compliant with what the compliancy team wants, which is KYC and AML. And to be clear, confidentiality or anonymity shouldn't contradict with the compliance need. Selective disclosure enables you to get both the privacy that you need and meeting the need of the compliance team by allowing certain conditions that you would be able to share the transaction data with your auditor, your compliance team, the regulator, and third parties under certain conditions. So with that, there's been several solutions out there trying to solve this conundrum of how do we bring privacy compliance into the ecosystem. Trusted execution environment, we're the first one trying to use hardware-based to achieve privacy. They're very fast, but there is a dependency on the hardware. And in the last couple of months, there has been numerous articles about the ability to break these trusted execution environment if you have access to them. So they're quite useful, but not in a decentralized ecosystem. Zero knowledge, that probably most of you have heard of, you can think about them as a very useful cryptography for scaling. It enables you to prove that something was done without revealing the source. And they're quite useful for anonymity and scaling, but they're not a computation technology. And then lastly, multi-party computation, the ability to split computation into multiple entities that are not colluding. This is very, very powerful, but the limitation of MPC is that it does not scale in a decentralized ecosystem. So now we're getting into the meat of it, which is fully homomorphic encryption. I know it's a very long name. Fully homomorphic encryption is a very novel cryptography that's been out there for several years. It enables you to encrypt data, compute over that encrypted data, and then decrypt the data in a very secure fashion. So the user has the data encrypted, then all the activities that are happening over the encrypted data, they cannot be seen by anybody outside of the users themselves, and of course the decryption part. FHE is very, very powerful, and one unique value that FHE has, which I think most of you are probably not thinking of today and probably should, is the fact that it's quantum resistant. And this is like the first time that I'm starting to put quantum up there in my slides, because quantum was always considered as this like thing that it's in the farthest distant future, maybe into 5 to 10 years is when we need to start worrying about quantum computer. But actually the quantum clock is ticking. And about a month ago, there was a research published that demonstrated there is significant improvements in the quantum cryptography, which actually now enables entities in probably somewhere between 2 to 3 years to break ECC, elliptic curve cryptography, which is the core fundamental cryptography that many of us are using. So now people are starting to think, you know what, I actually need to make sure that I'm not only quantum safe in 2 to 3 years, I actually need to make sure that I'm even quantum resistant now, because quantum computers that are going to come there in like 3 years are actually going to be able to see all of the data historically. So put it up in your decision tree when you're starting to look about solutions for your tokenization platform. And this is one of my last slides. I just want to make sure that people understand. Integrating privacy is a lot easier to deploy than people think of. If you take the standard that's being used today in the Ethereum ecosystem, ERC20, ERC20 has all the transfer, balances, amounts out there in the public. It does not have an ability to do freezing and gating, but with less than 50 lines of codes, you can now get into a different standard. We use the FHERC20 standard that gives you the option to pick if you want the balances and assets to be either public or confidential, if you want to have compliancy through selective disclosure, and if you want to have freezing of the assets. So it's becoming extremely easy today to make sure that you don't need to actually work on the permission blockchain because you feel that that's the safe environment. You can actually now access the Ethereum liquidity through a privacy layer. Ethereum is the core underlying settlement layer that has all the DeFi and all the liquidity out there. The FHE privacy layer that we're building is on top of that, and then institutional applications are going to be the ones that are going to utilize all of it. So that's it, and I hope it's quite understandable. If anybody has any questions, I'm going to be out there after the talk. Feel free to come and talk to me.
Hello, everybody. Can you hear me? I think we got to turn me up a little bit. I can always do the cuff the mic thing. So, we've heard a lot from a lot of different players in this space. Now we're going to take a deep dive at some institutional players. We're going to talk about what makes institutional capital move. I would say that if this was happening 5 years ago, that JP Morgan, Dennis and his team at JP Morgan probably would have taken a real close look at the agenda. Not to say that they haven't today, but the times have changed and they have came with us. So let's give a round of applause for the next panelists. We're going to get into it. Let's go. And if you could turn my mic up a little bit, that'd be great. Here we go. We're trying to line up the Hollywood squares with the live actors, and here we are. So again, my name is Chamin Malhi. I'm with Gamma Prime. I play the role of janitor. Sometimes I do more than just clean up, and I have the privilege of speaking with these esteemed and established guests. Thank you all for being here. Take a moment, please, to introduce yourselves and let us know about what still needs to happen before tokenized assets or digital assets become a standard portfolio allocation rather than this like exploratory venue.
Hello.
There you go. You're good.
All right, I'm Dennis Crisallo. I'm the head of asset wealth management for Connexus, which is JP Morgan's blockchain business unit. My background is I spent 10 years building portfolios of hedge funds, private credit funds, co-investments, and as part of that, I was doing due diligence on crypto funds. Made the pivot over to Connexus to focus more on tokenization about 4 years ago. And to answer your question, give the quick version, I guess, around what it's going to take for institutions. I think for tokenization specifically, you need better products. You need products that are actually better than what you could get available in a BAU or business as usual manner today. I think we're getting there, and I think some of those things will be around liquidity. It'll be around precision of being able to move these assets. And then also some use cases around collateral and composability, but you need better products.
Better products. That's what it's going to take for the big boys and girls to get in deep.
So hi everybody, my name is Sam Kincaid. I represent State Street Investment Management. State Street Investment Management is the 4th largest asset manager in the world. We are working on a lineup of products. My role specifically is to do the digital strategy, which includes bringing crypto exposure to traditional investors, as well as new tokenized products that have new features that are attractive in the DeFi space.
Hey everyone, my name is Katrina. I run Portal Ventures. We're a dedicated pre-seed fund. And the thesis goes, the highest alpha in crypto still happen at pre-seed if you can be early and right. Very easy to remember us. We only lead. We only come in at the first institutional round, and we don't back competitors. So once we're in, we're all in. That's our thesis. Now I'll be augmenting the panel with some venture perspectives.
Hi, everybody. My name's Renee Berman, and I'm an advisor to a private equity venture capital fund called Motive Partners that only invests in fintech. Previously, I was at DTCC in their digital asset group. And to answer your question, I think new products and products are important, but I think distribution is really critical because if you don't have distribution, you don't have anything.
If you build it, they won't come. That's what I'm hearing. Beautiful.
I forgot to answer the question, so let me.
Yeah, go for it, Katrina. Would love to hear it.
Yes. I would say from the venture side and what I'm seeing on the earliest stage, I think founders need to start thinking of themselves as an asset manager versus just entrepreneurs. Over the past cycle, we've been just optimizing for the yield when people approach on-chain product. But then now, when you talk to the institutional, and this cycle is all about the integration between traditional finance and DeFi, like risk is number one, like regulation risk, which a lot of you can vouch for. So I think that is the missing link right now.
We'll put it over to Richard.
Well, it's really a pleasure to be here. My name is Richard Dolan. I serve as a special advisor to Polymath. I oversee and run the Dolan family office. And when we were looking for a company in the world that can tokenize $1 billion of assets, that were cool, significant, and culturally significant, from sports investment to film to media, from our friends like Mike Tyson or Drake or LeBron James. We found Polymath and was so in love with their technology and all of its underpinnings, knowing that we operate in a very highly regulated space where compliance is not our most favorite thing, but it's a must-have and a non-negotiable. We went all in on Polymath. Which is why they're likely being listed over the next 60 days in America, and we're staying behind them. So to answer your question, and just want to say thank you so much to this panel. Like, I've never seen so many good-looking people all on one stage at the exact same time. Like, isn't that true? I mean, I got one applause, absolutely. And smart. I think, as I said earlier on, I think regulatory finality, not interpretation, is the time for blockchain. I think right now, rather than looking at it as a nice to have,
Alrighty, guys, welcome back to the Gamma Prime Tokenized Capital Summit. We're here with no other than the CEO himself, Evan. Oh. Welcome to the show, man. I like your tie.
Thank you.
Very nice.
People know me for it. So.
Yeah, exactly.
Yeah, well, it's a pleasure. Yeah, absolutely. Thanks for having us out, and thanks for spending some time with us. I think it'd be most helpful for anyone who's unfamiliar. You guys put together a great show, pulled a great crowd. For anyone who's not already familiar, a little bit about yourself and about Gamma Prime.
Sure. I'm Evan Su. I'm a longtime commodities trader. So I've been doing crude oil, gold, futures, and treasuries for over 30 years. People actually don't believe it because they don't think I look old enough. But I actually been doing it over 30 years. And what we learned with Gamma Prime and all of our sort of startup colleagues was there's a whole block of these kinds of investments that are really hard to get access to. So how do you find a good commodities trader, a good Forex trader? Oh, hello, please.
We're good. Oh, we got some food coming in.
Yeah, we did an interview, so
thank you.
Hedge funds, private equity, these things that most people are sort of not really familiar with, but actually make great investments because they're different from the stock market. Yeah. They're different from bonds. Not that they're somehow special, they just don't all crash together. And that gives you real diversification. And so what we built Gamma Prime for was essentially look, let's make these sort of alternative investments more accessible to more people. So you still have to be accredited, which is a requirement in the U.S., to do any sort of private investment. Globally, overseas, they all have their own sort of accreditation requirements. So you still have to be accredited. Yeah. But most people don't even know where to go to start to find these things. And so we figured we'll put them all in one place.
Yeah. And so who is the primary customer? Because like you said, plenty of experience opening up access to a lot of these alternative investments. Yeah. Who is the primary, buyer and in demand of these things?
So I would say we range anywhere from the sort of basic accredited investor that's maybe putting in, $10,000, $20,000, $50,000 into an investment, all the way up to just short of the institutions.
Okay.
So we'll sort of end right around the ultra high net worth, large family office. We have several family offices that are in the $1 billion range, which is quite large, but it's not institutional. Right. It's not a pension fund. It's not like sovereign wealth or something like that. So we sort of span that kind of bracket. Yeah. And those are often the people that have a hard time finding these things.
Okay.
If you're an institutional pension fund for Chicago, you know where to find this. They'll come find you.
Right.
But if you've got medium, high net worth, nobody will come service that market because strangely, it's too small. It's just not worth their time.
Yeah. And so are your clients active digital assets investors that are quite, longer term in the space, quite bullish? Or is it more like an education to allocate to digital assets? What's kind of the spectrum of clientele as far as their exposure, interest to this asset class?
So actually, most of our investors are not investing in digital assets. Right. Okay. Most of the stuff on the platform is traditional stuff. So, but it's just exotic. So reinsurance is a great example. Litigation finance, film finance. We have strange things like that. But then there's a large crypto side too. So what we learned is that people want what they want. They come in, they have an idea of what it is that they're after. We just help them fulfill that. So recently, a thing that's been in hot demand is pre-IPO secondaries.
Yeah, definitely.
Right? It's just, we just go where people want. So our job isn't to sell them. Our job is to make it available, to vet it, to make sure it's legitimate and it's properly audited. But what we've learned is there's a strong demand for crypto among certain types of large family offices. Oftentimes, the boss is like, hey, go out and find me 15% exposure in our portfolio to crypto. And they come to us and they're like, I don't want to just buy Bitcoin. Like, that's just like super volatile. What else do you have? We're like, we have tons of delta neutral things that are funding the infrastructure of crypto, like staking and restaking, liquidity provisioning, buying over the counter. And for them, this is often a surprise because they think, oh, all I can do is buy meme coins. Like, that's crazy. Like, I don't want to do that. But when they discover, no, you can fund the backbone of crypto and get paid for it, that's often much more appealing.
And so, time and time again, every guest that we've had up here has been preaching tokenization. This has been, it really feels like the narrative that's taken hold of everyone. As you're looking at more exotic alternative investments to list on Gamma Prime, how does the tokenization thesis play into it? You mentioned film industry, delta neutral, all these things. How are you offering some of the more exotic tokenized products out there, be it RWAs, be it airliners and on-chain credit and all these different things? How much of that opportunity space are you starting to explore? And what are you hearing from the demand side about what they're most interested in?
This is maybe a bit controversial, but we take a very pragmatic view on tokenization, which is why. If there's not a reason to tokenize, we won't do it just for the sake of doing it.
Right. Yeah.
And so what we find is that, let's say you're investing a large investment into a hedge fund. There's no need to tokenize any of that part of the transaction. Now, it's a lot clunkier if you do it through kind of the old-fashioned way, but you can just do a lot of digitization without going all the way to tokenization. Now, on the other hand, you have certain applications where being able to fractionalize would be amazing. So I'll give you an example. We have a fund of funds, we call it Fund Zero. It's an internal fund of funds. It's the only thing that we do in-house. And what we do is we essentially blend funds for people. And when you put all those into a bucket, the next thing people want is, give me something where I don't have to put $100,000 in. Right. Give me something where I could put in $500, $2,000. And normally, there's actually, most people don't know this, but there's actually rules among hedge funds in Cayman Islands where there's actually a minimum investment of $100,000. And that makes it really difficult for a lot of these people to get into. That's a good place for tokenization. So what we end up having is you have two tiers. You end up having a secondary tier, which is a tokenized version of a block. And that tokenized version allows people to take much smaller chunks.
Yeah, I mean, I think the why question is something that we hear a lot about. You have an asset, you tokenize it, then what, right? And just kind of like, what are you doing there? What could be interesting from the kind of fund perspective, I'm curious if you guys are already doing this, is there was a lot of centralized exchange and decentralized exchange arbitrage. There still is. That was a large generator of alpha for a while.
Yes.
I think now perhaps there's going to be a tokenized commodity equity on-chain on a venue like Hyperliquid or a different venue, and then the assets price on Schwab, on the NYSE, on CME, on other brokers. Kind of talk to us about what you're seeing in that kind of basis trade or arbitrage opportunity. Is there real value right now in that? Is there alpha in that, or is it still too small on chain?
I'll tell you, because that's a very specific kind of trading style, I don't feel like I can really speak to it because I'm not in that particular space. I can tell you what I've heard, which is that the straight arb play is actually pretty arbed out. Like, there's not a lot in there for that. But what you do get is you get people sort of arbitraging, I would say, like the second order effects, right? So it might be like arbitraging the difference in the basis trade prices on different exchanges, right? Or selling one and buying the other. But it's something that the straight arb play is, as far as I understand, is no longer really viable. But again, because that's not my particular area of expertise, you could end up with some guest that comes and is just like, oh no, he's totally wrong. That's live and well. You just need to know how to do it, and it's in this corner, which is always the way trading works. It's like you can't be a master of the entire space.
We love the controversial opinions. You shared a couple already here today. What are some bold predictions you have for the second half of this year?
Well, I'll be straight up. I went on. I'll give you two of them actually. So one of them is Bitcoin has been behaving a lot like in the same way as gold and 2-year treasury notes and stuff, when every time there's a war scare, right? So every time crude oil goes up, all those three assets dive down. But if you look at the overall trend, you're seeing a divergence. You're seeing 2-year notes having a lower low, like crude oil is essentially made like two higher equal highs, right? So if you look at the Brent, like crude oil price, it's like hit 115 twice in about the last month. You just look at what happened with 2-year notes, it hit a lower. So that's like people are scared and getting more scared. If you look at gold, it hit a higher low. So it looks like it's like bombing out. You look at Bitcoin, it's pretty much breaking out to like new highs. It's breaking over that. If you're a technical trader, you know, the resistance area at 80,000, you're looking at underlying accumulation. I'm actually long it for the first time in a year and a half. And I'm long it with some size. The other thing that I think people are completely overplaying right now is the inflation scare. I think people are talking about, you know, oh, this war is like going to, you know, drive all this inflation into the system. And, you know, this is my personal model, this is not the truth, is that inflation drives into markets when there's strong demand. When people have jobs, they've got money, and then they like push prices up. When they don't have money, what happens is it just drives into like pushing the economy down. In other words, if you don't have money, what are you going to do? You're going to stop going on vacation, or you're going to stop buying the extra television. It's not going to like, you're not going to let the prices pass through. You're just going to stop spending. Right. And I think what's going to happen right now, if you look at the way people are reacting, they're all focused on inflation. I think if you look 6 months out, you're going to see that whipsaw back the other way, and it turn into pretty intense recession. And I think these 2-year notes, you know, are going to be way up, meaning the yield's down. I think gold's going to be way up, and I think Bitcoin's going to be up too. But again, that's not a popular view right now.
Yeah, we had Kathy Wood on, and she was saying that there's actually like this good deflation happening from AI, from productivity, and just generally in the way that inflation is came way down. And she was kind of formulating that this good deflation is very bullish for markets. Liquidity is returning. If you look at the Fed balance sheet, its QT has ended, it's bottomed out, and now kind of some stealth QE has begun.
Yes.
Yeah.
Well, I would say the stealth QE is essentially the turning of the business cycle. You know, I think, you know, interest rates are on the cut, and I think if you look historically, an oil price shock, people don't remember this, but in 2008 there was an oil price shock just before the like crash as well. Yeah. All it does is just adds fuel to the like economic cycle. You're adding a tax, the energy tax, when people can least afford it. And I think all this
shouldn't that be the end of the business cycle?
Yes, that's what I mean. I think we're headed towards the end of the business cycle, and we're headed down, which is going to mean not inflation. It's going to mean massive deflation, and I don't think deflation of the type Kathy Wood's talking about, which is kind of the good type. I'm looking at business cycle type deflation, like job losses. Last year, it looked like they had decent job gains all year, and then the BLS revised their job numbers down, and it turns out we had almost no job gain the entire year. Remember, you need 100,000 per month just to break even against like the population. So we're already in a bit of a jobs decline. We're in what they call the flat part of the beverage curve. And I think that it just hasn't hit yet. I don't think people realize what's going on.
Yeah. So you're bullish Bitcoin more in the interim then?
Yeah, I actually am long. And like I said, it's long. First time I've been long in about a year and a half.
Yeah.
So
very cool.
Yeah.
Well, Evan, we know you got a panel to go to.
Yes.
Thank you for spending some time with us. Really, really appreciate it. And thanks for having us out.
Thanks for coming out.
This place is still absolutely slammed. It's 4 o'clock. I mean, people are still here.
We actually are consistently the biggest side events at Token 2049, at Consensus, at Abu Dhabi Finance Week.
Yeah.
And it's all free. So
did it again here in Miami.
Yeah.
Thanks, Evan.
Good to meet you.
You're the man, Evan.
Okay.
Appreciate it.
Thank you, guys.
We'll see you next time. Thanks.
Guys, you heard it here. Oil is the end of the business cycle. Pack your bags in cash and get your bunker ready, ladies and gentlemen. Evan is going to arb your arb. I'll tell you that, man.
Thank you.
Arb your arb.
We'll see. I like going on record like this because, like I said, everyone talks about it after the fact, but this is like making a call when it's not popular.
Yeah.
And if it works out in 6 months,
it is.
well, then I can be like, hey, I was on record for it.
We'll stand by it.
Guys, we're going to pass you back to the main panel stage. The end of a panel is wrapping up with some heavy hitters, and then we're going to get them on the show. We'll be right back, guys.
Not quite there yet. And I think there is a lot of learning and education that needs to happen for these institutions, specifically on wallet, which I thought was interesting that you brought up, because they don't necessarily want to hire another provider. They don't want to, pay someone else to hold the wallet on their behalf. They certainly don't want to self-custody these assets because that's incredibly risky for them. And so I think more likely over time is you're going to see this third phase of wallets where they're more integrated into traditional infrastructure, so it sits side by side with a regular way custody account or brokerage account.
I got a confession to make. It took me 2 years to accept the fact that a wallet can be outside of my pocket in order for me to trust it. And I lost out on some opportunities between 2016 and 2018. But true story. You know, and I was an old dog looking at it. You wanted to say something?
Yeah, no, I was just going to give you a very specific example to sort of illuminate why institutions might be slightly hesitant in this space. So, for example, if you're using stablecoins, and so you have USDC on Solana, you have USDC on Ethereum, you have USDC on Avalanche, those are all three, even though they're the same quote-unquote asset, they are different in your wallet, and they sit on different chains, and now you have to manage liquidity on 3 different chains. You need an interoperability provider to be able to send those assets between those chains. So it's not like where you had before one bank account that had X amount of dollars. Now you have 3 accounts on 3 different chains, and you have to manage that liquidity across each of those 3 chains. So from an institutional perspective, it actually makes it more complicated without buying or appending on additional tools to help you facilitate that interchain complexity.
Well, you make a good point. Yeah, I want to hear what you have to say and get back into that conversation on institutional adoption. So please continue.
Yeah, so I was just going to make a point that if in that scenario, not every blockchain is the same also. So if you're an institutional investor, there are new risks that you need to take into consideration because the financial risks might be the same, but the operational risks are very different. Now you have to think about governance risks. You have to think about smart contract risks. You have to think about interoperability risks. There's a whole host of new risks that you need to take into consideration. And I actually worked when I was at DTCC. We wrote a white paper specifically around the risks of issuing tokenized securities. And then most recently, I've been working with an organization called GBBC, which is the Global Blockchain Business Council. It's great. And I've been working with them and Oliver Wyman very specifically to work on, to identify what are the very specific risks if you're issuing on an L1 or an L2. Like, what do you need to think about? What are the operational risks that are new and novel for your consideration? Because I do think investors need to take that into consideration.
Something else I'll add from a venture landscape is when you're thinking through the idea, like, and especially if the end goal is to integrate with this institutional, there's always the question of buy or build. And I spent some time talking, I can't really name which one, but kind of collecting requirements almost in a way from some of these largest players. And there are 2 distinct areas, and maybe some of you will resonate that like they will likely buy or work with versus build themselves, because when they build, they either cannibalize you or do acqui-hire. One is the last mile integration. For example, when it comes to payment, the last mile where how you onboard different vendors locally in emerging regions, that is one area like these large players will not likely touch. The other area is exactly what you described, kind of this connective tissue between DeFi and CeFi. Even for example, like if I manage investment management and then I'm trying to deploy into a DeFi protocol, like what do I choose between private credit, Aave, and Athena, and all of these, and how do I rebalance? Like actually, it's very complex to do that. And if you can abstract that away to give almost like a UX layer for institutional, I think that's quite interesting and what we are seeing. So yeah, I just want to augment that with the early stage lens.
Yeah, no, absolutely. That's very good color and perspective to be shared in this discussion. At institutional size, what are the biggest risk filters that determine whether a tokenized opportunity is actually investable? Is this liquidity? Is it governance, compliance, operations, concentration, something else? Let's start with Richard, if you have some thoughts on that.
I think it's none of the above. I think those are all the obvious things that we have to look at, check out, and ensure we're in alignment to. We all are operating according to our errors and omissions insurance. We cannot step outside the confines of what compliance will allow us to be regulated within. But I think what's more important is not so much which area is most important or the filter in which we must look through, is the filters in which we are looking through to recognize the opportunity at hand. I'm going to say this in 90 seconds because I want to make sure I'm courteous to my panel and my friends.
It's a soft stop. Keep going.
But check this out. We folks, you guys remember the game musical chairs? When the music is playing and it stops, those who get a seat play on, those who are left standing are out. Now imagine this, we have here it comes, over 50 million people circling chairs right now, metaphorically speaking, because we have a baby boomer turning 75 every 7 seconds in North America. There's one right there calling and telling me I'm right. Now, with that being said, there's only 450,000 chairs. So 50 million circling 450,000 chairs. What does that mean? While we have financial advice givers, financial planners, investment advisors, and portfolio managers retiring equally at the same rate boomers are, you've got billions coming, you've got millions in need, and no one to help. So I believe the filter is the opportunity filter, and infrastructure is the only investment that both Wall Street and Main Street should come together and build, because it's not about that world and our world, it's about this is our world. And for us to become the custodians and futurize our platforms and architecture, the plumbing and the electrical, as one. From JPM to State Street to money managers and great special advisors, all of us must really sing from the same song sheet. So I think, my friend, the filter is opportunity.
Dennis.
Sure.
Yeah.
No, I think the conversation that we have around risk, I think maybe one nuanced answer to think about is we constantly get the question of like, what is the benefit of being early? You know, like we could see this play out, we could wait for a bid, we can let others go ahead and tokenize these funds and buy these tokenized assets. Because as mentioned, you know, we're not quite there yet as far as delivering a better product in a lot of respects versus what you can get regular way. And so what we have to describe and what we have to talk about a lot is that the opportunity cost of sitting still right now is great. And you need to get going on these kinds of projects because they do take a while. It is a journey to be able to bring a fund on chain. It is an even longer journey to be able to distribute that fund very scalably to an investor base, whether that's institutional investors or high net worth investors. And so the opportunity cost of sitting still is the risk right now.
But you got that edge. I mean, JP Morgan, make no mistake, like you have distribution channels that are like, I got less neurons connected in my brain than you have distribution channels.
And it's helpful, for sure. I mean, you know, we're blessed with having a lot of different businesses that we could use and develop use cases with, but with that comes size, and it takes time to get things done, and we have a lot of different people we need to convince that these are good ideas.
Well, my goal is to get enough of a critical mass of buyers for JP Morgan to just buy us instead of compete one day. So make no mistake, you heard it here.
Yeah, so I think there's many different risk lenses that we look at when we look at investments. I would say maybe some of the top ones is the first is regulatory. So I think the Clarity Act will help bring additional guidance to sort of the regulatory perimeter around securities with the SEC, and then commodities and other things like that with the CFTC if we get one. And then, you know, I would really look at the who is tokenizing the asset. You have third-party tokenizers that are not related to the issuer that are creating tokenized versions of assets. And so I won't name any names, but there's a lot of experimentation going on outside of the United States. That's for a specific reason under certain SEC exemptions. And then you've got other tokenized assets on other platforms that can potentially offer you some utility, but you introduce additional counterparty risk. And then there's sort of issuer-led tokenized assets out there. There's only a few that have really been successful so far, and there you're taking less counterparty risk, but you're also sort of giving up some of the utility that you might get because those tend to be whitelisted or allow listed, and so you actually introduce somewhat of a friction when you purchase these types of tokenized assets because you're not able to sort of pledge them into a protocol like you may want to. Redeeming out of those assets might be slightly more challenging, take potentially longer than buying a traditional share on a broker. With your broker. And so I think there's trade-offs. We are definitely seeing more interest in tokenized assets on chain. But then, even to Renee's point, each blockchain itself has additional risks that get carried forward. So I think you have to look at sort of multiple levels when you're looking at an investment. And definitely the tokenizing agent and the issuer are two things that you really should be paying attention to before you invest large scales and have those tokenized assets reach any type of scale.
I'm hearing trust. There's a lot of trust underneath that.
Trust, absolutely. And then I think for large players like State Street and others on the stage, that trust takes years to build and seconds to be broken. And so any kind of hack or something like that is something that we are very, very conscious of. So reputational risk and establishing that trust with investors is of the utmost important. The utility comes second. And then, eventually cost will drive a lot of our efforts as well.
the question is what's investable. Of course, what's investable for me is very different from what's investable for the rest of panelists. But from the venture arm, I think about this quite a bit. Like, what's the common denominator of some of the most successful companies, including within my portfolio and across the board? I think it's obsession, right? Especially at early stage. It takes a long time for my portfolio company to get to work with one of these guys. And obsession is how they generate unfair advantage through depth, through time. And the other one's obsession is how I know they wouldn't give up even tomorrow. No one wants to back them, because I've seen it over and over again. If you just stick it out and keep banging your door, bang your head against the door, you will work. But you just have to have the support to hold it together, and that is the most important at the pre-seed. So yeah, that's obsession is what's most investable for me.
No, I love that. Thank you. It's inspiring for me. Over, under, around, or through. Pick one and keep trying, right? Yeah. That resilience. Love that.
I know we're running out of time, but just as I mentioned earlier, risk is a really key thing. For institutions, the risks that you mentioned, they're all important. It's not one or the other. I think you have to look at them all in aggregate, because you need liquidity risk. I mean, there's liquidity risk, there's regulatory risk, but there is a bit of a hierarchy. But even if because you do need to start with regulatory risk, because it needs to be you need to ensure that you're compatible with.
Not in prison. Yeah.
But you even as you go down the path, all of the risks I think you need to take into consideration. I don't think it's one versus another.
Yeah, I couldn't agree with you more. And there's so much to consider. That's kind of the question is alluding to how that hierarchy looks as you see it. We've gotten some pretty interesting answers. I want to wrap this panel up, and I want to ask a few of the panelists here this question. Over the next few years, which areas of tokenization do you think will attract institutional capital? And if anybody says what's happening right now, I mean, please try to look a little bit further beyond in years. Like, where is it that people are not seeing? Right? Where is the puck going, as a Canadian would put it, right? Because that's where the best player in the world was. He wasn't where the puck was, he was where it was going to be. So where's the puck going to be as it relates to tokenization that you think will attract institutional capital? I'm going to give you a couple of categories, and you can go completely out of this if you like. We're looking at funds, treasuries, credit, stablecoin, deposits, infrastructure.
I'm going to give you one different. I believe that beyond the tokenized treasuries, private credit and structured credit, private equity, venture capital, beyond all those things, and I don't want to compete with my panel because they're incredibly brilliant, I think it's infrastructure. I think infrastructure will be the future investment for institutional money to be moving into. And I say that as a sitting institution who believes in an institution like Polymath, is that I need that utility to work impeccably well with my compliance, my regulation, my investment mandates, and all of the things that are orbiting our dollars, our capital, and our assets. So infrastructure would be my statement.
All right, let's go to Dennis. Where do you think will attract institutional capital first in the next few years?
Yeah, I'm going to go with a barbell answer. On the one end, very boring deposit tokens. And then on the other end of the spectrum, tokenized private equity is going to come back and come back in a big way. And then lastly, for a bonus, tokenized identity, I think is going to be really important 5 years out as far as enabling friction-free investing and composability on all the cool stuff that's being built.
Yeah, we're going to get along just fine, you and I. Who's next?
Hey, by the way, isn't it funny that the biggest guy on stage is the one who used the barbell analogy? I find that interesting.
I don't know. You're pretty big, bro. Yeah, you can keep it on.
Okay.
No trouble.
I think one of the biggest opportunities that we're going to see is around collateral and collateral mobility, and that's going to bring institutions to the space. So not necessarily from an investment standpoint, but collateral is going to drive institutions into the market, because the ability to move your collateral instantaneously, globally, 24/7 is a phenomenal use case for blockchain technology. It's something you cannot do on today's rails, similar to the DLR example I used earlier. And the savings that it will generate for institutions is significant. I've heard upwards of 300 million, annual savings just in interest, because it allows trapped capital to be released that's being held globally by institutions. And I think that's probably one of the biggest use cases that will bring the market. They'll bring people to the market and will force them to figure out like how do they actually support digital assets and engage in them.
Yeah, just as like a retail, like a QP, I would love to see a world where I can take that piece of paper, my private investment, and collateralize it. I just can't do that right now. So
I'll go beyond financialization. Financialization is one expression of what blockchain is good for, but another expression is actually this incentive. So blockchain as crypto rather, as a incentive for productive action is actually one powerful mechanism of blockchain that has not been fully realized. For example, at the frontier tech, and how do you use crypto as an incentive to get people to do the stuff they wouldn't otherwise do to bootstrap a new type of technology? And I'll give a quick example. We invested in, quantum crypto 2 years ago, where quantum computer is going to be one of the most transformative technology after AI. However, it has a go-to-market problem. Like if I cannot cryptographically tell you, hey, QPU is actually superior to GPU, why would you spend $15 million to buy this computer I don't even know if I'm going to use? So this is where, let's call it Deepin 2.0, like this thesis to fractionalize and create the first world shared quantum computer using cryptographic. And you have a, I don't want to get too technical, but basically every provider will join as validator to provide a compute, and you have go-to-market layer through crypto incentives. Right? So this is kind of just a sneak peek into what we're looking into, sitting at pretty early.
So I think I mostly agree with Dennis and with Renee around maybe the treasury exposure is really what's happening right now, and I think that's going to continue to grow over the next year. And then in the next 5 years, once we have tokenized equities and other things like that, I think something that will come up in the next 5 years is really like direct indexing tokens. Or you can almost think of them sort of as vaults. And I think the concept that you can highly customize for an individual investor the types of assets they want, and then sort of automate the actual purchasing and fund construction, I think that's a really interesting area to watch. And I think that's, again, sort of driving additional utility to be able to customize for each individual investor. I think that's going to be a big theme over the next 5 years.
All right. Well, hey, thank you, everybody, for this interesting conversation. I look forward to carrying it on longer with you guys, either in the back room or over a coffee through the week. Everybody, thank you for taking part in this conversation. Let's give the panelists a round of applause.
Check. Hello, everybody.
I'm Evan Su. I am one of the co-founders here at Gamma Prime. We are your hosts for today. Welcome. This is the biggest event, side event of all of Consensus, and we've also been the biggest one for Token 2049 and Abu Dhabi Finance Week. Thank you for coming out. We love meeting like the community and having you guys come out. I want to tell you a little bit about what Gamma Prime is, because a lot of people are like, okay, I did this Gamma Prime thing. Like, I don't really know what they.
Alrighty, guys, welcome back to the Tokenized Capital Summit. We are here with Alpha Growth founder Bryan. Bryan, welcome to the show, man.
Andy,
thanks for coming, man. Yeah, man, good to have you. How's the event treating you?
Oh, it's a wonderful event. We were at the Singapore event and the
Nice.
Hong Kong event, and it's one of the best events of Consensus. Yeah.
Man, there's this ongoing DeFi, Layer Zero, Kelp DAO, Aave drama going on right now, man. I don't know if you saw any of the stuff from today. Aave's doing a lawsuit against the lawyer group that is trying to effectively confiscate the 30K frozen ETH on Arbitrum to repay previous DPRK victims. Layer Zero founder Brian Pellegrino came out with his statement today, effectively saying, I had no idea that Kelp DAO was running a one-of-one and had billions of TVL. Who would ever do this? Kelp DAO saying that was Layer Zero's default configuration, and of course that's what they were doing.
Yeah.
So here's where we're at. What's your read on this, man? Where are we at here?
Okay.
Give us your honest take.
Honest opinion, it's a multiple failure from a multiple entities. It's a problem for Layer Zero because now they have a brand issue. Like, how can if I'm there and I'm trusting Layer Zero to be my canonical bridge, if they're just saying, oh, it's not my fault, then how can I trust them ever again with any other token in the future? So that's a problem. The other problem is Kelp itself. Why did they only have one-of-one validators? Like, ostensibly, if you look at the evidence, it seems to me that DPRK hacked the two validators of Layer Zero, uploaded a binary, and so that's a legitimate hack. So that's like Layer Zero's core thing is if that's the issue, that's a hack. It's their fault. I think when you start to get into these weird lawsuits, I may know a little bit too much information to talk about, but there's the public lawsuits and then there's the private lawsuits against individuals at Aave Labs as well going on right now. So
sucks.
Right, so they're getting sued on all sides. So as soon as you step away and you start to centralize away from the DAO, now you open yourself up to regulatory risk from everywhere and every person all over the world. So, if you look at ACI and Zeller, kind of stepping away, that was their legal cover. Now it's one person or a couple people that hold all the liability.
Was it just
poor
good
timing?
Well, was it just good timing for Zeller to step away before this all unfolded? He basically pointed at Aave v4 and all of the incentives around that and saying, hey, Aave's not positioned for the future. They're going to give a bunch of money to Aave Labs.
Yeah.
And so we're just going to step away from this. And a lot of the other risk curators and contributors to Aave DAO did so at the same time. That was, 2 weeks before this hack? Is that just good timing or what's going on there?
Look, I think maybe, but last month was the largest hacked vector ever in crypto. The most amount of hacks, the most amount of money. I don't think that's going away. I think we're going to see this for the next 6 months. Mythos or whatever and this AI agents, it's getting easier and easier to hack these contracts. And dude, there might be people around here right now working for a nation state government.
Yeah, right.
There's a nation state attacking our industry.
Yeah. And you're right, there's a lot of these older smart contracts that haven't really been maintained properly. And I think there is some sort of scanning being done across the entire
100%.
on-chain landscape with some very advanced LLM technology that is basically looking for easy vectors, right? There's probably a spectrum of difficulty in terms of how much effort, how much capital is going to be required to do this. And there's definitely, there's that scanning that's happening, and that's why you're seeing these little small, little $1 million, $3 million from old protocols, and it's just kind of they haven't really been
picking up
maintained.
pennies. Yeah, I mean, if you look at these old contracts, there are businesses in crypto where we've kind of turned down. Maybe they're making $200K a year in revenue, and we're just it's too small to take on that liability of securing that, running growth, running marketing for a particular protocol. The cost of some of these DAOs, Compound DAO was paying $4 million a year for risk and security. Aave was paying closer to $8 million. If they can't keep their stuff secure and on point, honestly, who can't?
Yeah. You know, it's crazy that Chaos Labs also announced their departure prior to the exploit as well. They were kind of like the main risk curator, and they were doing things with Aave there. Yeah.
And then 2 weeks later, after risk curators leave, is when that's the most riskiest time for the protocol.
No, but that was because they didn't want to secure V4. This was V3.
Exactly. This was very similar to why ACI left and Zeller left.
Zeller's a force of nature, and people were loyal to him. I mean, it's really that simple.
Yeah. Tell us a bit about alpha growth. What are you guys doing in the market today? I know we're kind of short on time, but what is your kind of holistic view on marketing, on protocols, on financial products, on chain? Where do you guys kind of fit in?
Cool. So we recently, this will come up a big announcement coming up soon. Euler DAO handed us over their DAO markets to start running for the Euler as the main risk curator. So we're working a lot with Euler. We work with like a lot of different chains on growing their TVL, growing their ecosystems, and then we're launching our own set of structured products for a couple private LPs. In terms of like the future, I think there's agentic finance requires blockchain. So a lot of these agents, like you're not going to be able to spin up like an LLC for every agent. You're not going to be able to spin up another company. The organization's going to live on chain, and we may see like the rebirth of DAOs again in the form of investing in an agentic company. So kind of excited for that, and I think it might bring back DeFi as well.
Yeah, and so you're saying agents might be the members of these DAOs, and they'll be governing themselves in this structure?
The DAO runs the agent.
The DAO runs the
because
agent.
Some of these agents, like think about the liability of running an agent that may or may not go rogue.
Right.
Like, are you as a company going to take that liability? Like a self-driving car, if it gets into an accident, who's ultimately responsible? As these agents are online, communicating, and all these different, we're going to see these single person or agent, like single agent companies that will be like a business.
Yeah.
How does it interact with the world? How does it get funding? How does it get its compute? And then a DAO model seems like an interesting model.
Yeah, very cool.
Yeah.
And so, how do these structured products work?
Yeah.
What you mentioned that it's for a handful of LPs.
Yep.
What is the contents of this structured product?
All right, so I could dox our strategy. It's pretty simplistic. The main strategy we have right now is what's making the most revenue in crypto right now. You guys know? Hyperliquid, exactly. The funding rates are crazy. So if you just take a look at the lending rates, it's about 2.5% to borrow ETH on Aave right now. To lend out on Hyperliquid, it's 12%.
Yeah.
So that diff is there all day long. There's about 17 different perp venues that we interact with, but mostly Hyperliquid because that's the most volume, that's the highest funding rates. And so if you just manage the money market and leverage between the perpetual and the money market, that's effectively a lot of our structured products.
It's really simple. Yeah, absolutely. So it's just active management.
I hope you don't have any ETH stuck in Aave right now.
No.
Yeah, thank God. Right?
There we go.
Bryan, what's your take on the state of DeFi post all that's happened? Where do we kind of go from here? Hearing rumblings about institutional allocators, being worried about this, not wanting to allocate, but
are they slowing down?
I've spoken to some, and like some of them haven't even heard about what's happened. They're not even like.
Well, I think so. We were running growth and marketing for Compound and all the BDs for about 18 months, and we talked to a bunch of institutions, and there was 3 things that needed to be in crypto for them to like come into play, and they're still not all there. Number 1 was fixed rates. Number 2 was smart contract insurance, and number 3 was just the size. I mean, DeFi is really small. We're like down to like 80 billion. Like these guys play in like $5 billion chunks, $10 billion chunks at a time. If any money market got consumed that much capital, it would crush the yields. Yeah. So the sizing, the smart contract risk, insurance, and so the security and insurance, I think, is where we're still struggling to see that. So I still think we're going to see a lot of blood being spilled over the next 6 months with AI in North Korea until we just like harden the entire industry.
Yeah. Okay, and you think we're ultimately we're gonna come out stronger as a result of this?
Yeah, of course. I mean, like the promise of being able to do financing, the superpower of blockchain is like price discovery, store value. Everybody kind of knows that. But the 2 things that we're looking at is rate discovery. So what is the global interest rate discovery to buy a home per entity, per country, and what is the interest rate like? The interest rates of gold in China are different than the interest rates in gold in America. How come? Why? So we're going to see global rate discovery on chain with lending. That's not going to go away. And the other superpower is the largest secondary market in the world. If you have any asset, the secondary market to sell and buy any tokenized stock, tokenized asset, tokenized equity is going to be on chain.
Bryan, thanks for spending some time with us, man. Hope you have a great rest of your week. Hope you guys can do a good job of curating risk at Euler. I know that they're kind of looking to capitalize on this in their own way, if you will. Spark has. So thanks for being here, man.
Yeah, awesome. Thank you.
Thanks, Bryan.
Cheers, buddy. See you next time. Thanks, Bryan.
Man, that the hack that just continues to shake the DeFi world, right?
I mean,
it just continues.
It felt like we were nearing completion, and now we're just in this. Now we're in a legal battle. Maybe it's a bit naive to think that there wasn't a legal
nobody
battle
wants to be
at the
in
end
a
of
legal
this.
battle, man.
Yeah.
So, guys, we're gonna throw you on to the panels, and we're gonna get our next guest in.
Actually, I think we've got our next guest.
Awesome.
Ready to go.
What's going on, man?
Hey.
How are you?
Good.
Welcome to the show, man.
Nice.
Andy.
Andy, nice to meet you.
Robbie.
What's your name, man?
Nice to meet you. Sam.
Sam, pleasure, man.
Yeah.
From State Street.
From State Street Investment Management. Yes.
Very, very cool. And so,
tokenization is happening, Sam. I know you guys just had a good panel. Catch us up. What did we miss on that panel? What were some of the spicy takes?
Spicy takes. Well, I think the message that came from the panel is that institutions are really putting their best foot forward now and really getting involved. And I think that'll be a theme that goes throughout the rest of this week. Specifically, we're here at the first day before consensus. So I think the institutions are here. It's going to start slower, probably than most people want it to happen, but we're definitely here, and every bank and every asset manager across the world is looking at tokenization now.
We had a large family office on the show earlier today, and he was talking about how the stablecoin catalyst really sparked tokenization as a whole. That happened very quickly. Once it started to get going, now that's really burgeoning. But he mentioned how as we go further down the risk curve in terms of bringing a lot of these things on chain through tokenization, each step down the risk curve might take longer as a result to bring in. And so do you think this as well, or generally do you think that there's pockets where we can move a bit faster?
Yeah, so I think when we look at the tokenization journey, I think stablecoins is absolutely the first place to start, because if you look at what do stablecoins offer, they offer you sort of additional access windows. So today we might be limited by FedWire access to certain times during the workday, and stablecoins offer that sort of 24/7 access that you can have. And by the way, so do tokenized deposits and deposit tokens once those get to some sort of scale. So I think that the 24 access piece is really interesting. Then once you have stablecoins and you have that ability to get in and out of different funds, I think we'll see tokenized funds become more prevalent. And that's because now we have the on-chain cash, and then we can invest in other things. When it comes to tokenized funds, I think the main driver is going to be utility, or at least for institutional investment, is going to be utility. And why is that? Because you can already buy registered funds in a pretty seamless way. You have access to a brokerage account. You can basically buy them, Monday through Friday. Adding stablecoins allows you to now purchase in and out of those, other than the Monday through Friday. Sure. So that's maybe one piece of the utility. And then the second utility is once you actually hold, let's say, a share of a tokenized fund. Today, that fund just sits in your brokerage account. You can't really do much with it, right? Now, if you have a tokenized version, potentially you can now pledge it into a lending protocol, or you can use it as collateral for another type of financing product. So I think the products that are really going to take off in tokenization are going to be the ones that actually bring you additional utility for your assets, rather than just having it tokenized for the sake of being tokenized.
Totally agreed. Just like to do more with your stocks kind of idea, right? Like whether it's lending or yield or 24/7 trading, etc. One of the things I think the tokenization complex is very focused on is bringing the world's ability to invest in U.S. assets globally, 24/7, sometimes with or without KYC, with or without a brokerage, in a self-custody fashion. What I don't think a lot of the world's, or a lot of the kind of tokenization focus is on bringing and opening up non-U.S. assets to U.S. investors. So giving U.S. investors access to Korean IPOs, pre-IPO Chinese stocks, emerging market funds, etc. How do you think about the dynamic between emerging markets and the U.S. markets as it pertains to tokenization? Are you solely seeing kind of like let's tokenize U.S. assets, or are you seeing other kind of types as well?
Yeah, I think all of the excitement and the evolving regulation really starts here in the United States. So there's a reason, that some of the largest stablecoin issuers are in the United States. We had the Genius Act that was passed in the end of summer last year. That really starts sort of a flywheel effect. Now you've got U.S. dollar denominated assets on chain in a reliable, safe way, particularly if you're going with a regulated stablecoin. And then I think they're going to really go into U.S. tokenized assets. That's not to say that there isn't innovation happening everywhere else in the world, but there's this sort of momentum in the United States where you've got a core set of the key companies that are doing tokenization. You've got the on-chain cash here in the United States. So I think the U.S. is really going to be one of the areas where you're going to see a lot more investor interest, both in terms of tokenizing U.S. assets and making those available outside of the U.S., as well as U.S. investors investing in U.S. assets. I think there's a lot of potential for assets outside of the U.S. to come into the United States, but I think that as a sort of a secondary wave, not necessarily the first wave. And I would mention that I believe that we're going to see a markup of the Clarity Act in the next, hopefully 30 days or so, right? And I think that's going to be another additional flywheel effect where we're going to have the SEC both regulate more clearly around tokenized securities, as well as the CFTC regulate everything other than securities. And I think that additional regulatory clarity is going to drive additional investor interest, because at the moment you still have some regulatory risk around some of these assets. You don't necessarily know what you're getting. And then the third thing that I think would really drive some of this more investment is real clarity and transparency around what you're getting when you buy a tokenized asset. So for example, if you buy a tokenized US stock outside of the US at the moment, are you really getting that tokenized share, or are you getting more of a derivative product? And are you sophisticated enough? Make sure you do your own homework and understand how that asset is really constructed and what you're getting when you buy it.
Yeah. When it comes to
Well, I'm just curious. As you're thinking through, how you react to tokenization from the State Street perspective. Given that you guys, I believe, reported, $5 trillion of assets under management end of 2025. We kind of understand the user journey as it pertains to do more with your stocks from the shareholder perspective. But when it comes to the business case for a large institutional player such as State Street to come into this industry, I have here you guys launched your digital asset platform. You're helping teams with tokenization. How do you see this as a business opportunity to come in and start to insert State Street as a name in this space? What are some of the services that you can provide that ultimately, and then what are the benefits to you getting in? What are the benefits to your business as a result?
Yeah, absolutely. So we see tokenization or distributed ledger technology, blockchain, as a new technology that we think can enhance many aspects of our business. So I think you mentioned last week we announced that, or actually at the beginning, in January we announced that the digital asset platform, so that's on the State Street custody side, is live, and that is one of our core services. So State Street is one of the largest custodial players in the world, and so of course we're going to be working to bring this technology available to our existing investor base. So for State Street Bank and Trust, we have the digital asset platform. Then we've got tokenization as a service, as well as transfer agency, which is really paired together. And then there's also fund administration and accounting, which is already live and is available to any types of investors that are investing in crypto assets or other things like that, to have that accounting and that record keeping available to them. Then on the asset management side, that's our State Street Investment Management. And there we've already released a number of products earlier this year in partnership with Galaxy Digital that brings that kind of crypto exposure to our existing investor base through product wrappers that are familiar to our investor base. And then we're working together again with Galaxy Digital to bring additional products to market there. And that's where that partnership is really key for us. We're a large asset manager. We have a lot of experience in managing different portfolios and portfolio construction. And we partner with Galaxy Digital to really bring that different expertise. So we have that DeFi expertise together with that TradFi trust and expertise.
I'd imagine that there's still a rather large percentage of the overall business of State Street is allocated to crypto. The revenue coming in is still somewhat small, marginal to
it's very early days. Very early days. Yes.
And how small are we talking? Like bips of the business? Like less than 1%?
I couldn't say. It's negligible. It's negligible.
And so,
but we're there and we're ready and we're assessing the marketplace and most importantly we're listening to clients.
Right.
And our clients are starting to ask us now, how do I think about stable coins? How do I use stable coins? And then once I have stable coins, they're looking for a tokenized product.
And so, we continuously hear from, small native players all the way up through institutional that all of this will be on chain. And it feels sometimes like we're at a crypto conference, they're saying what we want to hear. But do you agree with this premise? And then as that journey takes place, how do you see a rather negligible part of your business sort of capitalizing and transitioning into a larger part? How do you prepare for something like that?
Yeah, so I think we look at it as a promising technology, and so we don't actually carve it out from our regular business. We tend to embed our subject matter experts in our lines of business, so that each of the lines of business will eventually adopt this technology where their use case matches the potential. So we don't have a digital team that sits outside of our custody team. Our digital team is embedded in our custody team. Our digital team is embedded with our transfer agent and our tokenization solution. And similarly on the asset management side, I lead digital strategy. I sit within the cash team because that's where we see the first promise of digital assets, and particularly tokenization, taking a real effect on the value proposition of what it means to have a tokenized money market, for example. A money market fund today is not transferable. It's not easily used as collateral in derivatives financing or in securities lending. And so when you have a tokenized version of a money fund or a represented share in a tokenized form, now you've got additional utility that you're unlocking. And that's what's really driving our interest in this space and our desire to create tokenized products.
Yeah, I mean, it has to start with demand, right? It has to start with actual demand, or else you kind of run into the issue that we've heard quite a bit of, just why, why. When it comes to the actual business lines that the digital asset kind of arm or the cash arm could end up developing at State Street, is there any indication on what those business lines may be, right? Whether it's on the asset management side, on the trading side, like what is the potential for the business lines of a asset manager like State Street when it comes to digital assets?
So I think there's a lot of potential. Where State Street is starting with money funds, and that's really sort of the natural progression. And just to give you sort of the business case behind that, right? So you see about 350 billion in USD is invested in stablecoins. So these stablecoins are traveling everywhere. Stablecoins aren't really paying a direct yield to the end holders, and sort of maybe put the politics aside of whether they can do that eventually. Holding a stablecoin is like holding cash, and you don't actually get any kind of return yield on that. So there's a really clear business case for those who hold stablecoins to be able to sweep that into some sort of yield-bearing asset, just like you would in the traditional money funds space. Investors don't like to sit on idle cash, and so having some sort of money fund or some type of yield-bearing asset that is relatively risk-free is sort of the first business case. So that's really where we're starting. It's definitely not the end goal. I think if you look 5-10 years down the road, you're seeing a lot more interest now in tokenized equities and tokenized funds. And there's a few drivers behind that. One of those is utility. Can we create a product that investors can drive more utility from? And the second is, can we reduce cost? And I think the cost aspect is not totally clear at the moment. We're doing new technologies, and so very often we'll be running we'll be running a traditional books and records, and then we'll also start running things on chain. And eventually, hopefully, we can sort of stop running on the traditional books and then switch over purely to a digital on-chain record-keeping system, and that should theoretically drive a lot of the costs down. But make no mistake, that is 5-10 years out in the future. Yeah. And I've been, I can tell you, I've been in this space for about 7 years now, and every year I think, man, this is going to be the year where everything explodes, and it's a slow burn. Yeah. And that's because as an institution like State Street, we need to take thoughtful steps and make sure that we're doing things in a trustworthy way, that we deliver products that investors can believe in, that they can value. And so that we're not, shooting from the hip, and we don't necessarily need to be first. We want to be an innovator, and we want to make sure that we meet the demand of investors, but we want to do so in a responsible and safe way.
Sure. Yeah. Sam, man, I know you're busy. It's going to be a crazy week. Thanks for spending some time with us today. It's been a great event. I know your panel was great as well. Keep fighting the good fight, bringing the clients on chain, man.
Any
I think I would love to see more tokenized assets come on chain for sure. I think this year would really be the year of tokenized equities and tokenized funds, and it can happen in multiple ways. So it's not there's just one answer to everything. I think that's often what people think is okay. There's only going to be one way to tokenize, but I think we'll see this year, for example, the DTC under their SEC no action letter, they're going to start tokenizing the products that are in their depository starting in July. So that's going to be one mode of tokenization. I think that's really attractive for a lot of institutional investors because they already have those relationships and holding those entitlements in different ways. And then we're going to see other third-party platforms. You'll see some of the trading venues start to issue tokenized versions of underlying assets they may hold. And then you're going to also, I think, see more issuer-led tokenization. So there's sort of all these different models of tokenization. I think they're all going to live they're all going to have some part to play in an investor's portfolio and how we think about investing in assets going forward. And then I think we'll probably see some consolidation towards 5-10 years from now. One type of tokenization method might sort of outpace another, and that really is going to focus around, can we really drive utility and additional benefit to the asset when it is tokenized, and not just tokenize it for the sake of tokenizing.
Yeah, exactly.
Sam, thanks for joining us, man.
Yeah, absolutely. It was great to
Appreciate
to meet you guys.
Keep up the good fight, man.
Take care.
We'll see you next time.
Alrighty, guys. The large firms are out, and they are bullish on tokenization. They are bullish on stablecoins. They will continue to be. Guys, we're going to pass you to the panel. There is another great panel ongoing here in Miami at the Tokenized Capital Summit. Venture picking the real-world bricks. We're going to pass it over to you now.
Second time Miami, I'm very, very excited, and especially I'm so happy to see this summit growing every single time that the team is hosting it. I mean, big shout out to Gamma Prime. What they're putting up here is just incredible. And so big shout out to the team. We are investors in Gamma Prime. So when Evan told me first that, we're starting this liquidity summit and tokenized summit and all that stuff, it's like amazing. We're doing events ourselves. So I'm really understanding that, what goes into putting something on like this. And it's just amazing to see that grow. We run a venture capital fund called TBV. We're based out of Singapore. So it's been a bit of a journey to get here, same as with our friends from Gondor Capital. We flew half around the world to get here, but it's amazing to see the atmosphere, the energy here in Miami that's going to happen. And just to answer your question about what's difficult to underwrite, I mean, I agree with everything you guys said, but I want to just maybe point out a specific example because that's something we just backed a couple months ago. And, it's this whole part about tokenization, and I think a lot of people, if they hear about tokenization, they don't think about the animal industry. And there's a lot of interesting angles within tokenization that is a tremendous market, but a lot of people probably wouldn't write a check immediately. And we have that opportunistic bucket in our venture capital fund that does some of these investments that are maybe, not immediately easy to understand. But if you look at the big picture, it's a tremendous market behind it. And there's this company called Animal that we invested in, we're very excited about. They're basically tokenizing cattle farms. And now you can own a cattle and you can support with liquidity to tokenized farms, and they're able to scale and grow. And we've onboarded now already tons of farms in Brazil, in other emerging markets where the capital just isn't there to go from 100 cattle to 1,000 to 10,000. And the return is interesting, and it's definitely something that you guys all consume unless you're vegan or vegetarian. And it is $1 trillion market, and I think there's a lot of interesting need where blockchain and crypto can support not only the cattle side, but animals, food, all that infrastructure is very, very interesting. And that's something that we like to look at that from more of an opportunistic point of view.
Sweet. Thanks, Toby. Hey, everybody. Joseph Bjornsson, founder of Profit. We've essentially built a platform that lets you trade against AI about anything. I would say, I'll take a step back and say I think uncertainty right now is generally at pretty much an all-time high, at least sentiment from people in my generation and around different types of markets. No one really knows what's going on. People think that they do, but we have no clue what the next wave is going to look like. And so I think from at least my own personal experience, trying to solve a problem that may or may not exist in the future is probably not the best place to put your chips right now, but rather take inventory of your own problems that you're seeing day to day. And if you are trying to innovate in the space, don't put it all on a derivative outcome of the future, but rather figure out something that actually needs to be solved today and go from there.
Hey everyone, I'm Guy Siskind. I'm probably the odd one out here. I'm a founder, not a VC, other than some angel checks I really spend my time building. So at Phoenix, what we're doing is we're building post-quantum secure cryptography and helping institutionals bring in assets on-chain while maintaining their customer security and privacy. We do that using a technology called fully homomorphic encryption. So my background is as a researcher and a cryptographer. And maybe I'll give it a bit of a different answer. I think right now, I don't know if people have seen the Google report and many other institutions. It seems like non-quantum secure cryptography, which is basically the cryptography underpinning blockchains, but also all banks and financial institutions, that's going to be maybe broken in the next 2 to 3 years. So this is the thing I'm excited about right now. This is, I believe, something that we all should be working on. Obviously, we have a vested interest in that, but that should be something that I think the investor community should also be paying attention to. But it is very hard to underwrite. It's not quite clear what will be the right solutions, how that will take shape and form. So I think that's a very underallocated and yet exciting area to explore.
Wow, thank you. That's a lot of information here. Are you guys taking notes? Just checking. Okay, cool, perfect, thank you. So given the undeniable institutional focus on crypto now, how differently do you think investors should approach their investments? Is it the different types of projects that we're looking at that just hit the narrative that's there right now? Is it the different deal structures? Is it what is it that you do differently? What should people pay attention to once they start building under the current conditions?
How would you like us to answer this, one by one, or?
Oh, please go one by one.
All right, then. I think that having institutional focus come in doesn't fundamentally change what has been done so far. It accelerates quite a lot of different things because it means that more and more aspects of society and parts of the ecosystem will have more liquidity and funding, as well as support, plus integration with other parts of it. Right? Crypto is not just some niche corner where people and hobbyists are playing around. Right? More and more serious folks are taking it seriously. That allows another world of opportunity and possibilities to be opened up for crypto to actually go out there, impact more people, and then be more widely adopted in the world. And I think that's my view.
Yeah, so I'd echo what you just said, that in some ways, like, not much has really changed in what you're trying to invest in, but for us, at least, in reality, some things have changed. I would say that we try and maintain a higher standard for underwriting investments. Something that comes to mind is, like, we think much more about balance sheet efficiency. So how much is this project raising? How much do they realistically need to build this product that they're describing? If they raise a certain amount of capital, will they...
Alrighty, guys, we are back at the Tokenized Capital Summit here in Miami. We're with the Managing Director of Gamma Prime, Chamin Malhi. Chamin, welcome to the show, man.
Good to be here, man.
And thank you for having us out.
Yeah, man, Gamma Prime Rollup collaboration, the first of many, I hope.
First of many, indeed. We heard your next one's in Singapore, so we're planning on joining you out there as well.
Yeah, we shut that place down, so.
Yeah, let's go. Let's shut it down together,
man.
Brother.
Let's do it.
So I understand you work a bit more on the buy side of things, kind of facilitating some of the deal flow. Talk to us about what you're seeing out there as of late from your clients, from your customers. What's the kind of, give us the lay of the land.
Yeah, absolutely. So I'll start with the fact that when it comes to the buy-side participation, I really take a pulse on what it is that they're looking for. Look, I'd be lying to you if 5 years ago when we were concepting Gamma Prime very deeply, that we're going to have litigation finance structured products in our, that we're gonna have specific types of deal flow that investors are looking for. That wasn't the case. We let the people who populate the marketplace dictate what exists in it. in doing that, I believe we got a winning model. So what are they looking for? When it comes to crypto, whether you're crypto curious family office or you've been in it for a while, they're looking for safer bets, right? An 18 to 25% return profile is a lot more interesting than 100% or 1000x moonshot as it relates to like a liquid fund or a native coin. So yeah.
Very cool. And so how has the business of Gamma Prime progressed? Because we've obviously seen how the crypto digital asset industry has matured quite a bit as of late. It feels like we're going through these natural evolutions. How has the business of Gamma Prime progressed through digital assets, through some of these alternative investments? Generally, how have you seen demand follow in maybe the last couple of years? And I'm curious, maybe we can forecast out a bit.
Yeah, absolutely. So, I think a very bad question to ask any investor or any allocator is what do you invest in? Like if they're investing, the answer is typically yes. I invest. Yeah. A better question would be, what are you investing in next, right? Like where is that balance, as you perceive balance to be in your portfolio, going to be, and how can we help you access quality deal flow that's there, right? So we don't advise them on what is good. We get an understanding of what they're looking for, and then we bring quality deal flow. There's a lot of front-end heavy lift of weeding through. Am I allowed to curse on here?
Yeah, go for it.
There's a lot of heavy lift of weeding through bullshit. Right?
Yeah.
Like you come to soirees like this, you talk to people, you connect with them, and then it's like, okay, this is, and then you get one or two quality deals. Well, what we've done is that, so they don't have to. Right? So we've said no to about 400 different structured products or deal flow providers, and we have about 38 on there. Where's the puck been going lately? A lot of interest in access to late stage marquee companies. So we've helped facilitate access through our GP and LP network, which is global, to help families and other investors who have a position divest from their position. Like, look, if I bought Anthropic early, I mean, why wouldn't I take a little bit of liquidity from that? So we've been able to help that. Now our platform is actually going to be able to operationalize and improve the efficiencies of on-ramping and on-ramping into typically illiquid deals that are worth a lot of money, right?
Yeah. How do you think that these IPOs are going to land on the market?
Look, I think that it's been a long time since an IPO is nothing short of a liquidity event. Like look at Microsoft. Microsoft, when they IPO'd, they acquired capital and liquidity, and then they built all of this cool stuff. That doesn't really happen anymore. I don't think that it's going to be as bad as all these doom and gloom, like Pitchfork and Fight and Torch people like presume it's going to be. I don't think it's really going to be bad at all. I mean, the markets are cycles, right? Like things go up, things go down. I mean, it's how long you're in the game and how much are you exposed. Let's be clear here, like. For me to have access to SpaceX before it's public, great opportunity. Probably don't have it if I'm your average Joe. Even if I'm an accredited investor, probably don't have it. So I don't think that the future of space exploration, I'm just using this as an example, is anything short-lived. I don't think it's going to go anywhere but up. But I also am not giving you any financial advice. So again, if somebody wants to access a company that I personally think is nonsense, I don't have that conversation. I don't sell them on what it is that they're looking for. They are smarter than me. They know themselves better than me. Right? So this is what you're looking for. Great. I'm going to make sure that it's not fugazi, right? That there's a quality counterparty on the other end of this, right? And that there's the things that you're looking for as the other counterparty that's necessary for you to have the deal.
They know their time horizon. They know their preferences. You don't get in the way of them in their business. I am curious more about Gamma Prime. Given that you've got essentially a very wide breadth of assets that you can make available to some of these investors. They know what they want. They come to you. They say, "Hey, we want X, Y, Z." Given that you're kind of you've got to go out and find it, but you don't know what they're going to bring to your table. How do you do that? Like, how do you bridge expertise and sift through all the things that are out there when you don't really know what's going to come in the door, but then you've got to go find a counterparty for it?
Yeah, that's a good question. So we do a lot on our end. Like I mentioned, we've said no to over 400 funds, so we have about 39 structured products or other fund-like vehicles, and we have about 39. So like, that process, we went through it. I'm not that guy, but we have somebody that's, he's an institutional person. He's got, 4 different licenses. He spearheads that department. So he makes a decision on whether or not, this deal is good. On the fund side, well, you don't have a fund administrator. We don't do the crypto just trust me bro thing.
Yeah, of course.
Why? Because that's not what they want. So, that's as good as I can get into that.
Yeah.
On the other end, and like really the big picture of what it is that we're doing and building here isn't about serving the people who are already accessing this deal flow. It's not also about like helping people in third world countries put $1,000 into a hedge fund. That's not the play either. But there is this pocket of not at all served individuals in the States that do qualify, but they just don't know where to find it. Well, you can find it at Gamma Prime, and that's why we exist.
Yeah.
For every one entity or family with $10 million of investable assets or more in the United States alone, there's like 160 with 1 to 3. They have no idea where to find this stuff yet. So the idea is how it is that we can be the Robinhood of private investments.
Yeah.
The idea is to serve that market as well as serve these other ones. And that's how we believe we can scale beyond all of the profitable failures out there in this business.
I'm curious what part of the business right now is driving the most growth comparatively to the other parts of the business. Maybe not the most nominal dollar growth, but what part of the business is growing the most right now?
Well, if you look around and you ask people about Gamma Prime, and they know that who we are, it would be surprising that we've only been outward facing since February last year. So all of this being the largest side event around all these major token conferences, we've had friends who are with very boutique, firms, private equity firms, going to Davos, and they're like, oh, I'm with so and so, and they're like, oh yeah, I'm also partnered with Gamma Prime. Like, oh, Gamma Prime. So like, what is the result of that? The result of that is essentially the ability to execute on distribution. And the ability to execute on distribution actually is a transferable skill when it comes to marketing, right? And communication. So with that marketing engine and the way that works, I would attribute all of our success to that. If I were to talk and interface with these people and say, hey, my name's Chamin, I took a couple companies public, back in my, and I've had a couple private exits, and I've helped 6 other companies go public. But I don't have that visibility. I probably wouldn't be able to do my job to the degree that I could without the team that put all of this together and everything outside of our events together. So.
Yeah. Definitely, man. And this place is still buzzing hard. It's 5 p.m.
Yeah.
This place is firing. It's not slowing down. Before we let you go, just curious kind of what your personal directional view is on digital assets. I think that there's obviously a lot of excitement across different sectors, across tokenization here today. What's kind of your directional view on the market?
Okay, yeah, that's a good question. So, look, if we circle back 5 years ago, you could put every single coin on, you could put most projects onto a board, and you could throw a dart blindfolded, and you probably wouldn't win if you had 10 darts, or you probably wouldn't lose if you have 10 darts. Well, the space is maturing. People, groups, and companies are being left in the dust because they simply don't actually solve any problems. Remedial math determines whether or not I believe there is a business upside. Are you making more money than you're spending? Are you making more money than you raise? Let's start there and then talk about the rest, right? It's and then there's the other end of it. It's what is your project? Are you a project that has a token and a business whose success is solely determined on people buying and selling your token? I don't see much there, right? So I think that when it comes to digital assets, it's matured. There aren't so many inefficiencies that you can capitalize on as a trader. There aren't so many buzzwords that are gonna get the lift or the traction that you would have got. What was the narrative? Oh, we're an L1. Okay, we're not an L1 anymore. Now we're this, and now it's AI, and you're doing all this stuff just in order to appease a narrative, but not really have anything. It's like anybody with half a brain or some maturity or legacy, they've had intergenerational wealth, right? They don't care about that. It's real simple fundamentals. So I'm going to focus out of digital assets per se. I'm going to focus on the technology of Web3, right? If we integrate Web3 technology to serve and improve efficiencies in existing businesses and to also remove some of the fat that exists in the operational capacity of a business, so you spend less money, you go faster, you scale faster, you automate, that's where the future lies.
Yeah. Very, very cool.
Chamin, again, thank you for this event. Thanks for spending some time with us, man. Great crowd, very institutional, very kind of mature, as you say, about the technology and about the way that the industry is evolving. You actually see it in the culture.
There's sophisticated capital here. It's sophisticated energy.
Yeah,
around here.
absolutely. Do you see all of those people wearing mascot outfits? No, neither do I. So, if you really want to know where money is going, okay, and you wanna hang out with some adults in the room, or you made your crypto bag going on that roller coaster, and you're like, hey, it's about time that I start being smarter with my money because what I did in 2017 isn't gonna work anymore. Come holler at me. Come check us out. We'd love to have you.
Let's go, Chamin.
Yeah.
Cheers, man.
All right, cheers.
Thanks for hanging out, man.
We'll see you next time, man.
Yeah, for sure.
You heard it here first. The sophisticated capital is in the room, man.
There you
it's
have
in
it.
the room, man. That guy was funny, man.
Yeah, he was great.
That was funny, man.
Cayman Prime's been tremendous.
Look at his
We've
mouth.
got-
No beard
I
gets
missed
it every
the beard.
time, dude.
I missed the beard.
Gets
Totally
me
new.
every
Totally
freaking
new.
time. Guys, we're gonna pass you over to the panel. I think the rest of the venture panel is live right now. We are at the Tokenized Capital Summit here, brought to you by Gamma Prime. Ladies and gentlemen, it is 5 p.m. in Miami. We got a new chat message. Let's go, Canton.
Oh,
Mr.
boy.
Canton.
Oh, boy.
All right, guys, we'll pass you to the panel now.
And I'm not sure whether, I don't know what everybody else thinks, is that if they are doing well, I will want to deploy more capital into them to make sure that they definitely have enough, more than enough to do even better. I think that's the simple VC game. If there are VCs who decide to take out capital, especially on projects or for projects that are doing well, I think that's just generally a bad sign.
Yeah, 100% agree with that. Like, most of your bets are not going to work out. So the ones that are showing signs of working out, you have to support them. Yeah, so we haven't really changed that, and pretty much every investment we do has some kind of lockup with it. So, we're structurally in there for the long term, come good or bad. And of course, Amber Group has our market making arm, which is market neutral. We have our stat arb team and other, kind of like systematic strategies. We have an on-chain team that does look more at these sorts of yield farming opportunities, and they'll of course try and participate in points programs for what they consider to be the most promising protocol. So, like, to answer your question, Amber Group as a whole, yes, we do kind of everything. And at least what we've seen is that, there are some periods where one of those isn't working out, but another one is, and, it sort of goes back and forth. Sometimes the VC stuff is doing better. Sometimes the, points farming is outperforming. So you hope that ultimately your winners outweigh your losers. But yes, 100%. On the venture side, gotta back your winners, 100%.
In our case, today we have 10 portfolio companies. We're very concentrated. We are now actually kind of like increasing it and start deploying much faster. The last year and a half, we saw valuation quite high, and now we see them declining, going down. In our current portfolio, let's say 8 out of the 10 are positive cash generators. So like we have Li-Fi and Chaos Labs and some other pretty known project that generating cash. We're highly recommending most of the projects to learn from the get-go what's their business model and how they can leverage it. A token, it's a token, like it's the way we see it, it's a good solution, but not always. Yeah.
We're not a trading firm, so we're like venture capital fund. We haven't really changed a ton of things. We always invest more in a market like this than in like a bull market. The bull market, we try to kind of like more, watch and see and make very few bets because it's typically very overpriced and it's hard to make a decision. I'm a very strong believer in progress over time. So I like to do smaller checks first and then sort of grow with the company because, it's very easy to give a very good pitch and have a good documentation, but then it all comes down to execution and kind of like doing more selective bets and conviction bets rather than just like going in a market and invest in things that like sound really awesome but haven't really done that sort of proving point yet. And especially in this market, there is a bit more time to make decisions. There's less noise, so I think it's generally like better for operators to work in there. But it's also a bit rougher, of course, because money isn't always maybe immediately available.
My trading strategy has worked very well for me over the past few cycles. Again, also pretty unorthodox. I've borrow stables against ETH and Bitcoin and buy physical gold and silver and at a conservative LTV. And it's, if shit were to hit the fan and the internet goes bust, then our crypto's vaporized anyway. And then the gold and silver would probably 10x overnight. So it's kind of like a lottery ticket baked into a double barrel long strategy on kind of an anti-dollar libertarian maximalist.
Wait, sorry, could you repeat what you do?
Yeah, that woke you up. I basically borrow stables against ETH and Bitcoin, and then buy physical gold and silver on bullion dealers online, and then you're long Bitcoin and ETH, and then also long precious metals. And so if something were to happen to the internet in a doomsday scenario, you have physical gold and silver that would probably 10x overnight because the internet went out, and then you're also pure anti-dollar and you think the dollar is going to keep getting weaker, which I believe in, then it works out.
So if you missed it, there's also a recording on that. You'll be able to find that later.
Don't look up where I live.
I have very little to say here. I took notes. I mean, great advice, everyone. Thank you. I'm just a buy and hold kind of boring guy for like things that I believe in 10 years plus. So.
Thank you so much. What are the cooler, exciting trends that you see now, and how do they compare to the existing projects versus new projects coming out? Do you see more trends with already existing businesses that sort of get this second breath of fresh air, or is it the new stuff that's coming out?
I mean, there's a few trends, perp dexes and perp dexes related. There is prediction markets and prediction markets related. There's DeFi, DePIN, and a bunch of other things. Then there's the whole AI, agentic AI economy kind of stuff going on. I think at this stage of what I'm looking at in the environment, a lot of the work is being done not setting up the foundations, because by definition, the foundations have been set up by certain companies. I think it is trying to finesse what is already out there and try to improve and or deliver certain outcomes. For example, leverage markets on prediction markets, for example, or taking leveraged bets either here or there. So there's a lot of good stuff that's happening there. And my view is that foundations are set up, but do remember that crypto is still a very small bubble. There is a whole world out there who does not touch crypto in any way, shape, or form. To bring that person or persona into the crypto sphere, so to speak, we have to make products, give them what they want, I suppose, or solve problems for them. So roundabout way of answering your question, I think there's a lot of stuff that is going on to optimize and or build on what has already come. And I think that is exactly the right way, because that's where that gets us to the next stage of what crypto can be.
Yeah, I think I suppose it's a trend now, but it's been an idea since like a long time, probably since I first started back in like 2017. And it's like tokenized regular assets, whether it be stocks or commodities. And I think really the big advantage that we're seeing happen in real time is like their 24/7 nature of them, and like having decent liquidity 24/7. I mean, you see, news headlines that happen with Iran, and they tend to happen around like close to futures open, but not when it's open, So it's nice to be able to have that ability to trade headlines regardless of whether or not a market is open. And again, like that's something that people have been talking about forever, but now it's sort of like a reality, and it works well. So yeah, I think hopefully we'll see more of that.
I'll pass this one.
Acid? Oh.
Yeah, I mean, I keep it short because I think we're a bit out of time, but very much agree with what you guys said. I mean, I think trends in Web3 are always come and go, and I like to see something that actually sticks and remains. I honestly really like the angle of DePIN, and now DePIN is dead, and now we're moving over to then Bitcoin was dead, and now it's prediction markets, and then it's AI, and then for me it's a little hard to make investment decisions in VC when you're long term based on trends, right? If you're a trader, I think it makes sense because you're kind of more in and out. But if you're investing like that's the equity of a startup and you're looking at like a 5, 6, 7 years horizon, and it'll be like, oh, DePIN is amazing, let's put all our money in DePIN. I think it's a very bad idea. So for us, or for me, how I look at it is very much like what is actually just solves problems. And if DePIN has an angle to that, amazing. If it doesn't, okay. If AI can support that problem, great. If tokenization is an angle that, I see this whole thing as just like a tech stack, right? It's like we try to solve this problem, and what's the best technology to get us there in the cheapest and most efficient way. And if that's what it takes to solve that problem in the best manner, as we believe at that point in time, great. And that's how I look at trends overall.
I would say, for me, it's the next wave of what is coming in AI. The first wave, you gave it words, it gave you back words. Second wave, we gave it words, it gave us songs. Third wave, we gave it words, it's trading for us on Polymarket and making dinner reservations. But the next wave, I'm going to call it audacious AI, which you give it words, it goes and gets a legal entity and a PO box and a phone number, and I think that's when the fun's going to start.
Yeah, I'll stick to the infrastructure side, so post-quantum security and really AI security.
Thank you so much. I've had a different question prepared as the last question, but let's make it a quick blitz round. Just say yes or no. Do you believe that TradFi will integrate well into Web3 in 5 years? Yes or no?
Yes.
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 For sure.
Yes, it's going permissionless.
And that's the end of the panel. Thank you so much for joining.
Thank you so much.
Thank you.
Hello, hello. Hello, everyone. Please, let me introduce your next speaker, which is Prophet AI. That is an AI that predicts the future, helps you see what's coming before it's obvious, This allows you to trade any market you can imagine. Please welcome Eneo.
Thank you. Thank you very much. Hello, everyone. Hope you're enjoying the late afternoon. Eneo here, CMO at Profit, and I'm here to introduce what we've been building. Profit is an AI that predicts the future. What exactly does this mean? It means that you can ask Profit any question, and it will generate you the odds. Once you have these odds, you can then take a trade directly against the AI. I was going to open a market earlier. Will the teleprompter have my notes or not? I would have traded no and hedged my bets. This is how Profit works. If we can click there, you can type in any question about the future. For example, will African penguins be extinct by the year 2035? Could we please hit play on this little demo? Yo, we just need to play this. Thank you. Nope. It's possible to hit play, otherwise we're gonna keep going. Cool, we're gonna keep going. How it works is you ask Profit any question about the future. For example, will African penguins go extinct? What the model then does is it aggregates consensus between 6 different large language models to present you with the odds. Once we have the odds, we'll present it to you, and you can choose yes or no, which would you like to trade. You can think of this as the world's first single-player prediction market. Traditionally, for prediction markets, you need to have 2 parties, one to trade against. With Profit, we always take the other side of the trade. You can think of it as AI as the house. We sit with a bankroll, and we will supply that capital into every market based on the odds that we're able to generate. We funded an AI with $10,000 to trade against the public. This is tranche 1, and it's how we're building our platform. In order to build an AI that can predict the future, we know we're not going to get it right first time. So the way we've done it is in tranches. With this tranche, the maximum win per market is $10. You can ask any question, we'll generate you the odds, and within the time period, it will resolve. We then learn which markets we can back and which markets we shouldn't back moving forward. The idea here is really to try and break it, to try and find different niche markets that you can open where we'll get the pricing wrong, to try and find markets where you can manipulate the outcome, to try and find markets where the AI...
Alrighty guys, welcome back to the Tokenized Capital Summit. We are here with the Amber Group investment partner, Austin Munoz. Austin, welcome to the show, man.
Thank you guys.
Thank you for joining us.
Bro. Yeah.
¿Cómo estás?
Todo bien.
Todo bien, bro. Mucho cervezas esta noche, ¿no?
You know, I have work events, so we'll keep it chill.
Yes, sir. I just got back from El Salvador. I was at Bitcoin Beach, doing all the El Salvadorian things. Tell you what, that place is an up and coming place.
Well, yeah, my grandma's actually from there, so
very nice.
I need to make the trip down.
Yeah, so, as a crypto person, it's a cool spot.
So, what's your prerogative here in Miami? You know, you like you said, lots of work, night events, investor meetings, and whatnot. What are you trying to accomplish this week?
Yeah, so I'm always at these events for networking, meeting projects that either are looking to issue a token and that need to hire a market maker, or early stage investments. So yeah, I'd say this week is more going to be on the market making side, but we're always open to opportunities. So it's kind of whatever people have to offer.
That whole market has changed up so much. I'm sure you've seen it, right? Like, just the amount of awareness that people have about the shenanigans of exchanges and market makers. Like, you guys get a bad rep.
Yeah, absolutely.
But like, how has that materially changed in the last year?
In terms of our reputation, or in
terms of the market structure dynamics?
Yeah, I'd say for us it hasn't changed that much because we've always worked very hard to maintain a solid reputation and making sure that we're doing things by the book. There are some market makers whose employees got arrested recently for doing like active market making where they're effectively, manipulating token prices.
Yeah.
And it's something that we've always steered clear of, and for good reason. And like seeing those consequences come down on those people kind of like was vindication that we were doing the right thing.
And so what separates active market making / market manipulation, like these people got arrested for, versus like market making the right way?
Yeah, so when you're market making the right way, you're placing bids and asks in the order book, and you're maintaining a certain amount of order book depth, right? So that way people can execute larger trades without pushing the price, without facing a lot of slippage, right? Whereas active market making is, being a price taker and pushing prices around to paint a chart a certain way or to achieve some goal of maintaining a price, defending a price, whatever. Right. So that's where it crosses the line.
And so as a market maker, are you able or allowed to take directional bias and, say, hey, we have a long bias on this thing because we believe in it, we think it's a good project, it's doing a good job. We want to make sure that there's a liquid market here, but we also want to, be biased towards the upside? Or would that fall into active market making?
We don't have a view on the tokens that we're trading. A market maker, I like to think about it like Pawn Stars, the pawn shop where, that guy doesn't care if you come in with a guitar or a gun or a map or whatever. He's gonna set a price that he's willing to buy, and he expects another buyer to come and buy from him shortly thereafter. So that's the exact same thing we're doing. That said, in the course of market making, you will gain some exposure sometimes, right? Because it's like someone sold to you, okay, now you're long,
right.
And you're trying to get back to neutral. And sometimes you end up longer than you wanted to, right? Like if people keep selling into your buy orders, then you will naturally accumulate a long position. Then you're trying to get back to neutral. And the reverse can be true as well, that people are buying tokens from you, buying, and so you're selling into those buys, and so you end up net short. So, but the goal at all times is to maintain market neutrality.
Yeah. Man, so there was this crazy token called RaveDAO.
Yeah.
And I don't know if you saw that move in the subsequent fall.
I did see.
What was happening was there was like the funding rate was at around $20. The funding rate was negative 4,500%. So it was nearly impossible to even short without absolutely getting blown out just by the funding rate. And so there's this way that these funding rates are like luring shorts, blowing them out, and then just collapsing these things.
Yeah.
Not great. Anyway.
Yeah, I honestly can't.
No comment.
I don't know what they did or how.
Me either.
Yeah.
But that thing was insane.
Yeah.
Insane.
It's definitely crazy to see, and you don't like to see it.
So. Are you guys market making tokenized assets as well, like non-crypto assets?
A little bit, yes.
On Hyperliquid or?
We've started trading tokenized stocks a little bit, like X stocks I think is the main one.
Yeah.
So yeah, we are looking to expand. We're looking a little bit at prediction markets, that kind of thing.
Okay.
So yeah, these things are happening more often on chain, and we have all that infrastructure set up to do that. So yeah, if there's good opportunities there, we don't, like I said, we don't have a view, long or short. We don't
just providing liquidity.
Exactly. It's like there are people that want to gain or remove their exposure quickly, and they're willing to trade at a less than perfect price to do that.
Right.
If they stuck around or were more patient, on average they would get a slightly better price.
Right.
And we're just there providing that service of, you don't want that risk, or you want exposure to that risk, here you go. I'm providing that service, and hopefully, I'm getting a slightly better price for myself by providing that service.
Austin, we know you've got to run to an event.
We got some beers to be had.
Yeah, and so we appreciate you taking some time here and give us a quick 101 on the basics of market making.
Yeah, of course. Yeah, that's what I'm here for. My job is just to explain what we do and how it works, because you're right, we have a bad rep, but once I explain it to people, then they say, oh, okay, it makes sense. I'm comfortable with that. And
it's a helpful service.
Then they see it as a helpful service. That's exactly it.
Thank you so much for joining.
Let's get it, man. Good luck this week, all right?
Thank you. Yeah,
take it easy, man.
See you next time.
There we go. Market makers aren't the worst, guys. That's the VCs.
On. Take it easy on these guys.
We're having some fun with this guy, huh?
You don't want to be a liquid.
Just a little bit of fun, huh? Ladies and gentlemen, we are at the Tokenized Capital Summit. It is a beautiful day in Miami, and it is getting to be 5:30 p.m. I think we've got our next guest up.
Do we?
I think so. We're going to pan you guys to the panel, and we're going to be right back. We've got a nice keynote up right now.
3 topics. 1, rate discovery. 2, a new financial taxonomy. Yay, boring words, but when you put these things together and deal with what agent-to-agent finance actually is, I think it paints a decently cohesive picture as to what I think we all know the future looks like. So, starting with rate discovery, crypto did a great job of price discovery. Everyone thought it was cool. We got DEXs, led to money markets, perps, launch pads, protocol-owned liquidity, LBPs, all kinds of really cool ways to discover the price of assets that had no inherent value. Bitcoin was a great proof of concept. Love P2P cash. I hold Bitcoin, that's fantastic. We probably didn't need 10,000 billion governance tokens of things that we're hoping to get 100 users and keep them active for a month. It never made sense. It was a bubble, but there was speculation around something really cool. What's cooler than price discovery is rate discovery. Rates are in everything. You're dealing with assets that have price, that now you have to factor how long they lock up, what are rates in different countries. Rates have had moats from regulation that we can now bypass with international trade. There are a ton of opportunities that we're doing, would love to talk to you afterwards, just with rate discovery and rate arbitrage instead of price arbitrage. It works with perps, it works with money markets, just anything, especially international trade, anything trade finance, there's some kind of rate game around it. Take the yen carry trade, do it with every asset ever imagined. So, pillar 2, we're gonna talk about a new taxonomy. You guys probably check when the rates change every quarter. See, wow, the breakdown is like, oh goodness, M2's now 4.1x what M0 is. That might collapse. Where's our taxonomy for crypto? Are all stables the same? Are you cool taking USDC, or can I pay you UST instead? Or now the stables with 11 digits after it, because everyone can make a stable coin. So then what makes it different? If we're going to have stablecoins be the basis of transaction, then it has to have a really solid taxonomy that's understandable by all parties. But we've been using what's easy for people that's grotesquely inefficient that agents wouldn't stand to use. So let's go into what basically a stablecoin is, what an M2 is. You're gonna have the base deposit, you're gonna have M0, you're gonna have cash under your mattress, and you're gonna put it into a bank account. They're gonna lend it out, they're gonna earn money, they might give you a tiny bit back, they might not. But then you're gonna have a deposit slip that you can redeem for cash at some point. This is the same as Aave, this is the same as Morpho. But you have the deposit earning money, and then you have the circulating liquidity layer that doesn't earn interest so that it can be high velocity you can transact in. I'm gonna talk about one of our clients and protocols we're working in here called DFED, where we're trying to recreate how the Federal Reserve and local banks work in a way that makes sense for AI. So, you guys have probably heard of USDC. USDC uses the same process. They've got M0 capital, they buy T-bills, those T-bills are generating yield, that yield goes to Coinbase, $908 million last year, and some to Circle. Good for them. Have you heard of M0? M0 took that same process, and they're like, hey, how come they're giving $908 million to Coinbase? Can't we just give it to you as a chain? You guys, the whole chain has a stable now, and now you guys keep it, and you can kick it back however you want. That's a step in the right direction. It's slow and it's clunky. But on the other side of USDC is literal banks, where they don't even kick the $908 million back to Circle, they just keep it for banks. So you have banks, a little bit better is USDC, a lot of bit better is M0, but we need to get to a point where it's smaller and faster and AI native. On the other side, where AI payments are, they're calling it agent-to-agent. There are no widespread agent-to-agent protocols right now. X402,
Alrighty, guys, we are back at the Tokenized Capital Summit. Robbie's taking a beer break. I think he needs it. We've got the Profit founders on, Eneo and Jospeh. Gentlemen, welcome to the show. I'm digging the sport coat, man. I don't know what this is, man, but we'll give you a pass, all right, you know?
Yeah, I've already been made fun of for wearing shorts. It's been
nah, come on, it's Miami, man. Come on. Gentlemen, you guys are the founders of Profit Markets, a company that is predicting the future. So my question to you is, if you can predict the future, why are you still here talking to me? Why are you not on your yacht?
Super fair question. So we already have our yacht, but we want to give you a yacht. We want to make sure everybody else in the whole world can get their yacht. And if you think that you're better at predicting the future than AI, then play around with Profit.
There you go. So prediction markets have really grown in popularity and in size, obviously, right? I mean, these things are really becoming the de facto, in some cases, an insurance layer, in some cases, a hedging tool, in some cases, just a tool to place bets or predictions or gamble. Talk to us about what you guys are doing in that space to really make this something more accessible for people who want to utilize these tools and get, build a way with AI to make better predictions and decisions.
For sure. So just to zoom out, on Polymarket currently there's 1,700 markets that are live. But if you think about how creative people are and the amount of different things you could speculate on, the long tail of prediction markets is insane. But today, if you wanted to open up a market, will Eneo say LMFAO on the Rollup, you wouldn't be able to open it because you would need to place liquidity. There's some other companies that have risen up and said we'll allow for curated markets where you can curate a market, but you're still stuck with a liquidity problem. So that's really what we're solving, in that we have an AI house and we take the other side of every trade. What that house does is it's a pricing algorithm that generates the odds, and then us ourselves will trade against the users. So it's sort of like a single player prediction market.
So you can create a market for like more esoteric long tail markets. Anything.
You want to trade on whether or not the penguins will be extinct by 2030?
Yeah.
Use Profit.
Trading endangered sea life, big markets.
And so as you were saying, the issue has been a lack of liquidity for these more longer tail markets, and this is the core problem that you guys have effectively solved.
So we built Profit under two assumptions. One is that prediction markets currently require too many humans. So you need a human to actually create you the market on something like Polymarket or Kalshi. You need a human to take the other side of the trade, and you need a human to settle the market. And so we removed any of the needs for humans, and we basically tapped AI to give us all the resources there. And then on the other assumption that we're building under is that AI will be better than humans at predicting the future. Sure. So if you disagree with that in the short run, then come and get your fill.
Yeah. And so what are some of the markets that have been created so far that are more esoteric or longer tail?
Well, we've been live for approximately 12 hours.
Oh wow, congrats guys.
One of the most entertaining markets so far is, will Elon tweet scam Altman in the next 3 days?
Okay.
It's pretty niche. Someone else asked, will Stretch depeg? Someone else asked, will Elon tweet, may the 4th be with you? We probably have around 10, 15 markets live at the moment.
Okay.
But they're coming online every couple minutes.
And so is the thesis then that there's a cohort of people that would like to engage in these markets that aren't just not going to be available on Polymarket and Kalshi, and so you can kind of come to Profit Markets and have kind of your pick at anything that you want, and also engage with similar-minded people who are probably thinking about similar games or outcomes as well.
Yeah, absolutely.
Yeah.
So there's right now, there's a lot of these mass market prediction markets that you can jump into, like Trump and all these big ticket items. But the more long tail niche ones, if you have local politics that you want to trade on, if you have local weather systems that you want to trade on, and things that are not going to be maybe as mainstream, AI is virtually infinitely scalable, so you can very easily do that. And you're the creator of your domain, so the world is your oyster in terms of what you're able. As long as the AI can objectively settle the market, you can create it on Profit.
Yeah, because that becomes the question with some of these markets, is the resolution, right? On Polymarket, you've seen UMA, the Oracle, have certain debates in terms of their DAO. You've seen that Kalshi kind of solves these markets internally. The resolution becomes a problem on these esoteric models.
Right. So in the actual, you can explain the way that the resolution works.
I can go on the resolution. Yeah. So the user who creates the market is very clear how the AI will determine the outcome. Sure. So what it first does is it validates the question. So if you ask a question about what happens on the rollup, it will say based on a script published by the rollup.com on this date at this time. And there is currently still a hallucination effect that can happen, but sort of part of the risk that the user's taking, because it can also happen in their favor, where it hallucinates and the market resolves in the way that the user wanted. But we just don't think it's feasible to have humans, and definitely not necessary long-term, resolving all of these markets and having whole committees around like simple yes or no questions.
Yeah, and what model are you guys using for the AI part of this?
So we've got an amalgamation of a ton of different standard models under the hood, plus on top of that we've got some proprietary stuff that we're embedding to basically make this a dynamic living machine that's going to keep getting smarter over time and learning from its own mistakes and successes.
So basically you're going to be training this model, or this, aggregation of model, and intelligence over time to effectively build something that, based on previous successes or failures, can give slowly over time as the intelligence of these models increases and as there's more information and data and training, can effectively become better than anybody else at predicting based on past events.
Bingo. That's right. Yeah, the more we throw at it, the better it's going to get at catching.
Yeah, maybe just to break down a bit of the launch strategy, this is tranche 1 now, so we've got $10,000 in the house. Markets need to resolve within 7 days. Tranche 2 will double it up, so markets can resolve within 2 weeks, 20K in, and slowly but surely we'll see how much money did we win or lose, and at some point we'll have enough track record to really open up the gates and allow for people to create markets at scale, increase the size of the markets that we back. There might be a scenario where we see that the model is really good at predicting the price of Bitcoin on 5-minute candles, so we allow for the max bet that the house will take to be $1,000 on those markets, whereas it's only $10 on will this person tweet something, because that can be manipulated.
And is there a way for me to tail the AI in the future? Or say I see the track record of this intelligence that has been built, and I'm just like, you know what, I want to put 20 grand to just copy all of the decisions that this AI makes.
So you want to answer this one?
Yeah, well, I mean, that long term, we're building in a house that we'll essentially have to raise capital into. If we can show track record over 12 months of the house consistently winning, it basically becomes an investment option.
But then as a user, why would I ever come to play on a platform where the odds are stacked against me? I mean, you could also
Have you ever played roulette or craps?
Have you ever gone to Vegas? Right, of course. Yeah.
It's a blast, right?
Right.
So there's 2 ways right now that on our roadmap that a user can essentially back the house.
Yeah.
One way is immediately, as soon as the house places a bet, you can come in and you can basically absorb the house's position. So you can just buy the house position immediately. Yeah. The other way is eventually we will open it up and democratize the house revenue stream. Yeah. So LPs can come in, retail can come in and deposit into a vault that essentially is the liquidity of the house.
Yeah, because on perp dexes, for example, similar level of, I guess, dynamic between player and house, where they've got these kind of LP vaults that you can deposit in to effectively take the other side of the trade from everyone who's on the platform.
Exactly.
Yeah. Then you got to worry about people trying to manipulate the platform or stuff.
Of course, yeah. There's all kinds of toxic flow that we've got dozens and dozens of fail safes against, and we're only going to get it'll keep getting better, and we'll figure out how to get the people that are counting cards out of the casino.
Yeah, exactly. Gentlemen, congrats on the launch. Thanks for spending some time. I know it's just a couple minutes, but just wanted to catch up on the launch. I know it's been some time. Great event here, and hope you guys have a great week in Miami.
You too. Appreciate you for
Cheers,
having
boys.
us. Thank you so
Congrats
much.
on the launch, guys.
Thank you.
Appreciate it.
Alrighty, guys, we're going to pass you back to the panels, and we will be right back with our next guest here at Tokenized Capital Summit.
Has lasting value come down to a few of the following items. Number 1, understanding what's worked and what hasn't worked based on what's come before you. Choosing the right asset to attach to it, the right use case. Finding something that's actually useful and going to retain the value. Third, the community, the brand, getting people on board for it so that you can bring in liquidity. And finally, protecting the growth that you generated through the community, that you sustained through the usefulness by protecting yourself from taxes and properly structuring your endeavors the right way. And this panel that we have here today represents all of those different angles of it.
So, Julian.
We're missing someone tonight, but they're on their way. Is a Cersei Speciani up here? But he'll be here shortly.
So, to get things started off, in one sentence, what does a successful token launch look like in 2026? And how do you see this evolving, and what role are you playing in this evolution?
So a successful project to me is a strong community, having access to resources to continue, and incentives to continue the influx of cash flow and liquidity into the project. And what role I'm playing is I'm bringing strategic partnerships, curating spaces and events to continue growing the community.
Antonio?
I think to be able to launch a token, first and foremost, you need an asset, right? So you need an asset. We base the projects we do on real-world assets. A real-world asset is something which obviously has some sort of value in the real world. It's not just some digital asset. There is something which is a collateral or security in the real world. And then ultimately, after launching the token, you have to be able to either maintain the value of the token or increase the value of the token. So for me, it's a lot about community, it's about experiences, it's about kind of connecting the dots between the various touch points. So these are, I think, the two aspects I would say for a successful launch in 2026.
What I think as far as a successful launch is teaching people how to structure things correctly from the beginning. Because people think about launching things, but you have to have the proper structure in order for things to come out correctly when you want to exit, because there has to be an entrance strategy and an exit strategy. So structure is very important in launching. You have to think about both, the entrance and the exit.
So this one is for Antonio. Because you said the intersection of agentic AI and tokenization, could you walk us through where AI stops being a tool and starts becoming infrastructure for token launches?
I think we heard it throughout the day, right? So especially agents, for me, when we think about the smart contracts, right? So far, smart contracts are able to execute automatically certain rules at certain trigger points. What I find very interesting is when now the machines start talking to each other, actually. So when, let's say, a certain situation is being triggered, something is being executed, the contract comes to fruition. Now, what does that mean? In the real world or the traditional world, a lot of people sit on a lot of timeline and dates for contracts they were not even aware of. That problem is being solved with smart contracts. But then you actually have to have the ability on two sides to pick this up and do something with it. So I see this new multi-agent world, and it's happening today already, in a way that these agents are able to communicate with each other, are able to trigger outside workflow situations based on the fact that a smart contract or something has been triggered. So this ability to automatically trigger workflows in addition to execute the workflows is something which is happening today. And if people don't have that strategy embedded in their companies, in their funds, in their tokenization projects, then I see them falling behind significantly.
And Julian, you're tokenizing real estate and infrastructure across the US and Latin America. Cross-border RWAs is where most projects collapse on compliance. What does the framework look like that actually attracts institutional capital look like in practice, and where do most operators get structuring wrong?
So first and foremost, you want to have a proper structure. Private wealth chateau, which Margarita is representing, is one of those types of structures where they can architect your company, your personal estate to make sure you're protected and you don't get ridiculously taxed, right? And then secondly, the framework of El Salvador is one of the best in the world, and it's the easiest to get to structure your project. And what you would do is you would go out there, you set yourself up, and then you could be able to launch your project out of that country, just like people do in Dubai and other countries, except the regulatory framework in El Salvador is clear-cut, and you can scale and do things you couldn't do in other countries. What was the second part of the question?
Where do most operators get structuring wrong?
So most operators just decide to go to like Malta or Dubai, and there's no consumer protection. So if I was going to invest in your project, I wouldn't feel safe because you could run off and there's no one reprimanding you for stealing people's money. Where in a place like where United States or El Salvador, where you get jail time and it's serious, people feel safer because they know their money is going to be protected.
Excellent. Margarita, real estate has been about to be tokenized for the better part of a decade. As a broker replacing real assets with global clients and family offices, what's actually shifted in 2026? And what still has to change before tokenized real estate gets treated as a real allocation rather than a curiosity?
Well, my first tokenization on real estate was done in 2020, when people really weren't talking about it. I was affiliated with a different company, and we took an asset in Brickell, the SLS Brickell, all the commercial spaces, and we tokenized it. It was a $20 million transaction. It was unheard of at that time. People weren't really talking about it, but we were able to take that asset, tokenize it, and now the asset is worth 3 times that amount. So people weren't looking at it back then. Now it's something that's more common in conversations in places like these. So I would say that tokenizing is the way to go, because you can take an asset, get multiple investors involved, and then you can grow your asset. And then that's where Chateau Private Wealth Advisors come in, where we can help you when the asset appreciates to be able to have an exit strategy for that capital gains and not have such a large tax implication.
Thank you.
You're welcome.
So, and we're going to do a round robin with this. What separates a token with lasting liquidity from one that pumps and disappears?
Utility. So lasting liquidity requires incentives for the holders to continue to hold, right, and participate in the project.
Alrighty, guys, we are back at the Tokenized Capital Summit, hosting tons of founders, CEOs, institutional allocators today. This place has been full of really, really high quality people all day long. Yeah. It's really been a pleasure. Shout out to Gamma Prime and their entire operation. We've got the co-founder and CEO of Kia, not the car company, Mark. Welcome to the show.
Thank you.
Thank you for joining.
It's a pleasure.
Yeah.
Absolutely.
Absolutely.
Amazing,
well,
yeah.
You're our final guest for the day. Last, certainly not least, we've talked to the likes of State Street, Robinhood, all of the heavy hitters out here. Mm-hmm. Very, very excited to learn about Kia. Please tell us a little bit more.
Sure. First of all, amazing event. It was great to see such big names here and
Incredible.
exchange ideas. Learn so much about the industry, like from the decision makers, which is amazing. We are building a global stablecoin and banking infrastructure for the corporate clients.
Yes.
With the mission to bank the underbanked clients globally.
Okay. And so when you talk about the underbanked clients globally, are we primarily focusing on Latin America, other regions? What's kind of the prime target customer base there?
These days, due to regulatory fragmentation, compliance friction, and so on, any client, especially corporate clients, can become underbanked. Like we've seen the phenomena of unbanked clients, the clients, users that don't have full access to financial system, to banking system, without like full inclusion. Now we see a huge emergence of those who have access to banking system, but for some reason, due to de-risking, due to inefficient procedures and processes, like a lot of, especially corporate clients these days, become unbanked, debanked, de-risked, and they struggle to get a bank account. So I think like most of the founders, most of the digital businesses experience to some extent that issue. And the problems are clear. Regulatory tech and general like approach towards dealing with corporate clients is old. Whereas like the products, the demands completely changed. Like what
so
has to be offered.
If I have if I'm a corporation, I'm in a country with capital controls or some regulatory scrutiny towards digital assets, I get debanked. How do I go about leveraging stable coins, reaching out to Kia? How do you help improve my business?
Right. So first of all, at this stage, we work only with corporate clients. So if you have a structure which is, I don't know, international business company or some entity which is dealing locally, historically, yeah, we've seen stablecoins was used originally as a movement of liquidity between huge exchanges.
Mm-hmm.
So we're far ahead of this. What we've seen, the first significant surge of stablecoins being used in original crypto OG use cases and payment method, right? So we see the things that crypto checkout solutions, crypto payment processing, which we're actually also doing ourselves, emerging, and actual settlements with Visa and MasterCard with payment schemes in stablecoins are growing like crazy this year.
Yeah.
That's one. And second, second, which is very important, is thing called stablecoin sandwich, which is basically leveraging stablecoins to basically bypass the inefficient SWIFT network to use local rails on both sides of transaction. So, which is amazing that it grows.
Yeah, man. I actually had the head of stablecoin strategy on from Visa, and he spoke to me about their stablecoin settlement business, and he said that they're already doing billions of dollars of ARR in stablecoin settlement, and it's pretty much just on-ramping and off-ramping.
For them, billions is nothing, right? We wait till it reaches, I think it's already reached trillions, right? And we're talking about settlements between card issuers or acquirers, between the Visa and MasterCard directly in stablecoins without off-ramping. That's growing.
Okay, and that is the process that they're trying to solve. They're trying to be able to bring your money into their portal and then be able to get it to other jurisdictions or other currencies without going off-chain. And so you're saying you want to plug into that kind of sandwich?
Pretty much. So the beauty of this stablecoin sandwich, it's a stupid name, but for some reason it's something that industry uses.
It's great, I love it.
It is what it is, right? But the beauty of it, the payments stay local, right?
Yeah.
The local rails are still much more quick, it's less friction, it's much more comfortable for the local payment players to process a local payment, right? So if you're based in, I don't know, in US and you have a supplier in India, instead of making an international SWIFT transaction with FX on the way, you can just do local on-ramping in US, smooth, comfortable for the banking partners most of the time.
Yeah.
Then you have stable, you pay in stable coin, you have very nice, clear on-chain proof of the transaction. You don't need this dances with a PDF proof of payment to persuade the counterparty you actually made it. No one believes you. And then the local, the supplier locally off-ramps that. Again, smooth local transaction without 3-day SWIFT payment, which you need to wait and pray that it actually lands on time.
Yeah. Are there jurisdictions where you specialize certain local regions?
Right. So historically, we were mostly focused on European markets. On Euro payments and SEPA transactions. We've grown to Middle East. Since we added AED accounts. Recently we added USD named accounts, so we're expanding to North America.
Beautiful.
But again, it's anyone that uses USD is our target client.
Yeah, amazing.
And is it just US stablecoins, US dollar, or are you guys expanding into non-dollar stablecoins?
It's a great point. So as we know, as of today, 99.9% of stablecoins are denominated in USD, which is both a benefit for emerging markets that want to get access to hard currency. However, what we expect is the competition between stablecoin issuers will be increasing. The stablecoin issuers need to provide something more than historical monopoly, we know who. So we expect things like payment infrastructure integration. We expect things hopefully, if regulatory framework will allow yield rewards, maybe some different incentives, cashbacks. Maybe we're talking about if we're talking about USD, and if we're talking about other markets. Of course, the competition arises. Local players in Europe are trying to get MiCA-compliant stablecoins. I'm based in Dubai, in UAE, so it's still the moment when it's determined whether stablecoins are crypto, payment tokens, and so on, but still it's coming in place. Local denominated stablecoins are fulfilling this stablecoin sandwich in a much, much better and more efficient way. So we definitely expect it will grow. Today, 99.9% are USD denominated,
well,
right?
It's very,
Well, Mark,
very early days.
Keep fighting the good fight for on-chain finance and for stable coins. It's been a great event. Thank you for
Pleasure,
joining
guys.
us, Mark.
Thank you so
pleasure.
much. Thank you so
Go
much.
get yourself some clients out there, Mark.
Of course.
Thanks for being with
appreciate
us
you
today,
coming
man.
on.
Thank you, guys.
Thank you,
Have
man.
a great rest of your conference and a great rest of your event, all right?
Thank you so much.
All right,
Thank
we'll see
you.
you next
That was
time.
cool.
Thank you, man.
Gentlemen and ladies
All right.
of
Yes.
the crypto digital assets ecosystem, that is the wrap of the Tokenized Capital Summit
Capital
in 2026.
Summit by Gamma Prime. Shout out to having us out, guys. These guys were great hosts. One of the best curated events that I've seen in a long time in terms of the speaker list, the attendees. Everything was top notch, and they did a fantastic job from the registration all the way up to the speaker guests themselves. Couldn't have asked for a better time, and really appreciate them having us out.
Guys, you are watching the Rollup, typically live from the financial capital of the world. We will see you tomorrow live from the On-Chain Summit. Again, early, around 11 a.m. We'll be doing a full day push there as well. If you're watching on YouTube, hit that subscribe, hit that like. If you're on X, much love. Appreciate y'all rocking with us, man.
We love you guys. Thank you so much for watching. And
From Miami.
We'll see you tomorrow.
From 305, baby. Peace.